Appreciate all the help.
I mean, I'm normally free around this time, so it's no problem on my end.
Nice. And guys, I've been putting Miko's channel in the chat over here, so make sure to go sub to him. The link is there. All you gotta do is click it. So it takes maybe 30 seconds, maybe not even that long. So easy to do. Miko makes a lot of free content. It's just super great, and we love having him on. So Miko, we'll see you next week.
Appreciate it. See ya.
All right, guys, and we're gonna run a quick break, and then we have Chris Pulver on next. So we'll see you then.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but like, why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
All right, everybody. Hey, how we doing? Happy Thursday. Welcome to the We're Pretending That Inflation Doesn't Matter session. Because we had CPI yesterday and PPI today, and they all came in a little bit hotter. Looks like my freaking stop loss isn't working. Idiots. Try to get filled. What's up with the stop loss, dude? So SPX, $3 stop loss. Well, I need to get out of this trade. Son of a gun. Let me see here. Won't get worse. Cancel. Dadgummit. All right, so I need to get this trade closed out. We're trading at 340. All right. I just got knocked out at 340. So I took a small loss this morning, but here's what I was going to share. I do have a trade in on SPY. It is currently up in some profit. I wanted to share this, everybody. There's still a chance we can go after. I'm looking for a 594 strike. This is starting to swell a little bit. I have a nice big fat liquidity level at 594. We haven't really had any major direction on the day. I just got filled for $1.70, and that trade was easy. So I guess that's going to be a talking point as opposed to me getting the trade in like I wanted. Anyway, this is the deal. So SPY trade. My 595 just closed out, and my 594 is still running. And I'm trying to get $1. I'm in for like 98 cents net. Is trading for like $1.12. So I'm going to look to see. That was a big reversal off that. I'm still going after 594. All right, so let me have a look at this. If anybody's interested, it's an expiration for tomorrow. It'd be a 594 long put. You can get in for $1.17 or $1.20. I got in yesterday. I had some internet issues yesterday. I know the team ended the stream early. I was actually working out of a hotel a couple miles away. My internet was being serviced by Xfinity or something like that. So there was an outage in my area. So I was in a hotel lobby trying to make it not awkward when I'm just like talking through some live sessions and webinars. But anyway, long story short, I'm looking for a price on the SPY that hits this. This liquidity level is growing to 594. So I'm still in this trade going after 594, and I'm looking to see if we will hit it. If we hit that and then some, that would be great. If we actually break these recent lows, let me go to a slightly bigger time frame here. Overall, we've had, that's actually a little bit harder to see. Let me go back to the TradingView chart. So let's keep an eye on this one. I do have a chart alarm set. So if we end up taking out the lows for the week, let me go to the SPY here. So the lows for the week are sitting around 594.41. If we come down and we test the low of the week, I mean, obviously price can do whatever it's going to do, but I think I took a screenshot this morning of our data. So we had PPI that came in 0.3, came in 0.3. Year-over-year PPI 3% came in 3.1, revised up from 2.8 to 2.9, and then the year-over-year the 2.3 came in 2.4. So producer price index hotter than expected. We also have, if you look at yesterday's news on CPI, also came in hotter than expected. So here's all your CPI. 0.3 came in 0.3. Year-over-year CPI 3.3 came in 3.3. The month-over-month 0.2 came in 0.2. 2.6 is slightly higher than the previous at 2.4. So again, the market might read this as, oh, goody, we didn't have a higher inflation reading, but I did see 2.4 forecast that came in 2.6. So what does that mean? Well, go to the Edge Finder, and you can see that our bottom at 2.4 is possibly in. So inflation data, year-over-year CPI. And I know that one data point doesn't make a trend, but this means that we basically have made zero progress. Let me just draw a straight line here. So if we go straight over from when we had this much needed drop in inflation, we had a print of around 3%, okay? And that's when everyone started to get all excited, like, oh, we're back down to 3%, target's 2%, says the Fed. And then we had sticky, 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 sticky for almost 12 months. And it wasn't until literally July 2023 into July 2024 that we had 1, 2, 3, 4, 5 points lower. So that's when the real trend began. But what just happened here? We just bumped up. So my concern is that we go into next month, and we're talking about this in December, and we're going to see another print higher. And the Fed is possibly going to be seeing a rate decision that either one, they are going to be 50-50 until we get the decision on the 18th of December, or two, they still decide like this hasn't been revised too much. This has had a pretty decent swing the last couple of days. This was down as low yesterday morning. Okay, yesterday morning this was down to about 55%. Okay, now it's up to 79. It was actually up to 82, like 82 or 83 yesterday. So there's been a pretty big jump, and the market's still anticipating a higher probability that the Fed will cut rates another 25 points in December. Okay, so will it happen? Will it not happen? Will this end up settling back into like the 50s and we get like a 50-50 shot going into December 18th? I don't know, but we're going to have more data, right? By the time we have the December 18th Fed decision, we're going to have non-farm payroll. Actually, that's going to be the first part. So in this order, this is what we're going to have news-wise. So before December 18th Fed decision, okay, we will have PCE at the end of November. We will have non-farm payroll beginning of December. We will have another round of CPI data. We'll say mid-December. We'll have PPI data, which usually comes right after that, so mid-December. And then we'll have our official FOMC. Okay, so these data points will likely matter, and I wonder if the market even cares at all. Because if there's going to be a major catalyst to potentially send this market higher, earnings season is kind of wrapping up. On top of that, we have, if earnings aren't really wrap up, we do have seasonality once we get into the next couple of weeks. 2 weeks from now is Thanksgiving. Typically when we see markets trading Thanksgiving onwards, there's usually not a lot of volume. So we could have a very boring, where maybe the lack of selling, the lack of volume is going to just do a lot of this, right? We had that election jump and we get a lot of this, a lot of this. If that's the case, well, obviously if we can structurally see that there's support and resistance, well, there's the potential, year-end melt up and it continues to go higher, or there's the potential break of the floors and gap fills through the election if we give some of it back, So I wouldn't be I wouldn't be surprised if the market is going to be somewhat difficult to read and get some real direction. I think we certainly had, when the VIX dropped from 20 down to 15, that was also a volatility crush, right? Look at us right now at 1408. We went from, elevated pre-election into the 20s, just immediately back down to 1408. And obviously we saw this all year. The low teens is a very low volatility environment. Okay. So do I want to get long volatility in here? I mean, not necessarily. I guess what I could look at, though, I'm curious here. If I trade something options wise, I don't know. I'd almost have to wait for like the perfect little price down here and see if something good happens. I don't know. Let me see something. Let me check out VIX. Let me go VXX. Let's say by the end of the year, we get some type of VIX event. We're trading right now. VIX is at 43.52 on the VXX. So 43.53, is that a spot I want to be buying? Well, we got lows around the 40s, 40 to 41 handle. We got a gap that could potentially be filling. Let's see. If I did a bull call spread, I'm going to see if it's going to be really cheap. I mean, it's 30 cents to make $1. It's not a bad play. The issue, of course, is that if this goes lower, I mean, the last time, the one thing about the VXX instrument is this can go lower and lower and lower and lower. Okay, now if I trade this on the VIX, similar, let me look at the VIX. I can trade the VIX here on my Tasty account. So VIX. And if I went out to January, these are all AM expirations, which I don't love. But if I were to, let's say, buy the 14 and sell the 15, I pay 46 cents. So I'm risking 46 to make 54. 27 cents. I'm actually risking more. I'd have to go slightly out of the money. 14.50 by 16. Even that's not great. Now that one's better. A 14.50 by 15, I pay 19 to make 31. If I did that for, let's say, if I was willing to take like a $250 risk, I could risk 260 to make 390. I don't know. I'd almost rather see it settle in lower into the 13s or 12s before I get long volatility. So I'm just not ready to say, I want to be long volatility right now, especially going into the end of the year. So, all right. Anyway, real quick, let's do a little top down. I'll grab some comments here. Let me move my StreamYard up to the top screen. Yep, I see that. Dollar Swiss. We'll take a look at a little bit of everything. So let's go top down here. I'm sitting right in between a couple of key levels. Yeah. Right in between a couple of key levels. The weekly candle is tiny compared to the last couple of weeks. So the average move from last week's election that really kind of made it a big bias to the upside. So we have like a 15.7 expected point move on the SPY for the weekly ATR. And this week we've moved about $5.70. We didn't break the low, so we're sitting at about $5.70 out of what's averaging about 15 and change. So a couple things. Either we stay with some inside candle trading or some very tight range bound trading the next maybe week or two, or like I said, this could be a big bullish decision. We could have an indecision, and then we could have a decision. But that type of evening star pattern may also take weeks and weeks and weeks to kind of materialize. One other interesting point: if I go to the 2016 Trump trade versus the 2024 Trump trade, it looks something like this. It's almost the exact same. S&P is off to the races just like it was in 2016. Equities versus the rest of the world off to the races. Small cap versus large cap. Small cap is outperforming. The bond 10-year yield is going higher just like it did in 2016. The real 10-year yield going higher. Break even 10-year is going higher. This is almost a mirror image of what we saw back in 2016. The 2 and the 10-year, right now it's down. And in 2016, it was going higher, meaning the 2-year was gaining. That would have been a move higher. Actually, I take that back. That would have been a move lower. We were actually heading down towards the inverted area. In 2016, we were not inverted. We were above that zero line. So the 2 and the 10 years probably not going to correlate as much as it did in the past. The dollar index, it rose in 2016. It's rising right now. Dollar yen, the dollar's been much stronger than the yen. That's happening again. Gold is down. And actually, this is crazy. 2016, gold was down up to 10% from the Trump trade in 2016. So if that's any consolation, that gives me the patience to just wait. I think gold is a good play longer term, but I'm going to wait and see if gold will still continue to pull back as the dollar continues its bid. Chinese equities are pushing lower, and Bitcoin has ripped, and it was a steady gain through 2016 under the Trump election. And again, this is just 2016 election day till the end of the year. So we're talking like literally November, December. All these moves are virtually the same with the exception of maybe that 2 in the 10-year. Kind of wild stuff, right? So if the market needed a playbook, it's just like, yeah, let's just go back to 2016 and see what happened when Trump was elected president. And so is it similar? Sure. Does the market care about inflation right now? Apparently not. But it will at some point, and it will if the Fed decides not to cut rates. The market will care if the Fed doesn't cut rates in December, I'm pretty sure. Now, to what degree? Probably a pullback, right? So we're sitting here. Could we still go higher? Of course. We go to the daily time frame here. I'd love to see some pullbacks. I may not get them. If we melt up higher, fine. If we melt up higher, that's fine. Okay. But if we pull back and fill some election gaps, obviously I'm looking to scoop up some discounts, get positioned for, maybe a range trade. I mean, my gosh, we've had such a crazy bull market at the end of 2023 into pretty much all of 2024. A sideways period of maybe 10%, like we had here. That little 10% move, I could see us finding like another kind of 10% range, but who knows? I will continue just to watch price accordingly and just try to grind. All right. Equal weighted S&P, still not at all-time highs. Futures market, I'm hedged on MES. I put that in the Pulver alerts. I have a 6025 long put. Right now it's up about 20 some points. I paid $79 on the debit. So obviously I need to see if price gets a little bit more aggressive and tries to backfill some of this election excitement. It's also a hedge that's going to cost me a max of $350 or something like that with no cap. So if it gets down to this yellow box, I'll probably make $2,000 to $3,000 for a risk of about $320. So it does pay really well. It's just, do I get the direction right? NDX also not making all-time highs yet. The Qs not at all-time highs yet. This could be an interesting trade on the QQQ. Again, I'd love to see a pullback. Here's the daily time frame: 21, 100, 144, 200. I'm not saying that we have to come back to all these levels, but with this type of gap and this type of gap, I could see if it's a slow and steady, this is what's going to be interesting. If it's a slow and steady and kind of orderly, let's say an orderly gap fill, then I would be looking to use those areas as a potential bouncing point to then go higher. Okay. Now I get a little bit more, I wouldn't say bearish necessarily, but I get a little bit more top heavy if we came, let's say, orderly fashion to the downside, started to fill some gaps and then accelerated back down to these lows. Because what that would look like is if we take out this structure and we have this high and this high is just like a bit of a false breakout, call that a turtle head, if you will. Do we end up pulling back here, making a lower high and then a fall back into these August levels? And at the end of the day, we have what we initially talked about, which was when this high to low was put in, okay, I was thinking that might be a tough move for the market to break. And what did we do? We started to grind and grind and grind and grind and grind and grind, and the election blows the top off. But if that's our fake out trade to put in a top, it's going to be interesting to see if this actually falls, patterns out, stop loss above, and then we're starting to swing back down. Just saying. Now, the time of this, does this mean it's going to be by the end of the year? Not necessarily, but I could see this being a Q1 to Q2 trade next year. If we are really, really struggling to go higher, I could see Q1, Q2 having a bit of a reality check in the market. The market is going to be bracing for some pretty major policy change. Is it official right now? Did the Republicans take the House? Did they take the House? They did. So it's officially a Republican sweep, 218. The Senate was taken like election night, 53 to 47, and President, Electoral College, and popular vote, not even close. So that's going to matter. Now, for the markets, tax breaks and extensions are good, but if you're going to gut, and by the way, I mean, I saw this Twitter, it was on Twitter. I mean, obviously Elon Musk and Trump are bros now. But when the message is like war on this and tyranny on this, it's like, dude, just, I don't know. Like if you want to rough up the Department of Education, you want to, cut government spending, that's great. But don't think for a second that there's going to be cutting to balance the budget. There's going to be cutting somewhere to then make up for spending elsewhere. And if we have a trade war, believe me, we're going to have some problems. But the market doesn't care right now. And so what's good for the market is tax cut extensions, good for the bottom line of corporate America. It's interesting with the dollar move. We've seen a very strong dollar post-election. And look, I mean, I'm not sure what day we talked about this, but it had to have been. I had a lot of questions on what's the dollar going to do. I said, look, the dollar through the election, just wait. And what did we have? Well, we had the election. It was Wednesday, the day after the election, noise on Thursday, noise on Friday. All I looked at was this as a breakout candle. So there's my election candle. There's my high. There's my low. We made a break and a pause and a break and a pause and a push and it went nearly all the way up perfectly to my 100% measure move. And all I said this entire week is if we break out, you can go long the dollar. We go to the 50% part. You move your stop loss to break even, trail this thing, and it went all the way up to nearly to the pip of a measured move on the dollar. Just a candle breakout, just a measured move. So would I be out of the dollar now? Yeah, I'd be out of the dollar. Because if you trailed out of this thing, that's a pretty decent rejection on the day. So I think I can get rid of this. I'll save it till tomorrow, but I mean, mission accomplished on any type of dollar breakout that we talked about through the election candle. So what am I trading on the dollar? Nothing. This thing has been the only trade that I saw was a bear trap. This was a nice equal high. There was a good opportunity to be short the dollar. It wasn't exactly that easy because not every dollar pair was moving that smoothly. Euro dollar was moving smoothly. Pound dollar was okay. Aussie dollar, New Zealand dollar were crazy. I do want to take a look at dollar CAD because I may have been filled on that 4025 entry. But this was a really nice bear trap that we called out. And as soon as we had that rip, I mean, the dollar to this move was not a surprise. I'm just surprised that we went all the way up through the election. So basically, this thing did exactly what we did there, which is just bear trap, and it ripped higher. So what am I going to look for? I'm going to look for the same type of chop and try to put in some type of topping pattern. If we get a topping pattern, I'm not going to trade it. Okay, I'm going to look to see either one, I can sell highs and keep my stop loss really tight, or twos, we end up breaking this low and then look at a breakout trade and then see if this wants to go back down into the halfway point of this multi-year range or possibly go all the way back down to these lows. All right. But I would not be forcing trades on dollar crosses right now. All right. So oil, I'll get some other currency pairs in a minute. Oil is still holding that floor. That's okay. I'm long on CL futures for a little bit of a bull call spread. NG, the trade is just getting away from me. I was trying to get natural gas to get down to the $2 level. It may or may not, so I'm waiting. Here we go. Gold is sitting at 25.68. That's a nice little pullback. What's our percentage here? Gold's pulled back around almost 9%. So could I get into a trade on GLD? I got in a 245 by 240. Let me take a look at this right now. I'm going to add another trade, I think, on GLD. GLD. Now, this one is not going to be a short-term trade. I'm going out quite a ways here. So I did the 245 by 240. Now it's trading at 237. So I'm going to do a 235 by 230. I can get $2 credit on that trade. That's fine. I wish I'd get a little bit more premium for it. I'm just going to take the trade. This is out to January of 2026. Let me see if I can get over $2 on the trade. So I'm risking 297 to make 200. Probability of profit right now starts at 63%. And longer term, if we think that gold is going to be a decent little play for 2025, this is out through the entire year. I'm giving this entire trade, a year to be worthwhile. Now, what I'm going to do is probably take this trade for 235. Let me go one more expiration out. Let's go June of 2026. 235 by 230. I can get $1.50 on that. That's garbage. 240 by 230, 285. That one's better. I can risk 215 to get 285. I'm going to take this trade. I'm going to go 2 contracts here. Hopefully this will fill. The bid ask is quite wide, but if I can get the mid price at 285, I'd be fairly happy with that. That is a 430 risk for a 570 reward. Let's get it. So we're trading at 236. We could obviously dip a little bit lower, but I'm going out to June of 2026. See if I can get 285 on this trade. So 288 not filling, 285. This one, again, the bid ask is a little wider. As long as I get over 250, I'm okay with it, but I'll go after 280 now. Now the mid price showing 240, 275. All right, this may not fill me at the price that I want. I'm still in the money by about $2 and change, so I should get a slight better premium. Now it's at 290. I guess the reality is if I get 250 on it, I'm okay with that. I don't want less than 250, that's for sure. So 260. Gosh darn it. All right, 255. Final offer is 250. If it doesn't fill, then I'll go back to the January. Not filling at 250. All right, so never mind that. Would I need a Dr. Seuss saying. I'm just thinking if I put in a put and I collect $9 of credit on this trade, I mean, would I own shares of GLD? Yeah, I mean, the stock price is 230 bucks. Would I allocate 20 grand of my portfolio to it? Sure. That's, I mean, 20 grand is 1% of my portfolio. Actually, less than that. So if I put in a 235 put, I mean, the only issue is it's not risk defined. Do I run the risk of assignment? Maybe. But there's a decent amount of premium there. If I just get the 235, that's, 940 bucks. It's only taking up about $473 in buying power on a margin account, but it's going to take up a lot more on my IRA accounts. If I go IRA, let me change this right here, 22.5. So it's like spot on cash. Do I like the trade that much to tie up that much capital? Probably not. Probably not. Crap. That's why I'd rather do a credit spread. Now it's down to $2. All right, well, clearly that one's not going to work. So June 18th, if I go to 205, I mean, that one's okay. Let me see if I get filled on this one. Let me see. Actually, you know what? What I should do is just buy some more gold. I'll just do that. Instead of trying to play around with these credit spreads, I'm just going to buy some more gold. Let me see what I have here. So I bought it originally at, what did I spend? So 25 shares. So 5 grand. I think I'm just going to throw another $1,000 at it. So I'm just going to dollar cost average rather than doing a credit spread. So I'm going to buy a little chunk of shares right here. Let me do another. If I do another $1,000, I think I'll do 1,500. 1,500 divided by 237. 1,500 by 237. So I can buy another 6 to 7 shares. I'll buy another. I'll start with 6. All right, so I'm going 6 shares on GLD. I'm going to go to my long stock 237.06. Buy another 6 shares. Plenty of firepower here. I need to get rid of, there's some Baidu trades I need to get rid of. I'll do that today. Okay, so let me get this filled. I'm going to go 237.05 237.05 for 6 shares. So that's going to be $1,400. Let me see if I can get one more share. So 7 shares puts me at $1,600. I'm okay with that. 237.05, 06, 07. All right, just got filled at 237.07 for a $1,500 allocation. So similar order, ready to go on some other accounts now. Filled. Okay, filled at 237.10. Now it's up to 20. I mean, come on, man. Don't make me chase this thing. It's okay. 19. Filled. Jeez. All right, just trying to get it filled. Few cents different. Oh my gosh. Filled, and last one. Come on. There we go. And last one. Cool. All right. So let me add that in. I'm going to add this into the trade alert section. This will be under, I mean, this is a commodity trade, but it's GLD, so it's an ETF. I'm just going to put it under stocks. Actually, you know what? I'll put this under commodities. So I'm going to do a commodity trade here. Add in for my section under commodity trades. I put in the SLV and the GLD before that with the credit spread, so I'm doing GLD. I'm going to go to dollar cost average. So it's a $15 allocation at 237.25. Scooping up some more gold after a 8 to 9% correction. I'll continue to look for long-term spreads as well. Okay, so adding here. So buy $1,500, buy at 237.25. Okay, so I've got the line in the sand out to January 2026. That's a 245 by 240. That's a credit spread. And I'm going to go here as well. And I can get rid of, I'm just going to highlight, or in the trade itself, I'll hide this one. That's a separate trade. There. So just taking a buy trade, keep the screenshot really simple. Okay, so that's GLD. Okay, so GLD is added into my commodity section. Everyone's been tagged on that for the Pulver alerts. Gary, excellent job, sir. Nicely done. Yeah, that's really good. I mean, we're right back into center. I'm watching my, 594. That's still a trade out to tomorrow. 600, possibly a price point today. I just got some liquidity levels above and below price. We might just see a lot of chop. So anyway, that's what we're looking at. Just a lot of indecision for this week, and it's still right in the middle of all this noise. But we'll see what we get. I had one SPY trade close out for profit. I think I took that dollar. What I did it yesterday. I posted it in Telegram. This one was a 78-cent debit, and I closed it out for $1.70. So that's not a bad gain. I'll mark that one up later. All right, so let me check now SLV. SLV, I'm going to wait a little bit. If I'm going to buy more SLV, it's probably going to be back here around 24 bucks. So I could either look at this kind of 25 zone, 24 zone. I'm good on SLV for right now. All right, Bitcoin is pulling back a little bit. We've got a lot of volatility coming on Bitcoin. We stretched up towards 93 and change. I'm sure the order flows in these ETFs has just been flooding. Take a look at IBIT. We're finally starting to pull back. I have some pending orders. I put these in the Pulver alerts. I'm doing a 48, 45, and a 43. And I'm going to stay on this until I'm targeting that 100K Bitcoin level, which is somewhere around, based on the percentage move of BTC, this IBIT stretch would be around $61.63. So if I can dollar cost average into it, I'm going to. I'm treating this space like there's our big resistance zone. I took the high and I just looked at, okay, I'll go 1, 2 in this gap, and then 3 at the same resistance point that was resistance, now hopefully becoming support. But Bitcoin is pulling back, and that's causing all those peripherals to pull back as well. You know, BITO is pulling back a little bit. Okay, FBTC pulling back a little bit. MicroStrategy pulling back a lot of bit. Coinbase also pulling back a lot of bit. That's a violent price action there. So high to low, Coinbase is down $56 from that high. Yowza. Ethereum is pulling back as well. EETH, I need to stay above $60 by the end of the year. Hopefully it stays there. Copper is just freaking getting ripped to the downside. This China stuff is no joke. I mean, I saw that there was an injection of cash last night, and stocks don't really seem to give a crap because HSI is down 2%. Alibaba, Baidu, everything down. You know, JD is down. Also, we had a miss in revenue on JD, so a lot of this China pop has been faded hard. And man, it's or I don't know. We'll find out. I mean, I guess we're going to see how determined the PBC is, or the CCP is. That's what they're called, right? CCP. We'll just say how determined China is. So I've got some income plays I'm watching. What else do I have? Pfizer rolled my levels down to 27. OXY behaving a little bit. I rolled it down to, let me see what my calls are on OXY. And then I'll get into some currency here in a little bit. By the way, I know I'm coming back in around 1:30 today. Am I good until 11? Am I off at 11? Do we have more guests coming on? I'm just curious. Let me know if I'm off at 11. 11:15. Okay, no worries. OXY. I have a $52 covered call. We're trading at 51.19. That one's out to the end of the month. Okay. So OXY and Pfizer, watching those closely. And also I need to get rid of some shares on Baidu. So I'm going to get rid of this last in first out. I've got a 105 put. I just need to close this out with 100 shares and close it out at 105. That would be to take the full loss. Let me see what this is worth actually. So price is 83.62. Let me see what this is closing for right now. So if I go 105 minus 83.63, 21.37. Let me see if I can get 21. See if I can get like 21.45. If they'll give me something a little bit generous here. Nope. 21.45, 21.40. Well, that's annoying. All right, let me cancel that order. So something I might have to do is take this and this, close them together. And instead of the 211 shares, I'm going to go close out 100 shares. And see if I can close this out. This should be closing out at 105. Nope. Hang on a second. There we go. So if I take the 100 shares last in first out, plus I close out the put, that would be a sell to close 100 shares last in first out, sell the 105, get rid of it at 105. That should be the way I exercise this to get out of it the way I want. I will go 1 penny lower. And the broker should do the work to get me out of that trade. Let me see if I have an assignment here on my end as well. Yep, so same thing here. So I'll take the shares, last in, first out, close this position, and take it down to a 100 share sell and get out of this for 104.99. All right, this is what I needed to do this yesterday. but I had to call the trade desk, tell them I want to rotate everything to a last in, first out. And now I'm going to close it out at the long put so I can just take the original risk on the trade. So good on that one. Good on that one. This one here for Baidu, same thing. So I'm going to take these two, close them out, highlight this down to 100 shares, close this out for 104.99. This one also got it. So I'm doing this for pretty much every account that had that exposure. So originally the trade was a 110 by 105. So anyway, just some housekeeping for me, and then I'll get into some more charts and analysis. Okay, so let me close. Take the 100 shares, close this at 104.99. $311, not the band, full. Closing out the final 100, 104.99. Okay. This one I already got rid of, so this one's fine. This one, I'm going to dump 100 shares. $104.99. I think that leaves me with just one more account to do the same thing. Yep, right here. Close. 100 shares. 104.99. All right, Tasty, the ball is in your court. Close me out where I'm supposed to get closed out. No problem there. This one does not have BITO exposure. Good. Okay, so that one's done. Let's take some requests. I saw Dollar Swiss pop in first thing. Dollar Swiss, I'm still long. My target on Dollar Swiss is 92. This is going to be a pretty exciting trade, by the way. Long Dollar Swiss. I have been long on this thing since the end of 2022 into early and a lot in 2023. So I still think the measured move to me is all the way up here towards 96 to 98. But because I have so many entries at lows, on trend lines, adding to positions, on trend lines, adding to positions, at lows, 9,200 to me is profitable, very profitable. And so when that's all said and done, if this adds up to be, it's probably going to be closer to like 15,000 pips when it's all said and done. So it does take some time, but this is one of the probably the more unique ways that I trade currencies is I will build very, very small positions on good technicals and good probabilities and end up making, a huge chunk of profit. So that is my big profit target. I'll see if the Dollar Swiss can get there. Enjoying some positive swap as I've been since early 2023. It continues to be the case. So there's just a really nice equal low. If we range back up to 92, that level is certainly achievable. If we find that to be our bottom, I wouldn't be surprised if this one ends up going up to this pocket and possibly up to this resistance. But that's the greedy trade. This is what I think is very achievable for a nice chunk of profit in the next maybe few months. So I'm continuing to hold that one, looking pretty good. Dollar CAD. Dollar CAD did activate. So I'm in at 40.25. 40.25 is filled. I'm in. My next level is 40.75. So this trade is now in. Now, as far as the stop loss is concerned, okay, if price comes back down below 3,800, I'm going to consider getting out of the trade. Now, that means that I'd be filled on, let's say it doesn't go any higher than what it is right now, then I would just get stopped out on one trade. So my other orders are higher and higher and higher because I want to see if price is going to go up. I measure this thing to 4,400, 4,450. Okay, so right now this 44.25 is filled. Okay, and the rest are pending. So if price is going to drop down below 3,800, I will exit that trade for a small loss. Now these are small trades. I'm stacking these up. I'm looking to build this up into a several $1,000 profit if it all adds up and it runs. And so we have breached a 2022 high. And I look, I mean, I get it. Like if this were to go up and then come crashing back down, then maybe we put in a top, we put in a swing trade, and I can completely reverse this and only take one small loss. But if I am right with, the dollar getting stronger, Canadian economy being weaker than the US economy, oil at the floor, continuing to pester those lows and support levels, if the floor on oil breaks, then this dollar CAD is likely going to be just a pure measured move up towards 4,500, which is why I have this order going. So trade them in for the Pulver alerts. And so far, so good. I just got filled on one order. Okay, let's go through. We've got time here. Let's go all the way through my currency pairs. Okay, I did a lot of the stocks. I did crypto. I did Bitcoin, Ethereum. I did gold, silver. Added in a level on gold that I'm going to buy. Looking to see what my levels are this week on the SPY. I'm trying to get the SPY down to 595, which it did hit profit. I'm trying to get to 594 to see if there's going to be some more profit had there today. We'll find out. Okay, so Aussie CAD. I still like the Aussie CAD for a buy trade. Okay, I'm looking to see if we will end up in, and look, the Aussie in general is a big proxy for China. And if China's getting weaker, the Aussie's probably getting weaker alongside of it. It's going to make things a little bit more difficult. So let's go currency strength on the day. The dollar's been up to down. We're seeing the Japanese yen get weaker today. It's actually a very choppy Forex day. I mean, just a little bit of outlier news. Interesting move on the dollar up to like 5:36 a.m. Eastern time, and then it faded hard back to the baseline, even through the the 8:30 PPI news. The dollar's gotten a little bit softer. So CAD was stronger, now weaker. Dollar or the yen pairs, the yen is the yen, man. The yen, I honestly just nobody should ever ask me to talk about the yen anymore. I'm just kidding. All right. Anyway, this Aussie CAD. I like Aussie CAD if we turn up. I'm looking for some green, looking to buy, look for a trend line breakout here. We get over here. I know you're giving back some of that precision, but if we make another push, it's like we've gone up, we pulled back, we go up, we pull back, we go up, we pull back. I'm looking for the same type of rounded bottom, and then look to get long, challenge the highs, and then take out those highs for a gain. That's my Aussie CAD. Okay, Aussie Swiss. It's still really choppy. I've got a measured move up towards 60.50. I'm still long in Aussie Swiss for some rollover. Aussie yen, I'm just staying out of yen crosses. Aussie New Zealand, anything here? Chop City. Aussie dollar, getting closer to an attractive level. So again, if China keeps getting smacked in the mouth a little bit, I'm not going to jump into this yet. But at 64 and 63 and 62, I'm willing to take some dollar cost average levels in the Aussie dollar and see if it's just simply find support, and then comes back maybe into this halfway range. Or if we look at this as a low to high, right? Or we have this intermediate range in here. I'm just trying to buy some support. So I'll buy low and then take it back to the midpoint. That's it. It's just a big range that established itself back in 2022. And if we stay there, I mean, I'm just looking to buy low and trade it back to the halfway point or hold on to it all the way back up. But I think China has to get some love out there for the Aussie to show some strength, especially against the dollar. CAD Swiss, I'm still holding long. This one's looking better. Actually, this one's looking pretty decent. I've got a measure move up here towards 6,500. Swiss yen, or actually CAD yen, I would say just stay out of it. I don't like the yen pairs at all. Swiss yen, I'm actually holding a small position right around 172.50. That's it. If I get stopped out, I get stopped out. I hate the yen. Euro Aussie, intermediate support down around 60.50. There's no trade on it that I see right now. Euro CAD continues to look pretty good for a sell opportunity. I like this trade right here. If we pull back and then sell off, I look at a stop loss above this high, level 1, and possibly this pocket here for level 2, and then a stop loss above. So, I mean, we're breaking below. I'm looking to see if this is high, low, lower, high, lower, low. Come back and try to find this level for support. So I'm looking to about 46.50 to 4,600 for profit on the Euro CAD. Euro Swiss, I'm still holding long. This could be just a really fantastic double bottom. My profit target on Euro Swiss, I'm long on the currency all the way back up to these highs. That's my profit target. I'm trying to get it back towards 100, which is parity, but long term, I'm looking at 105. I'm not going to be greedy, though. If we get back to like 99, I'd say good enough, and I'll just take some profit, similar to that 9,200 level on the dollar Swiss. Euro Pound. Euro Pound, I'm still holding a long position. It's not really doing much. That's the slowest mover in the Forex market. Euro Yen, no trade. Euro New Zealand, still choppy between a couple highs and lows, no trade there. Euro Dollar, it came down to an attractive spot. Who bought the Euro Dollar? I got to ask. I didn't take the buy trade, but I talked about this 106 to 105 zone, looking at a buy trade. It's behaving. It's behaving. So if the dollar ranges, if the dollar ranges, this is a really strong support level that as long as price isn't going too much lower than 104, 104.50, I would say you want to give this chance to hold the lows, and see if we can come back. I mean, if it comes back to the halfway point, that would be pretty spot on to like a 108, 109 profit target. I wouldn't try to hold this thing back to 112. I get out of here at 108, 109 and take profit. But, you've got some good reward to risk. If we come back to the halfway point, that's about a 2 to 1 or even greater. Yep, I like that 108, 109 exit for sure. That looks pretty good. Pound Aussie, anything here? Not particularly. Not in love with that one. Pound CAD. Same thing on EuroCAD. I think EuroCAD's a little bit cleaner, to be honest. So I'm going to stick to the EuroCAD versus Pound CAD. Pound Swiss, I'm long. This one's looking okay. I'm trying to get this one back to 1.20. Pound Yen. Yep, there's your snapshot. I'm not doing anything with it. Pound New Zealand also between some levels. There's some good structure in this one. Watching the high to sell, watching the low to buy. If we have maybe a pullback like so and one more push higher, I'd love to see that thing hit and then top out with a swing trade and then try to get a swing trade back down to support. So resistance here around the 218, 219 area and support here around 210. So I'm looking for an opportunity on Pound New Zealand, just don't have it yet. Pound US dollar. This is basically where I'm looking to get long. I bought a little bit here at the 200 moving average, and my other position was down at this it's at 2,700 handle, and my stop loss is around 2,450. So I'm looking to see if this will be area 1, area 2 turning. If it turns up, great. We'll see what the dollar does. Okay, New Zealand CAD. New Zealand CAD, I'm still long. There's a pretty severe channel here. Mostly I'm just trading a robot on this one. I'm just buying and selling on a robot, and it continues to do really, really well. But for my direction, if we can get back above, just like we did here. So if we go from red back to green, taking a buy trade, swing below, and then see if we can get up to fresh highs. I like this range. I like this range overall. So we're just in this kind of bull channel in a bigger swing from support. I guess I'll put an S here for support and then resistance. I was going to put an L for low. Same thing, low or high, right? All right, that's New Zealand CAD. New Zealand Swiss, I'm still holding long in this one. Positive swap primarily, and just kind of being patient. My measure move is up towards like 5,500. New Zealand yen, nothing. New Zealand dollar. Okay, New Zealand dollar, I did get filled at what was the low here? Did I get filled? I think I put in an order at like 58.55. I got a low at 58.50. So I did get filled on my New Zealand dollar trade. Okay, and there's 3 levels. It's level 1, level 2, and level 3. So 1, 2, and 3 are filled. So 58.55. Okay, 58.55, and then I looked at a 57.25. And down here at the lows is around 55.90, so I did a 56.05. Right there. Okay. Dollar CAD we already did. I'm looking at that breakout above the 4,000 handle. I just got filled on one of them. The rest of them are higher. I'll be watching this potentially for an add-on trade. If we pull back into this area here, I may add another trade here with a stop loss below. And if it goes break, retest, and then works its way higher, then we start getting filled on this one, this one, this one, and we're going for that 44.50 to 4,500. Okay, dollar Swiss we did. I'm already long. I'm holding long. This one hopefully hits 92. And dollar yen, likely this one will just stay the course and do its thing. Gets a little bit more interesting, of course, at the highs. We'll see what the BOJ does. Intervention was a thing. I honestly have no interest in trading the Japanese yens because that is the silliest stuff to trade. I don't want to be stuck on the wrong side of some BOJ intervention. Nobody knows what they're going to do or when they're going to do it. So I'd say stay the heck out of it. Okay. If you feel like, look, just ask somebody to punch you in the face if you want to take some profit on the yen. It's about the same feeling. Because sometimes it's like you don't get rewarded at all for trading the yen. It is, if you're long on the yen, great, until they intervene and manipulate, and then there's 300, 400, 500 pip candles. It's just such a stupid currency pair. It's the least technical currency pair. In my opinion, it is mostly fundamentally driven. There's sentiment behind it. It's risk on, risk off. It's very different than how I trade the Forex market. I trade pure technicals and efficiencies, and I hate the way the yen behaves. So I keep saying it. I'll still say that forever. I don't like the yen. All right, I just did all of the Forex market. Anything else? We did gold, we did silver, we did Bitcoin. Pullbacks are fine. I'm still liking long on gold. I'm just kind of I'm buying today gold instead of using options. I went out to January 2026 on my options trade. So what we are seeing for the day, price is still pretty indecisive. We really haven't had any clear direction. So having a look at the red in the background means the weekly candle is still barely red. This is our huge election candle. And somehow I wouldn't be surprised if the market is just really choppy in here. If the floor breaks, I'd say look out below for some gap fills. But obviously, if the market just does this, it's sideways, and it stays there. During the holidays, we could have more of a melt up. It's probably not going to happen very fast. But if it continues to drift greater than 600, there's no stopping this market until price proves that it's able to go lower. Okay, Bitcoin. Bitcoin's a better trade than Ethereum, if you ask me. Bitcoin is the standard. So if you want to be, long the S&P of crypto, be long Bitcoin. That's essentially what I'm looking at. It is like the poster child for if crypto in general is a healthy market, Bitcoin's going to reflect that. Okay. All right. On that note, I've just got a couple more minutes left. That's it. GLD added in today. Got some trades on SLV. I'm watching my levels on the SPY today. For some reason, if there's a way to get up to 600, I've got a butterfly spread that may pay out, 6, 7, 8 to 1, but it's got to get all the way up to 600 today. That seems unlikely, but wishful thinking for a 11-cent debit. So it wasn't really a expensive trade. It's just a matter of what does price do. And then I got a 595 closed out. It was 78 cent. Let me do the return on capital there. So I closed out for $1.70. 78 cents. Oops. So what did I do? $1.70 minus 78. So 118% return on capital there on a little SPY put. I was long the SPY at 590 or long the SPY put at 595 yesterday. I did that towards the end of the day. I mean, I was watching price closely, sitting in a hotel lobby, and I took a trade. That's why I didn't get posted officially as an alert. It was just a weird day. I was literally out of commission. I didn't take the same normal morning trades like I do, and I didn't get internet back until almost 4 p.m. yesterday. So, anywho, all right. I think I'll be back at 1:30. We're going to keep the stream and keep the dream alive. So I'll be back at 1:30 for more. And thanks for being with us today. And there's more to come. So stay tuned for the next guest and enjoy the rest of the A1 session. I'll see you this afternoon. All right. Thanks, everybody.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So if you guys have any questions, make sure to put them in the chat. Any chart requests, any trading psychology, risk management strategy, definitely put it in the chat and I will, of course, cover it. Also, my question is, which one of you guys are looking at Bitcoin? So Bitcoin has been pretty interesting, has been shooting to the upside with a lot of strength and looks to be retracing right now. So what I like to do is I like to start actually on the daily chart. And we did break out of this massive resistance level, just smashed through it. And now we are retracing a little bit. The highest point was around 93,000, which is pretty close to 100K. So very interesting for Bitcoin. What do I think about this chart? Well, it still on the daily chart looks very bullish. The current daily candle is red, but it is not showing a lot of strength. It is not showing a lot of volume, let's say, a lot of selling pressure. So my analysis is that there is still some way for this price to go up. I would like to see price hit 100K. 100K. Yeah, that is definitely going to be my goal, for the price to hit 100K. Can we do it? Well, it all depends. One of the problems that I see currently with Bitcoin is that it is starting to appear in the mainstream news again, which is a big warning sign that the markets will most likely reverse. That is a sign of a market top, so that this may happen. If you take a look at your, let's say, mainstream media provider or just a newspaper, they usually have an online article. What you can do is filter all of the articles that cover Bitcoin, and you will see that the newspaper or the mainstream media is the most bullish on Bitcoin at the top, right? So they were the most bullish on Bitcoin right here on the 14th of March, and they were the most bearish somewhere around these levels, around August or maybe September. And that, so when they were the most bullish, price started to come down. When they were the most bearish, price actually started to push to the upside. And that is just how it goes every single cycle. Or you can look at this date and you can look at this bottom. Usually they're going to be very, very bearish along these levels. And I think that is pretty interesting. What worries me about the current trajectory of Bitcoin is that I'm seeing some news articles about Bitcoin, and that, again, is a pretty bearish sign. But technically, just looking at the chart, still looking strong. If we zoom out on the 1 hour chart, I usually like to analyze the daily chart and the 1 hour chart. The 1 hour chart is going pretty bearish right here. So I'm seeing some large bearish prints, some large bearish candles. So not the best story on this 1 hour chart. A bit of a topping pattern, you could say. You could also make a case for a head, left shoulder, head, right shoulder, which is a bearish pattern. So you would expect a downtrend from this point. Before that, we were just massively bullish. So for Bitcoin, we're going to have to wait, but I'm still bullish, maybe up until that 100K mark. And you can let me know in the chat if any of you guys have Bitcoin as a long-term hold, or if you are trading it short-term. I'm interested to see what you guys think. So Prophetic Voice says, what do you think of GBP USD? And Avalanche says, can we check oil? Sure. So I actually trade GBP USD, okay, or GDP USD. I'm not sure what, I think you're referring to GBP USD. I'm going to assume you're referring to GBP USD because I wanted to analyze this pair. Anyway, I think on the 1 hour chart that it is actually looking pretty bullish right now. Now, I do trade only the 1 hour chart, and actually I took a short setup right here. I took a flag. Unfortunately, my stop loss was just a bit too small, so I got taken out before the price started going down. If I was in this, I would have probably banked maybe 1 or 2% in profit with my trailing stop loss. Anyway, we were in a large downtrend, and then we started to sort of print a descending channel, which is a bullish pattern. And then we broke to the upside with some momentum, as you can see right here. So what I would like to see is, I want to see this bullish momentum continue a little bit like this. And then possibly I would get in on a nice buy setup, short-term buy setup. and maybe exploit an uptrend. Okay. So that is my goal on the pound and US dollar. I'm actually bullish on this 1 hour chart. This is one of the patterns that I like to trade. Usually when you see a descending channel, you get an uptrend, possibly a bit of a relief from this big downtrend. If we bump it up to the daily, we can check the daily chart as well. Well, the daily is still pretty bearish. We had this inverse V reversal pattern, which is a bearish pattern. So pretty bearish, and we are now still in this move, but printing a little bit of a wick on that daily chart. So that is about it. Yeah, no worries. No worries, prophetic voice. Hope that helps you. Any news that's up and coming? We did have PPI. It wasn't really that volatile. Let me check on the euro and US dollar. PPI was here, this candle. Yeah, it wasn't really that volatile. We do have Powell speaking later today, which can be pretty volatile. It isn't like an event where you get some numbers at a specific time, but it usually lasts for a while. And depending on what Powell says during his speech, well, it may or may not move the markets. And if it does move the markets, it can move them by a lot. We have had some volatility, some large volatility come out of Powell speaking. So what you can do if you're really interested in the fundamentals is you can probably join in on the live stream of his speech, follow the speech, and then see if he says any market moving news. That is at least what the very, very short-term fundamental traders do. They tune in on his speech. If he says something that should move the markets, then they try to exploit that information. So Ethereum, you guys want to see Ethereum, and you guys want to see the euro and the US dollar, but first we have oil. Okay. Oil. So let's start on the daily chart for oil. For me, I don't like analyzing oil. It kind of doesn't fit along my strategy the way I trade. There's a lot of gaps. It's pretty choppy price action. Okay, pretty choppy price action, and it's just not looking the best. One of the patterns that I can see is a left shoulder head and the right shoulder, which is a bearish pattern. You would expect a downtrend from that pattern, but again, currently price is pretty flat and range bound. I just think this is going to continue ranging around this area. Okay, that is my forecast. If we zoom in on the 1 hour chart, for the 1 hour chart, kind of flat still flat in this area. Yes, we do have a V reversal pattern on this very, very short term, which is a bullish pattern. So possibly a bit of an uptrend out of that. Had some bearish momentum here, so I don't like oil. Okay. If I had to make a decision, I would say the 1 hour chart, a little bit of bullish momentum is possible because of this pattern, and the daily chart, bearish movement is possible. Why? Well, because of the head and shoulders patterns, but that's about it. It's not going to do much good if you... My analysis on oil is not going to do much good, to be honest with you. Okay, Ethereum, yeah, sure. Ethereum is looking like it's dropping a little bit, isn't it? Yeah, it definitely is. Which is not the best story, but it is what it is. Basically, we had a follow through with Bitcoin. Ethereum was going to the upside, but now we're getting some big bearish movement right here. A lot of bearish legs. So to be honest, my conclusion for the 1 hour chart is that this is pretty bearish. Okay, I don't like these legs. It definitely broke some key lows, approaching this swing low as well. So I would expect more downside on the 1 hour chart. If we bump it up to the daily chart, let's take a look at that. We went into a swing high, a bit reached a bit of resistance and then rejected. So yeah, how far away are we from the highest point, which was in 2021? Well, we have a long way to the all-time high. We definitely do have a long way to the all-time high. Now, as you guys know, Ethereum definitely follows Bitcoin, right? So Ethereum definitely follows Bitcoin. That is how it goes. Sometimes it may take a couple of days or maybe even a couple of weeks for the altcoins to pump as Bitcoin is going up. So it doesn't happen instantly. It's a similar deal. I think Nick always talks about it. It's a similar deal to, let's say, having gold and silver. Usually when gold goes up, silver follows, but it possibly takes some time for silver to follow through. On that daily chart, I'm still bullish, to be honest. As I'm on Bitcoin, I'm still bullish. This is a big leg of momentum. So whatever Bitcoin does, Ethereum is pretty much going to follow. And Bitcoin is very, very bullish right here on the daily. I'm going to say the same thing for Ethereum as well. Let me see the 4-hour. It's looking interesting. So next on the list, we have the euro and US dollar. Yeah, cool. Another currency pair that I'm trading. Let's take a look at that. Euro US dollar. So euro and US dollar is looking good for a buy setup, actually. I do like this for a buy setup. Why do I say a buy setup? You may look at this 1-hour chart and say, but this is dropping down with a lot of force. It is just looking very, very bearish. Yes, but I'm just looking at patterns, and the current pattern that I see is a bit of a descending channel right here. And that to me is a bullish pattern. Now we're starting to see some bullish momentum printing as well. Okay, started to see some nice candles going to the upside. I'm going to look for buy setups. I would like to see this continue a little bit. Okay, I would like to see this continue just a little bit. And then I would possibly be looking for buy setups. It's going to be on my watch list, definitely, as is GU. Pretty similar scenario on both currency pairs. We have that descending channel and possibly looking for buy setups. But just on the short term. So I'm not calling a big, huge reversal. I'm not calling for like a huge reversal like this, a complete reversal. I'm just talking about possibly a bit of a correction like this. And I can definitely make some profits in this market condition. And then we can maybe continue down with the overall downtrend, right? If we look at the daily chart on the euro and US dollar, the daily chart is gonna be pretty bearish. Pretty bearish. We have broken this swing low now. We are approaching this level of support. But just by looking at the momentum, by gauging the momentum, this is looking very, very bearish. I'm seeing some massive sell-offs right here, some massive sell-offs right here as well. So I would expect to see further downside price action overall on the euro and US dollar. But again, on the 1 hour, we may get that correction to the upside I was talking about, but the daily, what can happen is maybe something like this, and then we continue with the overall downtrend on the daily. I solely trade the 1 hour chart. I only look at that chart for executing setups. And I'm looking for those smaller moves. I'm not looking for those huge moves on the daily chart. I'm just looking for some trends on the 1 hour chart. If they continue, if they go and become big trends, well, that's great. But even if I make just 2 or 3%, I'm still gonna be pretty happy about that. So Dean Adams says Euro Aussie. Okay, yeah, Euro Aussie. So let's start with the daily chart. To me, this is looking flat. I don't like this chart. It's looking pretty flat. It doesn't seem to be moving anywhere with conviction. But if we zoom in on the 1 hour, let's see that. Now we have a bit of a different story. So the 1 hour can actually be traded. Let me check out this downtrend if there were any interesting setups. Definitely interesting break and retest setup here. I would be selling. I would be selling right here. You see 30 pip stop loss. Probably be a losing trade for me, but that's okay. Looks pretty good. This downtrend looks pretty good. Definitely does. Then we had a bit of an uptrend. Then we went down. Now we're printing a bit of an ascending channel. Not the cleanest formation with this ascending channel, but it is an ascending channel, which to me personally, that is a bearish pattern. When I see an ascending channel, usually it signals a downtrend. Usually signals this. So that could happen. We could continue with this overall sell-off. So what can happen is this can be the sell-off, this can be the pullback, and then this can continue. Okay. Why is an ascending channel a bearish pattern, you may ask? Well, because you have to think about what the, let's say, retail traders are doing, and they are selling in each of these legs on whichever time frame, putting their stop loss above the high and getting taken out, filling up the liquidity. Same thing here. Sell, stop loss, get taken out. Sell, stop loss, get taken out. So possibly the bigger players, the market, the players that have a lot of funds may be accumulating sell setups or sell positions along the way and stopping out the retail traders and possibly grabbing some liquidity. So that is the methodology behind an ascending or descending channel. Doesn't have to be true. What I focus on is when I see a pattern, I test it. If, let's say, out of 100 times I see the pattern, 60% of the time or 70% of the time price goes down. So if I see 100 ascending channels and 60% of the time price does this, I know that looking for sell setups is going to be high probability. So I don't care why the market is doing this. I just care about my data. I care about what the large sample size is telling me. Okay. Yolumi says Ethereum pushes manipulation leg, distribution to downside. Okay, I'm not familiar with manipulation and distribution. I just look for momentum, to be honest. But I'm bullish on Ethereum and Bitcoin. I'm still bullish on the daily chart. That is. Rajat says gold, buy or sell. Yeah, we're gonna do gold for sure. Always interesting to cover. Oh my damn, this is a pretty big sell-off. It's pretty big. This 1 hour chart, pretty significant. Let me see if we have some sell setups. Yeah, we do. Definitely, I'm seeing some interesting sell setups right here. So on the 1 hour chart, possibly a little bit of a correction on gold may happen. I'm seeing a similar thing as I'm seeing on the euro and US dollar. I'm seeing a descending channel and that momentum shifting to the upside. Just the size of this thing. It's pretty strong. It's pretty healthy. So I would expect on the short term for this to maybe go up for a little while. If we look at the daily chart, so the daily chart looks really bearish. This bigger chart, bigger time frame looks really bearish. Nick explained that great that before an election, price pumps as people are kind of uncertain. They don't feel as safe about the outcome of the election. And then after the election, money goes out of gold into risk on assets such as stocks, such as indices, such as Bitcoin, let's say. That is exactly what you saw after these elections. And gold starts dropping because people feel safer. A decision has been made and the power was given over without many issues. So yeah, I like the fundamental analysis that Nick made right there. And I definitely agree with him. This is looking still very bearish, very bearish. Super ass boy says gold buys. Well, look, any signal that I give you, don't use it. Okay, you need to do your own work. You need to do your own analysis. You're dead. Fed Chair Powell speaks gold buy. Maybe we'll see. We'll see. But the technicals are telling me on the daily chart that this is looking pretty bearish. Okay, the daily chart is looking pretty bearish. On the 1 hour chart, you may see a bit of a correction, maybe a bit of an uptrend. I don't think it's going to last for long, but you could possibly exploit that uptrend on. You could exploit the uptrend on the daily, or sorry, on the 1 hour chart. It's up to you. But again, don't take my signal, but do your own work and do your own analysis. I don't even trade gold. I trade Forex. This is just for fun, to be honest. Dean says, I like the way you analyze the charts. Let's see how it goes. I'm holding sells at the moment. Thank you, Dean, for the feedback. So you're holding sell setups on which instrument? What have you sold? CAD CHF? Yeah, sure. Let's do CAD CHF. CAD CHF. Starting on the daily. This looks super flat on the daily chart. Super flat. For range-bound traders, this may be great, but for me as a trend trader, I wouldn't touch this, to be honest, on the daily chart. But if we zoom in on that 1 hour, which I like to focus on, exclusively focus on, doesn't look good, to be honest. Super choppy. Kind of looks like a JPY pair. If you take a look at AJ, see, it's just super flat, super range bound, which is not a good sign if you're a trend trader. You kind of don't want to touch a currency pair that is so flat and corrective, in my personal opinion. If I zoom in even more, yeah, definitely no entries for me. So my judgment would be to stay away from this currency pair, be more patient, find something more interesting, or look for the market to break these key levels, break out, start an uptrend, start a downtrend, and then we're talking. Okay. Super ass boy says hammer bomb bullish gold. Okay. Dean says Euro Aussie. Didn't we do Euro Aussie? I think we did. Yeah, we definitely did. EJ. You want to do EJ? Sure. EJ is actually a pair that I trade pretty frequently. Let's go to the watch list. EJ on the 1 hour chart, yeah, it's not looking the best. It's looking pretty flat in this area. Yeah, it's looking pretty flat. I don't really like the euro and the Japanese yen right now. I'm definitely not looking for trades, and I'm not going to put it on my watch list. I want to see a breakout of these highs or these lows. Until that happens, I don't think I'm going to be looking for much. I was looking at this pattern, just this little pattern right here. It had a nice ascending channel. It also had a nice takeout of the high. So it took out a swing high and retraced, which is a pretty bearish sign. So there were two confluences for the price to go down. There was the ascending channel, and there was the high takeout, basically the major high takeout, which is another bearish sign. And then we started dropping. So I was definitely interested to look for sell setups right here. With this sort of momentum, I'm pretty happy to place sell trades, okay? But we got some big bullish pressure. See this candle, this candle as well. Too much bullish pressure, and that destroyed my whole setup. Destroyed my whole sell setup. Also, this candle is freaking awful. So the 1 hour chart looks pretty bad. Daily is range mode as well. We're stuck inside of the low and the high. Let me try to zoom out a little bit on that 1 hour. EJ is similar to my other JPY pairs. They're just not moving right now. So from, let's say, the 25th of September, we just had this sort of pretty flat, pretty corrective price action. My advice would be to focus on the dollar pairs more, okay? If you just look at the daily chart, look at this downtrend, and then we go to EJ flat. Look at the downtrend on the Aussie US dollar. AJ flat. Pound US dollar, it's definitely moving somewhere, but NJ flat. So for these couple of even months, I would say my main focus was on the dollar pairs. The JPY pairs, I'm just kind of being more patient on them. Sure, I'm going to take some trades, but they're just overall being pretty flat, corrective, and range bound, not having much follow through. I have had a couple of trades on the Aussie and the Japanese yen where the price went into profit. Let me show you. So AJ is awful. It really doesn't like me lately. I've had this sell setup. Yeah, no worries, Otto, and no worries, Shani. Hope the analysis helped. So I had this sell setup, and this was not the first one. Got tagged in, 13 pip stop loss. Price went flying down, running around 7% profit. And I decided to hold it over the weekend because, yes, during elections, people are afraid, oh, there's going to be gaps in the market. Don't hold trades over the weekend. You're going to get gapped. For example, they're afraid of this. See, that is a gap. This is an even bigger one. And this is dangerous because let's say you have a sell setup running here and you're in profit, and then the market opens all the way up top and you have risked 1% of the position. Well, you have now lost 4% on this position because the market gapped all the way to the upside. So it's super dangerous. But what I found in my backtesting, before elections, there are a lot of gaps in the market. After the elections, once the power has been handed over without much issues, so we know Donald Trump is pretty much going to be the next president unless he gets assassinated. So Kamala and Joe have gave power to Trump, so the markets have kind of calmed down, and we don't expect as much gaps as we do before elections. And that is what I also saw in my backtesting. I backtested the last 4 elections and saw before the elections, you have a lot of gaps on pretty much every instrument. After elections, the gaps are minimal. So I decided to hold this trade. Market opened, see, no gap, minimal gap. And then unfortunately, we went all the way back up. I use a trailing stop loss. I didn't get any opportunity to put my stop loss in profit. So this was actually a losing setup. That's what I mean, that there's not a lot of follow through on the JPY pairs. We didn't get this, right? We instead kind of retraced back into that overall range. But enough of my crying. How about NASDAQ? Do you plan to long after the retracement? Yeah, sure, let's do. Okay, we're going to do NASDAQ and then I'm going to have to hand off the stream. So let's quickly do NASDAQ because my time is up. Daily chart, pretty bullish, same as the S&P most likely. Yeah, just no sign of slowing down. Absolutely no sign of slowing down on the daily chart. 1 hour chart, let's see it getting a bit flat, but I would not be concerned yet. This may just be a pullback before we continue to the upside. I'm not personally trading the NASDAQ, but I'm bullish on the 1 hour still, and I'm definitely bullish on the daily chart. So that is about it. Thank you guys very much for watching. Catch me next week on Thursday. I'm going to be live streaming also with TraderNick. And now it's time for the next guest. Okay, maybe the next guest is not coming on yet. So until the next guest arrives, we can do the S&P.
Hey Kenzo, Marco. Sorry, we had Kenzo cancel on us, unfortunately. So I am here stepping in to take over for you. Thank you for your time, Marco, and sharing some ideas with everybody.
Yep.
I just want to say to everybody, if you enjoyed that commentary from Marco, he's a regular contributor to the A1 Trading Show. He has his own YouTube channel and content, however, that I would highly recommend you guys take a second to go subscribe to. Find him on socials. He's got Twitter, YouTube, all the good stuff. So make sure, take a second. We'll drop the link here. There it is in the chat to go subscribe to his YouTube channel. Find some more free value from him on a regular basis there. Thank you very much, Marco, for coming on the stream today, man.
Yeah. And you'll be doing a segment now, or?
Sorry?
You'll be doing a segment after me, right?
Yeah, I'm going to go for a little bit here just to fill in for the
Can
the
I
gap.
stay for 15 more minutes?
You're welcome to. Do you want to keep going?
Well, I thought about listening to your analysis if you're going to go through your trades. I know you took a NASDAQ long and a Bitcoin long.
Mm-hmm.
So
Yeah, if you want to stick around, by all means, we can collab for a little bit here. We're just filling the gap here. So yeah, let's go for it. I'm happy to talk about trades that I'm in. We can keep going, talk a little indices. Have you been back testing it all on the indices? Have you played it all with the indices recently?
I did, but I just didn't find a lot of luck with my strategy. So I'm back on Forex. I'm back on testing some new currencies because they move pretty in a similar fashion to the currencies that I already trade.
Yeah.
So it makes more sense. But I'm still implementing, trying to implement the Edge Finder with my technicals. So, but the way you look at Edge Finder, you basically find values above 5 or below 5, right?
Yes, correct. So what I'm looking for is, if you get something that is 5 or stronger, that just means that a lot of our factors here are leaning in the same direction, or a -5 or below is saying a lot of the same, but the opposite direction. So more bearish. And the thing is, like, for example, with the NASDAQ, sometimes I'll get a reading of +5 or greater, take a trade, and then the actual score changes. I had somebody ask me about that yesterday in the chat. They said, what happens if you take a position like the one I've got right now? I'm long the NASDAQ, but what happens if once I enter the trade, the score is no longer a +5? And the answer there is that I don't actually manage a trade based on the Edge Finder. I only use it as Confluence to find entries. So I may enter the market with the help of the Edge Finder and then simply use like technicals and trailing stops and things like that to manage the position. So I'm long on this NASDAQ trade, and I put my stop just below this market structure, basically just saying, if this thing were to break, I'm taking a profit on the position. I'd be giving back some gains on this one, but there's also the potential that we get something like this and that the NASDAQ continues to trend higher. One thing that I found, Marco, in back testing the indices is that, just generally speaking, based on the nature of indices performing, they tend to drift up over time. I found it very hard to find profitable shorting opportunities in back testing, which you might have found something similar. A lot of the systems that I've built and studied for indices, they typically improve the performance if I essentially stay long only on them. And same kind of concept for gold. It doesn't mean I never short these things, but I'm very, very selective on short side action, if that makes sense.
Yeah, absolutely. Because on the daily chart, I mean, the indices are just crushing to the upside. Doesn't make a lot of sense to be shorting them.
And there are windows of time where it's like it could be very profitable to be short the indices, and they move very quickly down when they do sell off. But I actually found that to be actually very favorable to my style of trading with trailing stops, because when something like this happens, like let's just say that I decide I want to be long the NASDAQ here, which is what I'm looking at. Let's just say I want to get long here, and the market starts moving up, but I have my stop loss, below structure here. What I found is that the way the indices move, which is typically slow moves up and then quick moves down, slow moves up, quick moves down, works quite well with my style of trading, where I'm looking to enter on a pullback, trail a stop, and then looking to stop out quickly if the market has a sharp break of structure. So it's kind of the ideal for my style of trading of trailing stops. I love the indices for that purpose. I found that typically just works more often than it doesn't. It's not perfect, and there are also times where I enter and I lose, I enter, I lose, I enter and I lose, and that can create some drawdown and losing streaks. But every once in a while, you'll catch. Last year, some of my best trades happened right around here, where I actually caught a bit of a breakout and rode this thing just for like weeks on end. It was awesome. But then, of course, there are times where I'm giving back profits. But yeah, that's been it's not a cheat code by any means, because markets don't go up forever. But finding ways to quickly get out of sell-offs, but hold on to upward drifts has been a really great addition to my approach to the market.
Yeah, because for Edge Finder, because I was looking at numbers as, I don't know, 2 or 3, and I was considering that bullish. But then I saw that what you do, you actually wait for numbers above, let's say, 4 or 5.
Yeah.
And I think I'm going to do that going forward. I'm going to focus on the bigger numbers to not get in the chop and to get like a really bullish or really bearish signal.
Yeah. One thing you can also do on the Edge Finder is this bias column over here. This is typically when I actually am looking for trades. I will remove the neutrals from the list and basically just keep those in front of me. So I'm
okay. Yeah.
These are actual candidates for possible setups. I'm actually very surprised, and I think that there's something wrong with the trend scanner on euro dollar, because we're getting a trend of 0, but that thing is in complete free fall and actually should probably be a -2. So somewhere there might be a bug, which does occur sometimes, and that is something we definitely need to check on, because if we take a look at euro dollar, for example, that thing is just in free fall.
Yeah, it's melting down for sure.
What else are you what trades are you in? Are you in any trades right now?
I took a pound US dollar sell. Didn't
nice.
work out too well. Got stopped out before the price actually continued down.
Okay, so you took it recently. When did you?
I took it on the 13th of November at around there. Yeah, just before I think it was PPI. That was a PPI candle. And I got stopped out with the news event by 5 pips, and then the price decided to go down. But part of the game. What you gonna do?
Yeah, that hurts. That hurts. What about Bitcoin? Are you watching it all? It's been crazy since we last talked.
I have some. I'm holding some as a long term. Got my Ledger wallet right now, and also I sent you a message on Twitter. I know you're long Bitcoin, but my grandma approached me today, and she told me that Bitcoin is back in the news. So it's not the best scenario.
That's a bad signal, Marco.
That's not the best.
Now we got to be
I wanted
careful.
to warn you about that.
Yeah, no, that is a fair warning. I've got my stop trailed on it, because I'm basically just like, if this takes out the lows, it's time to hop out. It's been a really good move, but it could kind of melt up to 100K soon too. I mean, we'll have to see. But for me, with these two sorts of moves, when you get a runaway train movement like this, all you can do, or at least all I can do, I don't know how far it goes. I just know where I want to get out of the way. If it completely erases these gains and starts dropping like a rock, I want to get out at a break of structure. So,
and do you always trail on the daily, or do you trail on the 4 hour as well?
I do the 4 hour and the daily. I kind of usually I trail mostly on the 4 hour chart. But the daily chart on Bitcoin has been so crazy to watch. And it's sort of a unique scenario when the markets are moving like this, like when we're making sort of flowy uptrends, it's a lot easier for me to trail stops. What's difficult is when you get these moves. I mean, this is a good difficulty to have, but when this is all you're getting, I find it very difficult to properly manage a stop. all I know is that when we enter into these sorts of territories, like melt up modes, where it's just insane volatility and just screaming in one direction, like euro dollar currently, or to the downside, or Bitcoin currently to the upside, all I know is that I have to start getting a little bit more aggressive with my trailing stop, because, you know, we've seen this 100 times. You get these ginormous moves, and then one day you just wake up and it's doing that. So, you know, for Bitcoin, I'm just keeping a stop relatively tight. If we take out these highs again, stop's probably going to go there, and I'll just continue to repeat the process. But just trying to let price action take me out when it's okay to get out.
What I've been struggling this year is on the JPY pairs. They tend to be very volatile. When they move with a lot of force.
Yeah.
So I have had 3 or 4 trades that went into 5 or 6% profit, and because the move was so volatile, I didn't reduce the risk. There was no opportunity. There was no swing high, no swing low, nothing. And then it just completely chopped me, and it turned out to be a break-even trade or even a loss.
I've got a frustrating trade that's gone on right now. So similar to what you're saying.
That's it. Yeah.
Like very, very frustrating, because so how do I explain this? Let's say, like, I know what you're saying. I'm trying to think about it from the audience perspective. I took a long position on SMH, and this is a great position for me. It's still doing well, but at one point it was up a lot of money, and it was a really, really game changer trade for me this year. And it still has the potential to do just fine. But my struggle has been, you know, I'm waiting for some sort of, let's say this is the high and we're coming back to the high. I'm waiting for something like this, a break, a new high, in order to really lock in a stop loss. Let's say the red line is my stop loss. You know, initially, you know, my stop loss is here. I'm looking for this opportunity to trail, but I didn't really get one because we came right up. What actually happened is I entered the trade. You know, here's the entry, here's the stop. Market came up to this area and has just sort of started to drift back. So there is some difficulty with my style of trailing stops, and there always is, no matter what style or way you manage a position. There's nothing perfect, but I'm feeling a little frustrated that I didn't get the chance to, you know, had we seen a nice close here, I would have put my stop right there, and I would have gotten stopped out, and I would have missed a lot of this. And you might say, well, Nick, you're still floating a great profit. Well, yes, but I lost several thousands of dollars with some early entries before this. So, you know, between everything, I'm probably around a break even on this position, considering some of the losses that I took before this good trade. So it's very frustrating sometimes, trailing stops. There's the trailing stop method is awesome when it's working, and very, very frustrating when it's like getting you out.
Tell me about it.
Yeah,
this year's been tough. But my plan for the JPY pairs is actually to have a 50% position, let's say, take profit at the 5-1. So I would take half of the position off at a 5-1. As I measured, that was the most optimal level, and let the rest run. So
that makes sense.
I know in the long run I'm going to make less percentage, but what I would like to, let's say, translate to the audience, that protecting your psychology is the most important part. When you watch a trade go into profit for, like in your case, tens of thousands of dollars, in my case, let's say a couple of hundred, and then go back and take you for a loss, it can basically sting you for that whole week. And kind of ruin your psychology for that whole week.
No, it's incredibly frustrating. I mean, again, yes, these amounts are large, but so are the losses for my account, right? Like it's all relative, and it's all, you know, people are on different, you know, phases of their trading journey. But like I took losses over here, like I entered early, stopped out, you know, took losses over here. Like I took a couple losses before this. So I probably am sitting break even. Whereas at one point I had a much larger win that was heavily outweighing the losers. But this is the downside. Like, look, my stop loss, technically I could still take another loss, which would put me at probably $25,000, $30,000 in loss on this campaign I've had with SMH, when at one point I was probably up 15, 20. So it's all relative, and it's that's the tricky part about trailing stops. Is sometimes it works incredibly, and other times it will break your heart. It is really frustrating when it completely reverses. And what I found is that there's no fixing it, right? If you do too much to try and, oh, I'm going to change up this way of doing it, and I'm going to change up this way. What you start doing is you start plugging a hole over here, and then another hole over here pops out. Something else breaks, right? It's like it's like a never-ending chasing your tail on this stuff, because what I've found, and Marky, you probably know this quite well as well, and the audience members may or may not know this, but what I've found in my trading is that, if I can accept the pros and cons of a strategy or an approach, I've done something right, because every approach, technical, fundamental, strategy, there's nothing that is, easy and foolproof. Like, it's going to have issues. So it's sort of accepting. It's kind of like a relationship, like a marriage or something. Like, it's not perfect. It's active work and accepting the flaws of your person, your partner. Same thing in markets. Like, your strategy is your partner in the markets, and it's not going to be perfect. Nothing is. It's one of the tricks to becoming profitable, I think, is accepting that nothing works all the time, and you're going to have frustrating periods.
Yeah, and what's funny, the moment you try to fix something, like plug a hole, the next trade is going to do the exact opposite of what you were preparing for.
Right.
That's always how it goes.
Well, yeah, and the comment section will tell me this. I get this, and you probably do as well. I've got this trade, right? And somebody is going to say, well, Nick, you should have secured profits as soon as it hit right here. Well, yes, that's a great idea in this example. But I've had scenarios where this happens. Big push up. Okay, what if I had trailed my stop here? I get taken out and then shoots up, right?
Yep.
So there's always a way to make any strategy look silly, but you kind of have to, again, that's what I'm talking about when I say accepting a strategy's flaws, right? When I'm saying, oh, I'm not going to trail my stop until I get a higher low. Like, if I had seen that, then I trail stops after. There's always a way to pick fun at any attempt in the market. So, but there's pros to it too, right? There's, again, if let's say that this had done this, then I'd be still in the trade. But if I had trailed stops too early, I might have gotten taken out.
It still may go up. It's hitting the support line, right?
Yeah, I mean, I'm still comfortable holding the position, and I'm also comfortable taking the multiple $1,000 loss, which sounds terrible, but it will make me sad. I will probably cry about it. Just kidding, but it will be annoying. But it's just part of the process. It's like heartbreak trades are just part of it. They happen sometimes.
Yeah. If you can get through them, it gets a bit easier, I would say. Definitely gets a bit easier with the years.
Yep.
But do you pay any fees for holding stocks like this?
The cool thing is with ETFs, which are baskets of stocks, right? So this is one stock. SMH represents many stocks like NVIDIA, AMD, Qualcomm, all these different companies. Yeah, so in one. So this is the Semiconductor Exchange Traded Fund, or ETF. And the nice thing here is that if I go into analysis on TradingView, you can see that the expense ratio right here is an annual fee that you pay for holding on to this for the year.
That's an annual fee.
Yeah, so it's very low, very cheap holding.
It's as like opposed a weekly fee in Forex.
Yeah, as opposed to with swaps and Forex and CFDs, you're paying every night, right? To hold positions. So for like my NASDAQ trade as well, if I'm holding a NAS position in a futures contract or an ETF, it is much cheaper than holding it in a CFD brokerage. So that's another really important key thing is if you're going to trade indices or commodities, CFDs are not always the best option for swing traders. If you're a day trader or a scalper, that's probably fine. But I actually think for indices, commodities, holding for longer periods of time, it might be worth looking into futures or into stock brokerages.
And on Bitcoin, is it a similar thing or?
Yep, IBIT ETF for Bitcoin, which has been a pretty wild, insane trade that I'm hoping keeps going, but we'll see. But you
Because
can
let me
trade.
tell you, just for if you're buying Bitcoin on Binance, they skin you alive. They first take a fee,
Really?
and then they take a spread, and you end up paying 5% for
Oh my
sure.
goodness.
Yeah, you're paying a lot, especially in a bullish phase. So this is great if you want to just go
Yeah,
long
I mean, look at that.
for a month or two.
0.12%.
Yeah, that's nothing.
So yeah, the expense ratio on this is practically nothing. So it's highly, highly advantageous. Now with ETFs, there are some downsides, which I think you and I have discussed this too in the past. There's gaps, right? So
Yeah.
this gap I'm okay with.
Yeah,
But the
I know.
problem is, I think I told you this in the past, QQQ, I got absolutely wrecked. I lost so much money on this day from QQQ because the gap was horrendous. So what happened is I had a long position over here with a stop loss like here. No, that's not right. It was like a stop loss like here, let's say. And so I was risking a full size position. I liked the setup quite a bit, and it gapped open and immediately filled me at the lowest price and ended up doubling the loss on a full size position for me. And it set me back this year a lot. That one annoying gap completely wiped out a lot of gains. And this wasn't the only gap that I dealt with that day. There were several things. So there's overnight risks, and ETFs are not perfect for that. Just pros and cons. Everything has pros and cons in trading.
Absolutely.
Yeah. Nothing is perfect. Nothing is foolproof. One thing that's great in one strategy or brokerage or way of trading things is also comes with its own list of difficulties.
Yeah, choose your upsides and downsides.
Yep.
As long as you're happy with it, then that's about it.
Yep. Well, Marco, we'll let you go. I really appreciate you coming on today. If you want to stick around, you're more than welcome to, or come back. We're streaming all day long, but you've been going for a while, so I'm gonna tell you to go take a break, go relax.
Sure. Thank you. It was really fun. Good luck with the stream.
Yeah, thank you. And everybody who's listening, do us a big favor. Again, I mentioned it earlier, but make sure, take a second, go subscribe to Marco, one of our very regular and great contributors to the A1 Trading Show. I mention this all the time, but this show here is a collaborative sort of trading stream that we do all week long. And if you're new here, make sure add all these people that are coming onto the stream to your subscribe to list on YouTube, on Twitter, all that good stuff. We bring on a lot of very realistic traders. And if you as an audience member right now see yourself doing this for the long term, I genuinely mean it. I think this is one of the best places on YouTube to spend your time learning for free. So Marco, thank you again for coming on.
Thank you. See you next time. Goodbye.
All right. See ya. Good stuff. Again, always great to have Marco on. And I don't think, like I genuinely mean, I don't think you're going to get a more real stream on YouTube from some of these people that we bring on. We have found some wonderful contributors to the A1 Trading Show over the years. And what's been a very cool thing is these people have stuck with us for the long term. We've had contributors. We don't pay these people to come on, right? Marco is a friend of the channel. He comes on a regular basis, and we talk trading in a practical way. He loves the sport, and he loves to share his experience and knowledge. And in return, we sort of help our contributors grow on social media themselves. It's a win-win-win for everybody. A win for the A1 trading team, a win for the guest, and a win for the audience who gets to enjoy free value every day. Nick, what's your win rate? I don't really even track my win rate that much, to be honest. Probably like 40% of my trades are winners, but I typically go for much larger wins than losers. But win rate is so unimportant. At the end of the day, what is your expected return? That is far more important. And for me, I make a couple percent per month. That's all I do. I do it every month. Not actually, I take that back. I average a couple percent per month. And sometimes I lose money in the month. Sometimes I lose money several months in a row. And other times I make money a month in a row, several months in a row. This year I have had 2 down months and 9 up months, which is a pretty exceptional year for me. Some months I lose money. If I can make money most months, I'm doing just fine. Nick, can we analyze oil from both a fundamental and technical perspective? Yeah, let's do oil. So, I'm going to go ahead and say off the bat that I don't have anything super exciting to say about oil. I would say that I am very much neutral on oil, but I'll explain what would get me to change to bearish or bullish on oil, because I understand that might be a little bit more helpful. So let me do this. I'm going to quickly pull up. Do we have, I forget, do we have an oil scanner page? Industrial commodities, US oil. There we go. So what moves the price of oil? The price of oil moves based on the state of the global economy. And the US economy is the largest economy, so we really hone in on the US economy. So when you get strong economic reads from the United States, the Edge Finder is generally going to give us a stronger print for oil prices or outlook for oil prices. Yesterday and today, we got CPI and PPI, and they were very much in line with expectations. Inflation has come off of its lows of 2.3%, sitting at 2.6% year over year. Prices are going up on average at about 2.6%. A couple years ago, they were much higher than that. Inflation was running crazy. Inflation's come down a lot. And when we talk about the state of the economy in the US, PMI data has come in real strong, right? Retail sales came in strong compared to forecast in the latest round. Manufacturing came in weak. GDP came in weaker than forecasts. So what I'm getting at here, jobs data was good, but jobs added were weak, but unemployment rate stayed unchanged. So long story short, the economic reads that we study are pretty mixed. So that is already pointing a picture for mixed sentiment or neutral readings. You can see that the Edge Finder is giving it a +1. Oil is a market I love to trade, but I'm not going to trade it if I don't have a good, steady reasoning too. The other thing is we can take a look at retail positioning. Retail is pretty long. We can take a look at COT data, and I believe that COT data is pretty bullish for institutional money. Yeah, 72%. Let's call it 73% of futures contracts traded on oil by hedge funds and banks and institutional money that report to the commitment of traders data are on the long side. So there's clearly from big money a preference on the long side for oil, right? So that's cool. That's bullish for oil. But what I'm getting at here is that the sentiment overall is very neutral for oil currently. When we look at price action on the daily chart, oil is sitting at a support level, but I would say that we're not in a very clear up or downward trend off of the daily chart. We look pretty range bound currently. I would not be surprised if we did see a rise in oil prices, but I would only really call this thing just price action momentum bullish if you were to see a break of the 79 level. If you see a path towards the 80s again, then I like oil a little bit more, because most likely, guys, what would get us there? Probably some strong prints in the US economy. If jobs data came in real strong, if inflation ticked up a little bit, right? Jobs added, PMIs, retail sales, if everything starts chugging along and gets strong, if some economic reads, which, by the way, like I said, I'd give the U.S. economy right now sort of a neutral to holding in there pretty well. And with rate cuts around the corner, there's the expectation, the prospect that the US economy will actually start to accelerate even further with rate cuts, as that is strong for the state of the economy. No momentum here in this chart. You guys know I love trading things that have momentum. Don't really have momentum on oil. Now, from a value perspective, from an options trading strategy, if we see oil prices tank, then I might actually be able to find some stocks that I like in the oil and gas world and actually build some long-term bullish positions. But at current levels, I just don't love it. I know that was a long answer, and I'm sorry if that was not exciting for you, but genuinely, I would say neutral is a fair perspective for me on oil at this time. Now, we could take a look at some things that I like more than others, but I'm getting a lot of mixed to neutral readings in the market at this time. Bear with me 1 second. I'm just going to send a message to our team about that euro dollar trend score. I'm typing something up. Give me one moment. Okay. Okay. Yeah. Appreciate the detailed response. Of course. Happy to. Michael says, I enjoy fundamental analysis. However, affording the edge finder is difficult where you're from. So Michael, we do have some adjustable pricing that we offer to people in places where the US dollar is exceptionally expensive. If you would like to get some more information about it, the best opportunity to get the edge finder is currently right now. We're doing our biggest sale of the year. It's our edge finder 40% off discount. We also offer, again, some flexible pricing to people who are in places where the dollar is very expensive. If you are somebody in the audience who would like to hear about that, send us a direct message right now. We'll give you some information. But again, if you're somebody who's like, oh, I'm saving up for the edge finder, I'm telling you, you won't get better prices than right now. Everything is super discounted for our Black Friday sale. And if you're a fan of the show, if you're a fan of the tool, you want a copy, just send us a message. We'll see what we can do for you. When you send us a message, by the way, you'll be chatting with someone on our website. It'll either be Emily, Drew, or Hallie. All are capable of helping you out. You can send us a chat now. Just let us know that you're watching the stream, that you heard about special discounts, and we will definitely help you out. Silver and gold are have really taken a plummet to the downside here recently. And on a fundamental perspective, because I said earlier that, the dollar looks really strong, but also economic data in the US looks also fairly decently strong at this time. I don't love the idea of getting super bullish on gold at this moment. I've been pretty bullish in recent months on gold, and I've had a really great year trading gold. But I have lost interest in gold in terms of the long side setups at this moment. The edge finder is currently giving us a -3 score. Trend to the downside here. What is this? Seasonality, also not great. Let's look at seasonality for gold. I'm curious. Gold during the months of October and November are historically not great months performance-wise for gold. You can see currently we're having a horrible month for gold's price to the downside, which is great if you're short. If you're long, not so great. Nick, what do you think about meme coins? Because I'm currently investing on Andrew Tate's coin. It is, you are playing with fire. You might make a ton of return on your for fun coin, but you also may lose a lot. I'm also long Bitcoin right now. I personally don't touch any of the altcoins or, higher. I mean, all of it is incredibly speculative. Bitcoin could go down to 20,000 tomorrow. These things are incredibly high risk. But of the lot, I just like Bitcoin because it was the original. It's kind of like, why is gold more attractive than silver? Well, it just always has been, right? Bitcoin to me is the similar concept to gold and silver. Bitcoin's the gold standard, if you will, for crypto. And am I a forever believer in Bitcoin? Am I a massive crypto guy? Not really. I just like it from a trading vehicle as a risk on play and a post-election play. So I'm trading Bitcoin. My stop loss is trailed on this one. If things tank, I'm getting out of there. And I'll take profits on this move. And I'm grateful to have caught this move. This thing has been a game changer for my trading account this year. I was having a good year, and then I jumped into having a great year just with this Bitcoin trade. And we'll see where it goes. I mean, if it comes down and takes me out, it will be a great year. And if this thing does continue, guys, it has the potential to be an exceptional year for me. But one thing I hope that you get out of my streams, if you watch frequently, is I never claim to know with certainty what the market's going to do. And I think it's really important that as a trader, you sort of embrace that you don't know perfectly, but rather you know what you'll do in alternative scenarios. Like if this is you going down the path as a trader, you got to know how you're going to, what exit ramps you're going to take given certain scenarios, right? Good trading is not knowing with certainty what's going to happen. Good trading is simply knowing your exit ramps and being prepared. So to apply that to Bitcoin, I have a long position. I liked it. It had a lot of momentum. I bought the pullback once, took a couple $1,000 loss, bought it a second time right here. And now I'm managing the position. I've chosen to manage my exit ramp by applying a moving stop loss behind market structure here. So my exit ramp in this case is if this thing breaks structure, I will take a profit on the position. I'll take a lesser profit than what I currently have, but I'll still take a profit and I'll just be grateful I got to catch that move. If the market then continues, my next exit ramp would be to move my stop loss higher into profit and rinse and repeat until ultimately we get a reversal and I trail out for profit. Why do pullbacks happen so long on NASDAQ? It doesn't want to pull back right now. It's trying to. It is really trying to pull back. I've got my stop loss, a similar concept on Bitcoin to NASDAQ. The NASDAQ has been on a really strong tear, but we always got to be careful what we wish for. When you want to pull back so bad, you can finally get the pullback and it turns into one of these, markets, right? This can be a very painful process. How does the Edge Finder combine all of the fundamental data together to form a bias, whether bullish or bearish? Dark site, that's a great question. We actually have an entire page. Chandler or James, if one of you guys could drop really quick a link to the Edge Finder tour page. It's a1trading.com/edgefinder-tour. It is a very full, comprehensive tutorial on how the Edge Finder scores everything. But the long story short, the high level stuff is it looks at economic data, technical data, and sentiment data. And it has an internal algorithm that considers all of these data points adds or subtracts score for each asset. And on the far left, you get left with all the different assets with a respective score. And if you get a 5 or greater, it is considered a bullish reading on the Edge Finder, and a -5 or less is considered a bearish reading, right? But again, if you want to take a more comprehensive look of the Edge Finder before purchasing it yourself, I highly recommend you do that. You can go to a1trading.com/edgefinder-tour. It's in the chat right now. You can click that link, bookmark that, save that where yourself, email it to yourself, whatever you want to do. But I highly recommend that if you're going to purchase the tool, take a few minutes to click through that page, make sure that you fully know what you're purchasing. It is a remarkable tool. And we have a full educational guide on how to use the full product. It is currently a great chance to take a closer look at it because I mentioned this earlier. We're doing our Black Friday 40% off sale this month, and that is ending in a few short weeks. So if you'd like some more information, you can click the link in the description of this live stream, or we'll drop a link here in the chat to speak directly to a member of our support team about getting your copy at the low price that we currently are offering it at. We're a software company out of Atlanta, Georgia. We work all day long on improving and building this tool into what it has become today. There's 3 of us on the dev side. There's 4 of us on the support side. There's 2 of us on the content and editing. Well, 3 of us on the content and editing side. We got a full team behind this product, and we're not going anywhere. We worked on this thing for the last few years. It is a passion project that turned into a full-blown, software tool that thousands of traders all over the world are using at this point. So again, get your copy during this Black Friday sale. It is the lowest price of the year. I think trend is also incorrect for EuroCAD. Let's look at that. I gotta, if we have some issue with the trend score, I need to alert our support staff with that. EuroCAD. Yeah, that's messed up. Okay, I just let them know. Frank and Giles behind the scenes are working on our trend score as we speak, just making sure it's functional. But yeah, sometimes we have bugs and we have to fix things. That's why it's a never-ending process of maintenance, repair, and creating new features. But it's a good problem to have. We love doing it. We love building the tool every day. Bitcoin 88.6, back below 90. How old is TraderNick? I am 27 and I'm turning 28 in a few weeks. 28. Gosh, that number is scary. It's just a second ago, I was 22. Anyways, we got something fun, guys. We're going to be doing something here. We're streaming all day long. Actually, I think we're going to set some records. Can I ask you guys to do me a big favor? We got 556 people watching right now on the stream. Could you guys do me a huge favor and take 2 seconds? If you've enjoyed this commentary, if this has been helpful to you in any way, hit that thumbs up button. I don't know how many likes we're on the stream. Can somebody tell me how many likes are we at? I can't see the stream from my perspective right now. Let me know how many likes are we at. Can we pump the like button? Hold on. Do I have my sound effect? I'll play you guys some music. If you guys can pump the like button, as long as that like button keeps going up for a second, I'm going to keep playing sound effects. So if you want sound effects, keep telling me what the like count is at. We're at 350. Can we get to 400? Can we get to 400? I'll play you sound effects. I will play you sound effects. People love the sound effects. We'll get sound effects going as long as the button's going up. What are we at? 362? Come on. 362. Let's get to 400.
You what?
I'll keep playing them. John Cena. Okay. This song is Take Me High. So can we get the like button higher? Come on, we're going all day long. We got to keep the energy up for this stream. I'm running out of sound effects, guys. What are we at? How many likes? How many likes, guys? 375? Come on. Hit the thumbs up button. Come on. Can we hit 400? Listen, how about this? If we get to 420, right? The second we get to 420 likes right now, guys, we're going to do a giveaway of the Edge Finder and Stock Box. Okay? 420 likes. What are we at? We're at 380. Come on. Come on. Pump the like button. I'm running out of sounds. What do I got?
Perfect candle.
Perfect candle?
Candle right there.
How many likes? How many likes are we at, guys? Did we hit 420? Dang, you guys just ripped. No, we're not. We're at 385. Come on. We need some likes. Yeah, I feel like I'm a I feel like I'm a TikTok influencer. You know when they do those like battles on TikTok? You know what I'm talking about? Those things are so crazy to me. It's actually the strangest thing. When you got like the two people, if you don't know what I'm talking about, on TikTok, there's like a creator on the right, a creator on the left, and they're battling for likes, right? Whoever can get the most likes, and you can also donate to them, which that's the whole idea is you donate to them, you get more points on the board, and if you win. Okay, we're at 392, guys. Come on. We need 20 likes, and then we're going to do a giveaway. If you guys want Edge Finder or Stock Box for free,
I even helped me see the light.
Hit the thumbs up button. There we go. 396. We're not doing it until we get to 420. I need your help. I need your help. If you guys want to do a giveaway, call your mom. Say, Mom, listen, I need you to get on the stream. TraderNick needs you right now to hit the thumbs up button. I actually am running out of sounds. There we go. We got some fresh sounds. New sounds. Hit the thumbs up button. I know I'm being annoying, but just help us. Just hit it. If you want it to stop, you just got to hit the thumbs up button. We're going to try every angle. I could either entice you by saying we're going to do some giveaways, or I can annoy you by just begging you for likes until we get to 420. We're at 402. Look at this, guys. 401, 398, 390. We're going up. 401, 402. Thank you, Toby. Call your sister. Call your mom. Call your brother. I'm out of sounds. I'm running out of sounds. Oh, man. You what? Oh, producer wants a you what?
You what? You what? You what?
Come on, we're close. We need 14 more likes. You know what we need? You know what sound effect we need, guys? We need the TikTok Trump Save Us, the lady, the Trump Save Us lady. Gosh, that meme is unbearably funny to me. We need the Trump Save Us meme. 12 more, guys. We're so close. Come on, we'll do a giveaway. If you hit the thumbs up button, we're going to give away. What we'll do here, just so you guys know, if you stick around, if we get to 420 likes in the next few minutes, we're going to do a giveaway. James is going to conduce a trivia game for us, which these are so much fun. I love doing these trivia games with the A1 Trading Gang. We're at 415. Come on, guys. We're practically there. Be the one. Be the 420. Like, help us out. Once we get to 420, we're going to play trivia. James is going to lead us in trivia. I was going to say lead us in prayer, but it's a little different here. Not prayer. We're going to lead us in trivia. James is holding up the prayer sign for us. So we're getting close. Who's going to be 413? We're back to 410. Are we going down in likes? You guys better not unlike the stream. I'm telling you, don't do that to us. Why 420? Aaron, that's none of your business. Let's go. Come on. We're so close. 418. You guys don't want free edge finders and stock boxes? 3 left. Come on, 420. Be the person to get us there. Trust. Come on, I think we're probably there, right? Are we there? 420? Unlike, get out of here with that. Your profile picture is wild, to say the least. Okay?
Perfect candle. That green candle.
What are we at? Do I have to pull up the stream? We've spent longer than I cared to admit, guys, on doing this. And I feel like genuinely it's like a battle on TikTok when the two creators are battling. What are we at? We're at 417. Okay, we're at 418 because I just clicked it. I don't know if that counts, but who is mass disliking the stream right now? Last one. Come on, guys, do it. And if you unlike, I'm going home. All right. I think we made it, guys. I think we did it. We're at 423. I appreciate you guys sitting through my begging for likes. And now I'm going to throw it over to Mr. James in the other room. And you guys earned it. We're going to do a free giveaway of Game of Trivia with the man himself. Guys, check this out in just a second. You'll see James. He's got long hair right now, and I'm digging it. The long hair gang is back in the A1 Trading House. Let's bring him in. Say hey to James. Here he comes. There he is. What's up, James?
What's up? What's going on, everybody?
We're going to play some trivia. We made it to 420 likes through begging, music, bullying, yelling at the audience, and we are
liked on 2 separate accounts.
Nice. So we made it. I think we're past 420, and people are still telling us the like count. So we're good now, guys, but keep liking the stream if you want to. James, you got trivia for a little bit. I'm going to go get a glass of water, and
this up a little bit.
We'll be back here in just a little bit. You got trivia, guys. We're playing trivia. James is taking. He is your ship leader here. He's your captain for the foreseeable future. And James, enjoy it, man.
All right. Yep. Go take a break. You deserve it. So here we go. Here's what we're doing today, guys. We're going to play a little trivia, and we are going to give away either an edge finder or a stock box, one of your choice. If you're new to the stream, I'm going to show this off really quickly, if it'll let me. Let's see. Don't worry, guys. I'm sharing my screen here. There we go. So we're either going to give away an edge finder, as you can see here, very lovely edge finder, access to the top setups page. We've got data scanners, Forex, bonds, commodities, gold, indices. We've got sentiment positioning. You can see COT data, retail sentiment. You guys, if you watch the streams, you're more than familiar with the edge finder. So you have the choice between the edge finder or our brand new stock box, which we just released this month. We're very excited about it. Both of these, by the way, 40% off right now. A1trading.com, promo code A1YT, 40% off. Shameless plug. But the stock box shows some of the top stocks from all over the world, as well as top sectors as well. The 13F portfolio scanner is a really cool page that shows off hedge funds from all over the world. We have hundreds and hundreds of hedge funds all over the world, what they are buying and selling currently. So you get the choice between one of these two, 100% for free. And I'm going to stop sharing my screen again for 1 second. Sorry. And I'm going to share this one instead. We are going to play trivia. I have 10 trivia questions for you, which means that you have 10 chances to get your name on this wheel behind me. Now, there are more than 10 spots on the wheel, as you can see. But instead of taking all day to do this, we are going to do 10 questions. And the first person that I see get the question right, I will write your name up on the wheel. I don't know if you can see this. This might be too hard to see. Can we go full screen on my camera really quick, Chandler? Is that okay if we do that? Yeah, okay. So you see these have dots. You see these dots here. These are the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 spots. I know that there's a glare, but these have dots. So we're doing 10 names up on the board. Ignore this junk over here. We're not using that. Okay. So 10 people getting their name up on the wheel. We can go back to this. All right. And all right. So let's go ahead and get started. And again, listen to me. I have the chat up on my computer right here. The first person that I see come through on my end that gets it right is getting their name on the wheel. So if you're complaining because on your side you see it above someone else's name, sorry, it's what I see on my end. Sorry. So here we go. Can I get some W? I want to get some W's in the chat if you're ready to play trivia. Also, actually, scratch the W's. Tell me what you want. If you win trivia, are you going to get an edge finder or are you going to get a stock box? Are you going to get an edge finder or are you going to get a stock box if you win trivia? I see edge finder. I see edge finder. Edge finder. Everybody wants the edge finder. No stock box? No. Okay. I see one stock box. A lot of edge finders. A lot of edge finders. Well, again, if you don't win right now, you can get it 40% off if you message someone from our team. So even if you don't win, everybody wants edge finder. I saw one person say stock box. Everybody wants edge finder. Well, again, if you don't win, 40% off. Here we go. All right, I'm gonna warn you guys. Some of these questions are a little bit tough. And obviously, I can't tell you not to Google because I can't watch you not Google. But you got to be first. So you got to be quick with those fingers if you're going to be Googling. All right. Question number 1. Hopefully. All right. Yep. Question number 1. What year was Bitcoin first publicly traded? What year could you first invest in Bitcoin? I'm watching the chat right now. I see it. I see it already. I see it already. The correct answer, someone's already put it in there. Someone was quick with it. Someone was very, very quick with it. I'm going to write your name down, and then I will reveal the answer. All right. The person that I saw get it correct first was Avalanche. I see that's now Avalanche. AVA1ANC3. I understand now that means Avalanche. Avalanche, congratulations. You got it correct first. The correct answer was 2009. 2009. I took this picture right off of TradingView. You can see it goes all the way back to 2009. Right now trading at $89,000. My goodness. My goodness. Congratulations, Avalanche. I have your name written up on the wheel right here. All right. Question number 2. Question number 2. Where is the world's oldest stock exchange? Where is the world's oldest stock exchange? Let's see. If you don't know, get those fingers typing, get Googling. The world's oldest stock exchange. See a couple answers coming in. None of them are correct from what I've seen so far. I Googled this. The world's oldest stock exchange. It would be really embarrassing if I had the wrong answer here. Interesting. Interesting. Okay. I have 2 different things. Nobody put the answer that I put on the board, and when I Googled it, I got a different answer. I looked at some trading trivia questions earlier, and it told me a different answer, but Google is telling me something else, so I'm going to go with Google. So we're going to ignore the answer that I put. We're going to trust Google. And the first person that put the correct Google answer, Jack of all trades, Jack of all trades, you are correct. The correct answer, according to Google, is Amsterdam. The answer, according to the random trivia, yeah, this person said Belgium. That's what I saw earlier, but Google said otherwise. So we're going to ignore Belgium. Sorry, Google AI says it's Amsterdam. So we're going to go with Amsterdam. Sorry. Oh, hey, question 3. Where was the first stock exchange in the US? A, Boston, B, New York, C, Philadelphia, D, Washington. We're just getting right into it. Where was the first stock exchange in the US? Boston, New York, Philadelphia, or Washington, D.C.? I see a lot of B's. I saw a lot of B's. But that's not the correct answer. The correct answer, writing the person's name down now. What? Uzair? U-Z-A-A-I-R? Uzair? The correct answer, E. Yeah, no. Uzair, yeah, there you go. The correct answer, I saw him get it right first. Philadelphia. Philadelphia had the first stock exchange in the U.S. Now, obviously, the biggest is the one in New York. However, Philadelphia had the first one in the U.S., founded in 1790. Wink, wink. Wink, wink. Founded in 1790. Question number something. 4. Question number 4. What year was the New York Stock Exchange open? Was it A, 1800, B, 1792, C, 1920, or D, 1789? New York Stock Exchange. When did that one open? Looking through. Oh, I found on my end the person that got it right first is a live stream regular. I recognize you chatting in the chat a lot. That would be Max B. Max B, congratulations. You put B first. 1792, 2 years after the Philadelphia Stock Exchange. We are way past that, my man. We are way past that. All right, that was question number 4. Oh, I got to reveal the answer. There you go, B, 1792. Question number 5. Sean, again, what you see on your end is not necessarily what I see on my end. On my end, I had Max as the first one. So I apologize for that. Max, congratulations. Your name is now on the wheel. This was question number 4? Yeah. All right, question number 5. Here we go. What was the first stock traded on the New York Stock Exchange? The first stock traded on the New York Stock Exchange. Someone said S&P. No. Oh, I see it. Wow. Not only do I see it, but guys, I gotta be honest. If we're going off who got it first, Don't hate the player, hate the game. Avalanche. Twice on the board. Avalanche. The Bank of New York. The Bank of New York was the first stock traded on the New York Stock Exchange. Avalanche. Twice up on the board. Congratulations. Avalanche must have really good internet. Avalanche has got some gig speed internet because he is quick with it. Don't hate the player, hate the player's internet connection. All right, that was question number 5. Here we go for question number 6. Oops, that went backwards. Sorry. Question number 6. What was the first known stock ever traded? A, the Dutch East India Company. B, the French East India Company. C, the American East India Company. Or D, the Danish East India Company. The first known stock ever traded. Answers flying in. Flying in. If I'm being completely honest, I think I remember what the correct answer is. We've got answers in. I see A's, I see B's, I see C's, I see D's. The correct answer, we're going to find out together. I think I know what it is A, the Dutch East India Company. And on my side, the person that put Dutch East India Company first, another live stream regular, Zorro. Zorro, congratulations. You got Dutch East India first. Him and Luffy are going to be using the Edge Finder together. We should tell the user not A or B. Zorro got it on my end. Zorro typed out Dutch East India before somebody even typed the letter A. It's just what I see, people. It's just what I see, people. Look, you got to think, when everybody's typing all at once, all those chats coming in all over the world. We got viewers from all over the world, people. You got to remember that. I just see what comes in on my end. All right, that was question number 1, 2, 3, 4, 5, 6. We have 4 more to go. 4 more to go. Question number 7. It keeps going backwards. Question number 7. Donald Trump was just elected president of the United States. What number president was he the first time? The first time around. The first time Donald Trump was elected president, he was president number. It's already come in. You've got to be kidding me. All right. I have to make an okay. Avalanche, are you in the room behind me or something? Not only listen, this is what I got on my side. 45, 45, 52, 454, and then he typed 47 even before all you other people could even answer. The correct answer is 45, but Avalanche, to be fair, you must live inside of Google headquarters with the fastest internet in the world. So the second person, you've already got your name on the board twice. You can't be mad at that. The second person on the list, Saphir, number 45, that is correct. Saphir, congratulations. You got 45. Avalanche, how much do you pay for your internet connection? Max says, he says Saphir first. Well, Saphir, you got your name up on the board. because Avalanche, I'm not going to accuse you of cheating, but I've got my eye on you. iPhone hotspot? Bro, what? Are you sitting under a cell tower? That's crazy. That's crazy. All right, but yeah, the correct answer, he was president number 45. He is now also going to be president number 47. Funny how that works. All right, our next guest just joined, so I got to hurry this up. We got 3 more questions to go. Question number 8. Question number 8. Who was the last president to serve 2 terms as a president? Trump is not technically the right answer. He is a 2-time serving president, but he has not been elected yet. Who was the last person to serve 2 terms other than him? Biden. Nope. Oh, wow. Wow. Look who it is. I put Avalanche's name up on the board twice. I said I wouldn't do it 3 times. But on my end, Saphir, 2 questions in a row. Saphir is correct. Obama served 2 terms as president. Congratulations, Saphir. Most of y'all knew that question. 2 spots to go. Avalanche, you are done. Saphir, you are done. We got 2 more spots to fill. Here we go. Coming up next, question number 9. And we just talked about this one. Oh, Obama. Question number 9. What is the name of A1 Trading's newest product? I just talked about it. I gave you the option between the Edge Finder and what? What is the name of A1 Trading's newest product? I heard Chandler laughing about this through the door. I'm going to count it because you are correct. Even though you typed it so fast, you spelled it incorrectly. I understand what you were going for here with the socked box. You were trying to type out stock box. I'm going to count it. The correct answer is stock box. And if I'm not mistaken, yes, Uzair is also on the board twice. You guys are quick. UZAAIR. Stock box. All right. Last question. Let's just get right into it so that we can go ahead and spin the wheel. Last chance to get your name up on the wheel. Question number 10. Question number 10. What is the name of TraderNick's video editor? Go. Obama? No. Avalanche. You are too quick. Saphir. All right. All right. I don't know. I don't know how it's possible that Avalanche and Saphir both said it first. Again. They were correct. I'm not putting their name on the board. The unfortunate part is the next couple of people to put it up on the next couple of people that got their comments in, you got it wrong. We had Avalanche say Chandler. Saphir said Chandler. Shani and Basha said James. Yes and no wasn't the answer I'm looking for. Sam, no. Frank, no. Chandler, yes. Chandler, congratulations, Eric. Eric Holmes has his name up on the board. All right, so here's what we're going to do. I'm going to spin the wheel. These 10 spots, whoever gets it right, we are going to take your name down and we are going to drop a link for you to message our. Do we want to message or do we want to do email? I don't know which is better. Let's spin it and then find out. Please be one of the 10 names. It's going to be Uzair. 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 Yep, Uzair, that's you right there. Uzair, congratulations. You are the winner. We are going to drop a email. We're going to drop an email for you to email in. You have your choice between the Edge Finder or the stock box. Are we doing support at a1trading.com? I forget it. There's an email. We're going to drop it in the chat. There you go. Yeah, support at a1trading.com. Uzair, email in support at a1trading.com. No one else try and do that because your name is not Uzair, and we will double, triple confirm, check that Uzair is getting his prize. You get your choice of the Edge Finder or the stock box. I have taken up too much time. We are going to transition now to Cameron right after this really quick break. Congratulations, Uzair. Guys, don't go anywhere because we are getting right back to the charts right after this.
Looks like we're receiving a transmission. I think it's an alien, which is pretty cool.
Okay, all right, I'll go check it out. Beam me up. Whoa, hey guys, I come in peace. Hey, you're back. What happened? Well, they gave me this.
The A1 Trading Stock Box, an advanced market scanner of top stocks, ETFs, insider trades, and analyst ratings. Unbox smarter insights and discover opportunities with powerful data at your fingertips. Get your stock box today with our out-of-this-world Black Friday sale happening all month long.
See ya. See you later.
All right. Good afternoon, everyone. My name is Cameron. If you haven't met me yet, from Traders Network Club. And for the future traders, we're going to go ahead and break down NASDAQ, look at NQ, and see what type of setup we had this morning, the setup that I took this morning, and kind of just do a little breakdown of, price action. So let's get ready. All right. I'm going to scoot a little bit over here so you can see me a little better. All right. Let's get started. So looking at NQ, looking at the 1 hour just to get my higher time frame bias this morning. We came back into a sell side imbalance, buy side insufficiency. We took out this internal high, and I was looking for a price to kind of run lower today. Okay, so going back to the 50-minute time frame, when we saw, let's go to the 5-minute actually here. First thing I noticed, you're looking at my kill zones here. Yeah, we had this London low. This is where I had my eye on this morning. Okay, I'm just going to mark that for you. So going to the 5-minute, now going to the 1-minute, there was sell side liquidity here at this London low for the morning. 9:30 opening bell. Okay, right here. We start creating also this low resistance, relative equal lows. These are key areas that I'm looking for, right? So we looked at the higher time frame. We saw that we ran into that sell side balance, buy side insufficiency. We delivered buy side, took out the internal high. And then I was looking out for a price to kind of hunt sell side. And we had this PPI this morning. So we had some manipulation in the morning. So we kind of had to wait, right? Wait for the storm to pass by. We don't want to be trading during that time because we know how manipulative it can be. So waiting until 9:30 opening bell. There we had the 9:30 open. And let me go and zoom in right here so you can see. All right, so this is what I took this morning. So here we had 9:30 open. We had a bullish candle. Okay, retrace back into this buy side balance. So I want to look at this buy side balance if it's going to hold or not, right? I want to see it act as an I want to see price disrespect this range, okay? Come back to this area and then run through it because I'm bearish. I want to look for a bearish setup this morning to those London lows. So here's my buy side balance, and I want to see how price reacts in this range. So what I saw was, if anyone watches ICT and what he talks about, there was a 22 model setting up right here that I saw. And what I saw here was price came back, retraced into this buy side balance. Then we retraced back up. We took out this internal high. So this inducement was taken. And when I see this, this is engaged buy stops up here. So when I see price come up here, take out these buy stops, these engaged buy stops above this internal high. Now I want to see how price reacts after that. If we can see some displacement to the downside, that's exactly what I'm looking for. So when I went to the 5-minute, okay, I was looking for a change in state delivery, and I wanted to see price run through this low right here, the body of that candle. And this would confirm that we've seen a change in state of delivery to the downside, and we'll be hunting these liquidity, okay? So going to the 1 minute, okay? Yeah, we had that change in state of delivery. We also saw this run here. So we could have took a trade, and I didn't. I wasn't too confident to go into this trade yet. I wanted to see a little bit more what price wanted to do. And once price kind of broke below this, right here, this candle, that was kind of indicating we took out these lows and we were hunting that London low. Then what happens, we create this sell side imbalance, buy side insufficiency. So I wanted to see buy side get delivered to this range. And there it is. Price comes to this buy side right here, and then it runs lower, okay? So this could have been a nice partial that we could have taken a trade into this buy side balance and running to that London low. Now, that's not what I took, okay? Then I waited and I said, okay, so we see a change in state delivery on the 5-minute. Going back to the 5-minute. Look at this change of state delivery right into these lows. What do we have below here? We have relative equal lows. And this is what I was paying attention to. These relative equal lows. I'm very glued to areas where I see price creating relative equal lows and relative equal highs. That's where I expect price to draw to. It's a magnet in the market, and I'm expecting that to be the draw of liquidity. So going back here to the 1 minute now, there's those relative equal lows. First thing is we had internal high taken, and then we had that change in state of delivery to the downside. That confirmed that we're going to possibly run lower to these relative equal lows here. And that was going to be my draw of liquidity that I wanted to target. So where would I expect for me to get in to target this range? Okay. Well, I can look for, wait for price to come back to a discount array. A discount array is where we want to buy. This is our buy side imbalance. Okay. So price does come back up here. But what else I'm looking at is this is a breaker block here as well. Okay. This up close candle is the most sensitive area that will act as a breaker block. And I had two confluents to add to this. I had this buy side imbalance, sell side insufficiency, right, a BTC. And then I had this breaker block. After referring back to that, we had a change of state delivery to the downside. We have these relative equal lows. So what did price do? We came back, took out these London lows, okay? Then we retrace back into this breaker, okay? This is where I intended to enter, okay? Targeting at that constant encroachment of that gap. Most likely I took it here at this low of that breaker block, okay? That first up close candle. Why is that a breaker block? Why is that a breaker block, right? I'm sure a lot of you are probably saying, well, what is a breaker block? Well, look at market structure here, okay? We're at a higher high, lower low, higher low, okay? And then a higher high, taking out this high, and then price broke below this low, okay? So this, from this high to this low is actually indicated as our breaker block. So we can see price run up all in this range right here. But when I look at the 1 minute, I'm looking at the first up close candle. Okay. The first up close candle, which is actually, I have it wrong. It's this up close candle right here. Because it's this range right here. Okay. We never took out this low. We took a higher high, higher low, higher high, and then we took out this low. Okay. So that is my breaker block right there. Is this first up close candle. And that's where I looked into right there at that low of that body of this up close candle right here. Okay. That is my breaker block, which adds confluence that it's lined up with this buy side imbalance, which is actually called a unicorn setup here. Okay. Which is very highly with high probability of this trade working out. And I would probably, and I had my stop loss above, a tick above this high of this candle. Okay. This is the setup that I'm looking for. Okay. This is a 22 model. We had engaged buy stops taken, change state of delivery to the downside. Price came back into a discount rate. And then we target those relative equal lows. So high probable setup right here, 22 model. Okay. You can look up ICT. He talks about this in his 22 mentorship. Very, very easy setup right here. And then we kind of just had high resistance liquidity all day, which most likely I'm not even looking to trade high resistance liquidity. Wasn't that great price action this morning. And you can see very choppy, right? No low resistance, high resistance liquidity. Now, what happened here? So price took out this low. And this was another market maker model setup right here, sell side of the curve. Because what? We're bearish. So what are we looking for? Price comes and retraces back to what? This breaker block. There it is. And now looking at the 5 minute, we'll use this whole up close candle right here. Price trades into it. Look at the bodies. The wicks will do the damage. Not worried about what the wicks are doing. I'm looking at how the bodies respect this range. And then we go and we add a middle line here. Midpoint. Look at that. Again, price respecting the mid of that breaker block. Okay. So mean threshold is respected of this breaker, which is the middle of that breaker. And that's what I'm looking for. If I'm looking, if I'm looking for more bearish sentiment, I need to see is price respecting those areas. That's key to me. So going again now to the 1 minute. Yeah, we had price come back into this breaker. Okay. Well, actually came back up into this breaker here. Then we had some displacement out of it. Okay. I want to see engaged sell stop. All right. Oh, sorry. Buy stops. I want to see engaged buy stop swept. Bam. Why do I want to see that? Why do I want to see that, right? Seeing ICT trade on TraderNick stream made my year. So, why do I want to see that, right? Well, that's important. I want to know that liquidity has been swept on the buy side. I want to know buy stops have been taken before we run lower, because what we get here, we get traders that come in here and they see this move, okay, and they want to get in these shorts, and they got their stops above that high. And I want to see price come back, take those traders out, and then look for the downside move. But I'm waiting for what? If we're selling, I'm waiting for premium arrays being respected. Okay. So again, I think I used the wrong word. I said discount arrays here. This is premium arrays. Sorry, my bad. I might mistakenly said that. If we're looking too short, we want to see price run into a premium array, not a discount array. So I might have said that wrong. My bad. So what do we see here then, right? Buy stops taken. Now I'm intrigued. Okay, now I'm intrigued. Do we see a sell model setting up, a market maker sell model to back to this low? Let's wait. Do we see that set up? Let's first wait to see these premium arrays be respected. Yeah, we have just a little jump there. Yeah, we had a run to the downside. Okay. What happens? Price retraces back to what? the breaker, but also we see this bearish order block. Okay, a premium array. Oops. Okay, price comes back lower, retraces back to what? This order block right here. And then we see this run again with insufficiency. Now, this would have been where I would want to take a trade. This right here, we had another sell side imbalance here. Buy side insufficiency. So what I would want to see, if I wanted to get part of this trade, if I wanted to take a trade here on this market maker, right? I'm seeing, okay, the premium arrays are being respected. That's important when we're looking for the trend of the model. Which ones are being respected and which ones are being disrespected? The premium arrays are being respected. We're running lower. We're bearish for the day. So what I'm looking at this and saying, okay, when we had this run to the downside here, we saw these order blocks get respected. Price has a chance to run to any of these premium arrays. It could run here. It could run back here. I wouldn't expect it to run all the way back here, but it could run back to these premium arrays before running back to sell side liquidity. Did it do that? No, it didn't. And unfortunately, that's fine. That's fine with me because I'm not looking to get in the money, right? I'm looking for price to give me what I'm expecting. So those traders that are like, oh, we want to get in here because we know where price is going. That's not where I'm getting. We had this move to the downside. I'm not looking to trade price when it's that low, right? I want to see price work its way back to at least back to above 25 to 50% here. Okay. And we'll actually have it backwards. 75% and 20 and 50%. Okay. So I want to see price work there. So when I saw this price working its way, what I wanted to see to take this trade to sell side is price come here, create another low, relative equal lows, then run and see a stop hunt. When I have received that stop hunt and we've run back to a premium array, I want to see how it respects that premium array, and that's where I can sell back to this sell side liquidity. That to me is a high probability trade, not chasing the money. Okay. So looking at the market right now, let's just take a look right now what we're expecting here. Where the run to the upside, came back into this insufficiency. So we came back into this insufficiency after we took sell side. So then what we see now, I run to this low, engage sell stops. Okay, I'm going to do this. And I would be done for the day, right? To be honest, this trade right here, that's all I need. I'm done for the day, right? I'm just showing you what the market's giving us, and we're just kind of analyzing it. So we're going to analyze this last part here. So looking at this right here, sell stops have been taken out. What we see, a run to the upside. What's being respected? There's a buy-side imbalance. Price didn't even touch midpoint of this. This is institutional order flow drill, okay? ICT talks about this. Again, right here, buy-side imbalance. So this, when you see this and then you see another run of insufficiency here, this is a trade opportunity right here, entry right here. And you can target this high. You can target insufficiency, right? Right there. Target that. And you can maybe leave a runner to see if price wants to come back and actually take out this high. But because we're bearish, I wouldn't expect price to run all the way up here. It possibly could. Possibly could, but we're seeing an institutional order flow drill here. Price is running pretty hard. Okay. Look at this. Another imbalance here. Look at the bodies. Not even coming into this. Is there a volume imbalance there? No. Look at that. Price is not even coming into those ranges. So you can see we're running pretty bullish. And if we wanted to trade to any of these highs, I think I would have just used this sell side imbalance here as my target, and I would have waited for more confirmation. Now, what we see here was perfect. Another 22 model sent up here. Perfect. What do we see? A run of engaged sell stops, change in state of delivery. Okay. The 5 minute, you can go to the 5 minute. I like to get more confluence looking at the 5 minute. Sometimes we can get manipulated looking at the 1 minute of change state delivery. There's the 5 minute. It shows you the same high there. So what do we see? Sell stops taken, change in state delivery. Where's our discount array? Right here. This is where we'd enter. And we'll target. Relative equal highs is where I initially want to target. So we don't really have relative equal highs here. So we could look for the sell side imbalance here, insufficiency. And maybe price has room to run to this high where you can see this is a lower high. So technically this would be right here, relative equal highs. So price could run here. But you gotta take your money when you can, right? That's why when I'm trading, I'm taking partials, I'm taking exits here, taking exits at the sell side balance, insufficiency there, and then you can let a runner to that high. But this is price action, guys. This is how the market works. It's an algorithmic. Okay. It's an algorithm that moves the market, not buying, selling pressure. So yeah, that's pretty much it. I don't know how much more time I got. If I do, we can take a look at the dollar real quick and just end it with that. And looking at this 4 hours, let's actually go to the daily here, and you can see we're kind of trading in this range. What did we create? Relative equal lows, relative equal highs. Okay, interesting. So anytime you're in a situation like this where you have both sides that create relative equal highs and relative equal lows, you most likely want to just sit back and just watch price action and wait for price to take one of those sell side or buy side liquidity, right? So I'm waiting, and I'm potentially saying, okay, well, we have this insufficiency here. Okay, sell side balance, buy side insufficiency. I want to see buy side delivery in this range. So we have these relative equal highs up here. I'm expecting we continue to run up here, take out this buy side, and run into this insufficiency, and then we can possibly see a reversal to the downside. So I think we're going to see a short-term rally in the US dollar, but I think we're due for correction eventually after we run into this range. And where did I get this sell side balance? This weekly. So that you can look at the weekly as well. Okay. And you see this run up here? This run up here, we took out all this relative equal highs here. Okay. We have relative equal highs up here as well. So that's something to pay attention to. This is the weekly. So I'm just looking at the longevity of what we can expect in the dollar. Okay. I would like to see price run here and manipulate these lows before we even want to run higher. So I'm looking at this internal model here and saying, first thing I want to see, though, is what price does in this sell side balance. That's key. Midpoint, if we can respect that and not even get our bodies of these candles to touch that, then I would expect that we could possibly have a run to these relative equal lows here, or we can just rebalance this price leg. Okay, this range right here, I will look for a rebalance to equilibrium. Wait, Cameron, are you a purely technical trader? Absolutely, absolutely, man. I mean, I intraday trading, so yes, I need to know the technical side for sure. Obama. What are you talking about Obama for? So yeah, that's pretty much it, guys. I mean, do you guys got any questions? Just this is how I understand price action. Okay, understand the algorithm of the market and how it moves, how these market makers and smart money, how they manipulate the market and how they take advantage of this. To me, it's important. I've done a lot of different types of trading, and this to me is it makes sense. Makes sense why the markets move. Okay, a lot of people like to use fundamentals. As an intraday trader, I don't care at all what the news, right? The news drives just kind of pushes volatility in the market for me. That's it. What's your entry model? Well, the model that I just showed you on NQ, that's a 22 model. Okay. 22 model from ICT. You can go and check out his mentorship, his 22 mentorship. He talks about that type of model, waiting for those engaged buy stops, sell stops to get taken, and waiting for that change in state of delivery. Once you receive that, then you're looking for a premium or discount array for your entry. It's very simple. It's very simple. And you can go ahead and look at NASDAQ as much as you want and look for these entries. Now, I have many models that I trade, okay? Depending on what time we have, I have another model that I trade from 7:30 to 9. But we had manipulation news today and yesterday, PPI. When we had these manipulation high impact news at 8:30, CPI yesterday at 8:30, I'm not trading till after that, okay? Now we have high impact news tomorrow at 8:30. I don't mind trading this. This is to me not too, you're not going to see much manipulation for this, right? It's the CPI and PPI that I'm not going to be trading during that time. So I have many models. Do you have any channel? I don't have a channel that talks about this. I am looking to create a channel. I will be doing that very shortly. So we do have a channel with Traders Network Club where we talk about Forex, but not necessarily futures. And I'm going to create my own channel and start talking about futures. So when I do have that up and running, I'll definitely let everyone know. But that's it, guys. Hope you enjoyed that session. All right.
Get over here. Come here. A little closer. Come here. Gotcha.
Like that little promo. Good stuff. Today, hey, welcome back. Well, for me at least, welcome back. Happy 1:30 p.m. We've had a little bit of a directional day. It's kind of like the market just wants to tap the lows, and kind of work its way back off those lows. So we are at fresh lows for the week. I think the SPY has been from top to bottom down about $6 now. So we're down to 635 is the length of our weekly move. Still about actually less than half of what the 14 period ATR is. A lot of that was kind of skewed because of the election candle being so big. That was a $28 move. $31 move. I stand corrected. So we're sitting here just kind of making some slightly lower highs, lower lows. I will float out my big old liquidity levels again. I'm noticing that my 595, 594. Let me see if in my alerts here, I do need to make a quick update. So I did a butterfly spread. I added that in. I did a butterfly spread in the queues, added that in. That one is, that's going to be a reply. All right. So I'm just going to do a quick update here. SPY updates. I had an 11.8 buy 600 call, expired, worthless, for 38-cent loss. The 11.15 buy 595 put was a 78-cent debit, closed for $1.70 credit. The 11.15 buy 594 put, that was a 60-cent debit and $1.35 debit for a net cost of 98 cents. closed for $1.25 credit. Quick updates there. So just updating some short-term long options trades. All right, so that's updated there. I have I'm kind of all over with some scattered, some very inexpensive plays. I'm trying to see if the market's going to cooperate and find me something that I like. So I put in a SPY trade right here. This is a butterfly spread. So I'm doing a trade that looks like that. If we get close to this window, which is the strike price around 590, I can turn roughly a 33-cent debit into hopefully 67 cents, or maybe 90 cents, maybe over $1. My max profit would be about $2.70. So I've got a 9-to-1 potential on the trade. If I'm spot on at 590, that would have to be towards the close tomorrow. But even if we are getting a trade that's out of the money, and by tomorrow we get into that window within like 591 or 590, we go after that big liquidity level and hit that strike price, then hopefully we can just kind of continue to topple over a little bit, maybe fill this gap. This gap would be from Wednesday to Thursday, and that's a 593 to 592 gap. So if we fill that, obviously I'd love to go a little bit lower towards the 590 strike, but if we get within that window and I can make a 100 to 200% gain or return on risk, I'll probably end up taking some profit there on the SPY. The Q's unlikely to hit 515 today, so I'll take a very small loss on that. Markets are still just doing their thing. I added a trade in this morning on Coinbase. If you saw that in my Pulver alerts, I added in a 111 trade. That's just a fancy way of saying I want to own the shares, but I'm willing to own it, and it's a lot lower. And also, I can use kind of a bear trap scenario. So let me actually show you what this trade looks like. I'll park this up here. I'll build out this trade risk graph. And let's float this down here. So I'm going to put this in on Coin. Okay, so Coinbase got the feed. And let me go into my StreamYard here. There we go. Now I've got the comments. All right. What are you asking me, Michael, for back testing? Was that question for Cam or is that for me? I mean, if it's a SPY trade, I'm usually within a 0 to 4 DTE. It's difficult to backtest when that trade isn't guaranteed every week. I've got to really let my software, fill up those order flows, get those gamma levels, liquidity levels, get everything that it's basically lined up, and it's like my visual roadmap, and that happens, maybe once a week. So if I get a good trade, I take it. Right now, I've got a live tracker going for, I think I've got like 80% wins right now, 81% winners. And usually they're over like 50% return on capital, return on risk. I've got several that are over 100% return on risk. So, but like I said, that's like a 0 to 4 DT type situation. The butterflies are actually pretty easy to turn into profit. If I'm out of the money and I'm even remotely right in direction, I can turn a butterfly spread that cost me maybe 20 to 30 cents. I can turn it into, 40, 50, 60 cents. So anyway, just a variety of things, which is why with my Pulver alerts, I can do stuff like that because it gives me the freedom to kind of trade whatever strategies I want. So that's why also with the bundle, I threw in a practical options course, which is 13 of my favorite strategies. And, give that to you if you are a gold member or getting my Pulver alerts. All righty, let's go edit spread. Let me find this trade. I believe I created a 3-piece trade. It went out to January 17th. On Coin. So I know that I bought the 220. I bought the 220 put, and then I sold the 210. I just want to show you what this looks like on the risk graph. So I bought the 220, I sold the 210, and then I'm selling the 200. And that is it. So that is a 111. This is what the trade looks like. This would be my real price of the trade. So live price is right here at 285. I have a profit trap that goes all the way down. That is not correct. That's interesting how this doesn't read it the right way. That's kind of strange. There should be another risk piece here, but let me just at least walk you through this risk graph. So if I build the trade, here's where current price is at. If price goes higher, actually, you know what? Did I build? Oh, never mind. I got the wrong strike. Make this a put, and then everything looks good. There it is. Okay. So this is the trade. Here's live price. Okay. Now you might be asking, like, oh my God, that's a crazy amount of risk. Yeah, I mean, there's undefined risk on the sell put if price were to drop all the way back below 186, which would be a massive discount. So I'll show that in just a moment here. But basically, the trade looks like this. Right now, the trade I got filled for $3.33. I posted this in the Pulver Alert section. So if price just stays where it is, goes down a little bit, goes up a little bit, goes up a lot, I still make my $3.33 credit. So on a one contract trade, that is $333 of income. If price were to fall lower, I have a trap here from 220 to 210. So from 220 to 210, I have a trap, okay? And that would be from 220 to 210. It ramps up my profit potential, and then I have the trap plus the credit. So my max profit in the trade would be if price is right here, which is greater than 200, okay? But it is less than 210. So if I'm in between $200 and 210 by expiration, I keep the $3.33 plus I keep the $10 bear trap on my put spread. So I can make $1,333 a contract on this trade. And if I own the shares, which I'm willing to own the shares of Coinbase, I would own the shares at 186.67 because I'd be taking the ownership at 200. I take off the $10 for the debit spread. I take off the $3.33 for my credit, and that's $13.33 minus that, which gets me down to 186.67. All right. Now, again, that might be like, this guy is insane. What is he doing? Look, I want price just to stay where it is or go higher. It's really that simple. Okay. So if price on Coinbase just stays where it is, then the goal of the trade is to generate the $3.33. The goal on this trade is to generate $6 and change. The goal on this trade is to generate $3.95. I mean, I can take the shares of Coinbase, but do I want them? Not really. I want to see if prices break, retest, stabilize, and go back up. If we go higher, I just want the income. So there's, $4 here, $3. Actually, it'd be $4 here. There'd be $6 here. There would be $3 here. So that's $9. That's $13. So almost $1,300 per contract with zero ownership. That's what I'd like to see happen. Now, if I were to own the shares, okay, if I were to own the shares, then I would own it at 186. I would quickly work the cost basis down, and I would own the shares at 186, which would be a discount, by the way, of around 44% off the recent highs. So is it possible? Sure. But I look at the way Coinbase has been behaving. Same thing with MicroStrategy. I'd like to see MicroStrategy possibly have a move like this. We have this huge rip to the upside. This was moving in anticipation, possibly of Bitcoin surging. And Bitcoin obviously broke higher, but MicroStrategy has been outperforming Bitcoin in a pretty big way. I still wonder if this is a high, low, lower, high, lower, low. And if this settles back in here, I may start looking at the same type of trades on MicroStrategy, but getting it back into this level as long as I look at considering ownership below $200, or I just dollar cost average. I can get here all these fancy trades with options, but if I'm truly not willing to own the shares of MicroStrategy, then I don't want to take these trades. Okay, what I'll do instead is if I like the shares, then I'll just buy $1,000 here. If it goes lower, I'll buy $1,000 here. I'll just dollar cost average into some small levels, right? And if that works out, great. But I'll keep an eye on this. Talking about Bitcoin, we're at 89. There's still a lot of chop here near the highs. We've stretched up to a spot price of 93,564. Could we pull back a little bit? Sure. I kind of hope that we do. I hope that we have just in a little swing, from this kind of election move. I'll put this up a little bit higher. If we pull back into like a 30 to 38% window, pull back maybe the 50 to 61% window, I would gladly look at adding some exposure with some of those correlations that I have here. So, I mean, Bitcoin, I have BITO, IBIT, FBTC, MSTR, Coin, and then, Ethereum is my spot price as well. So hopefully Ethereum does the same thing, kind of rip up, pull back, and then head higher. If my credit spread here on EETH does the same thing, that looks pretty good. Copper, I am glad I actually canceled this trade for us in the Pulver alerts. I was looking to get in here for a bull call spread. I didn't. I'm glad I canceled that because I was concerned that this China stuff might end up fading, which it is. Here's China right now at a glance. HSI was down today almost 2%. Alibaba, Baidu, FXI. Baba, by the way, has earnings tomorrow morning, and JD had earnings overnight. They missed in revenue, if I'm not mistaken. So they missed in revenue by about 0.25%. Again, if this is a rip higher 1, 2, 3 correction, I would like to see it stabilize in here. I made an executive decision last week, and I did lower my cost basis aggressively. So now my covered call is around 37. I can confirm that. Maybe it's 40, but I think it's 37. Let me double check that. So JD, and let me have a look at my trade. So I've got a covered call at $40. That's out to the end of the month. My cost basis has now been lowered. Let me find exactly where that is. So here, JD. Got to go to the old personal tracker. My break even is 38.30. So 38.30. It's $4 lower, but this is what I'll continue to do this. I'll just continue to work my cost basis lower and turn this into a repair trade. Initially this was, well, if this goes higher, get it called away at 43, never got there. Get it called away at 43, never got there. 42, never got there. 40, never got there. And here we are with a cover call at 40. But my break even's been lowered a decent amount. So I own the shares at 38.30. If it gets called away at 40, I still make money on it. After the 29th, I can lower it again. I'll do the same thing on Baba. I dumped some shares of BIDU today. It was a 110 by 105. I dumped that for a $2.65 loss, or a $2.35 loss. Yeah, because I took in 265 credit. Anything here on junk bonds? Nothing. Commodities, I'm going to wait a little bit longer. Mortgage hasn't done much. The yields have been dropping a decent amount today. So the 30-year yield down 1.5%, the 10-year yield down a tiny bit. This hasn't done any major damage to these previous lows, though. So I'm still watching this very carefully. The webinar that I did with Nick on the 12th, we talked a lot about this. I talked a lot about this. Look, this is not a good thing. Okay, if the yields go higher and bonds go lower, look, at some point the bond market's going to be at a cheap enough level that maybe it becomes attractive to buy, and maybe the yields end up hitting 5% and then dropping. What I was looking at here this morning for a little bit of reassurance is if we do hit a pretty big spot of resistance and the market's going to use, if yields are going to drop and bonds are going to rip higher, then it can happen within a couple of months. So, the reality is, I don't know how this plays out with a, 30-year mortgage on a home. I don't know how this plays out with variable rates on anything debt restructuring. I don't know how this plays out with financing an auto, or a car right now. If you're leasing or you're buying, it is going to be a major component to what our costs are moving forward. So again, I'm watching it closely. I hope we don't go too much higher than like 4.5%. But if we get to 5%, it's going to put a lot of pressure on equities. It will put a lot of pressure on equities, right? And I was just talking about this with a friend a little bit ago. I mean, look, I'm not saying this market can't go higher, won't go higher, shouldn't go higher, but it would almost feel a little bit better just to backfill some of this election stuff and then justify going higher, as opposed to we're so high going into the end of the year and into the first part of 2025. It almost gets me way more cautious going into like Q1, like March, April 2025, that sell and may go away type situation. This year we had a pretty decent correction in April, and then we had our summer vol event, So, I mean, if we were just melting up ridiculously through, let's say, February, March of next year, I would expect maybe that March to May window giving us a decent sized correction. Now, is it just that? Is it just a correction, or are we so far beyond these valuations and so high above these levels that it is unsustainable? And then the average, price to earnings ratio in the S&P is 17 and change, and we're trading at 24 or 25 right now. There's going to be a reversion to get this back in balance, But does that mean I'm bearish? No, it means that I'd like to see, can we get a nice controlled kind of orderly backfill here, find some past resistance, maybe test this election gap, and then see if the market wants to break and go higher. Okay, could I see us topping out for the year? Sure, we could just do a lot of this. We could do a lot of this. And then through the holidays, either there's a lot of profit taking that would ensure more of a sell-off towards the end of the year, or there's more of a melt-up. I really think this going higher or going lower is going to be based on the Fed in December. Okay, I mentioned this morning in the session. We had PPI data today, came in hotter than expected. We had CPI data yesterday, came in hotter than expected. We have PCE at the end of the month. I mean, the PCE is supposed to be the core reading, or I don't want to use core because that's thrown out there with core inflation. But the core PCE is supposed to be the primary data point that the Fed is using to say whether or not they're going to be restrictive or not. Okay, so if we're sitting at 4.5% Fed rate right now, with a core PCE of around 2.6 to 2.7, well, obviously the Fed can keep cutting, okay? But if they keep cutting while the yields are going higher, if they keep cutting while inflation is coming in hotter, at some point this is going to break, and we might have it be where inflation is creeping up high enough that the Fed is going to be considered no longer restrictive. And I mean, look, I don't think the Fed is stupid. Okay. I think that these are absolutely things they're watching and they're truly talking about them. I don't think the Fed's intending to cut rates and see yields go higher and then all of a sudden get to the point where they have to raise rates again. That would be a complete F up if the Fed did that for 2025. So, best case scenario, in my opinion, is that they cut rates in December and the yields chill the heck out for a second, and we still kind of navigate this like perfect scenario where it's a soft landing. That's obviously a lot to ask. So I think that there's a likely scenario here that the Fed cuts, they stoke inflation, things get rough, and they look great through 2025's Q1, but then the reality sets in maybe May to August, maybe Q3, Q4 in 2025 gets a little bit rougher. Depends on what these crazy, bubble up, melt ups look like. I also think there's a scenario where the Fed doesn't do anything in December and it really pisses off the market. If the Fed does not cut rates in December, I don't think the market's going to like that at all, because that would be a complete backpedaling from we thought you'd cut rates 3 times this year. You've only cut twice. And here we are in December and you're not cutting. Now you're talking about pausing through 2025. I don't think the market would like that at all. The expectations have already shifted from a 1% additional cut in 2025 back down to like 0.4%. So there's only anticipated to be like 2 cuts through the end of 2025. If I go out to December right now, I want to see where we currently are. We are currently at 4.5 to 4.75. If I go out to the end of December of 2025, where is that current rate? Okay, that current rate is anticipated to be around 3.75 to 4%. So that's another 75 basis points lower than now. Okay. Now, do they have to cut in December? Of course not. They can cut, another maybe in January or March. They can cut again maybe in the summer, and they can cut towards the end of the year. So, I mean, 1, 2, 3, and they let it be kind of data dependent. They can do whatever they want, but that's what the market's anticipating. All I'm saying is if this doesn't change, okay, if this doesn't change and the Fed decides to cut in December and then pause, then all of a sudden we're going back up, and that would make our rate 4.25. And if this all of a sudden starts to shift higher, where this gets higher probability, then that means that the Fed is essentially cutting 0 times in 2025. And I don't think the market is going to like that. So just some things to be aware of. That is all I'm saying. Okay. All right. So there's some Fed talk. I actually did a lot of analysis this morning, so I'll take some more requests if you want to revisit some things. I did add a position in GLD this morning. I just bought some more shares. I bought at 237.25, pretty much trading the same price right now. If it goes down a little bit lower, I will likely either buy some more so I can just own it, and I'll also add in another contract. And this is a one contract here. This is a credit spread out to January 2026. If we fall to my 144 or my 200, I will be looking to add probably a similar trade here, but doing 2 to 3 contracts. I could see gold after a really nice bull market. I could see it going sideways. Okay, I can see our markets, the US markets, the equities markets, after a nice bull market going sideways. Okay, we're so conditioned for YOLO direction. The market can't stop going up, blah, blah, blah. I mean, a normal range of 5 to 10% would really make it boring, but it'd be great to trade it. I just don't think a lot of people would like it. You know, I'm really interested to see how the next, 12 to 24 months play out, because it just seems like the market never wants to be sideways. And yet that could be the furthest thing from everyone's mind. And that could be the most disappointing year ever, is if the S&P goes up 0%, right? It goes up 5%, then down 10%, then up 5% or 10%, then down 10%. And we just have this big, nasty range that has to justify either higher valuations or we obviously break down and things get worse. But I'd be curious to see what the technicals look like. I mean, obviously, I had a crystal ball. I'd share it with you, but I don't. So what else we have going on here? What are the charts you want to take a look at? Do we have any news today? I know we had a Fed speaker today. I don't see anything here. What else is on the docket for today? We've got Fed members speaking at 4:15. Yep, Powell speaks at 3 p.m. What the heck's this guy doing? Fireside chat. Panel discussion titled Global Perspectives at an event hosted by the Fed Reserve Bank of Dallas. Audience questions expected. Okay. So, yeah, there might be some comments. There might be some comments towards close. We'll see what Powell says. I mean, September's rate cut, he pretty much took a victory lap on inflation. I don't think they can really do that now. Right now, it seems like employment data is okay. Inflation data, they can't justify that it's getting better. I mean, we're going higher month to month, year over year. And as he even said this last week, I mean, he said that, they look at 3 month and 6 month and 12 months and look at all these different metrics. Cool. But do you all see them going higher? Because we do, and the 10-year yield is calling the same thing. So, look, they know this stuff. They see this stuff. I'm really curious how this all plays out. At some point, a bubble, and I'm not saying we're in a bubble. I'm just saying that at some point, a melt up reverts. At some point, an inefficient market will revert. And here is an example. Okay, look at how far we are, by the way. Look at how far we are away from the 200 moving average. We are 10+% above it. Now, I could go back here into recent memory, and we probably rarely have a move of over 10%. Okay, this is a 10% move, 11% move, and what did price do? Price actually fell towards it during that July sell-off into August. So what happens here? Well, if we stretch up, we hit our 200 moving average, that's another 10+% correction. Could we get there? Yeah, we could get there. Okay, so I'm just saying, like, this is a well-cushioned bull market, but we could have some big, ugly swings with volatility. It's still very well supported, which is good. It's not necessarily turning into full-on bear market, but if we have a 5 or 10% correction, it's going to feel like garbage for a second, because the headlines are going to read, "Oh my gosh, the sky is falling." But if you go back into these levels, I mean, even this point, if you go straight down, we had about 10 to 11%. And what did price do? In April, we fell and found some support. How about some previous levels? Okay, from up here, we had about a 9% move away from it. And what did we do? We spent months falling to it. Okay, so all I'm saying is there will be times where this market gets long in the tooth. And look at how long this is. This is a crazy long stretch before we hit the 200. But every time we get these stretch away moves, that percentage was around 13, almost 14%. What did it do? It violently pulled back and found some support. Okay, that's all I'm saying. So in this current environment of 10 to 15% away from the 200 moving average, it wouldn't surprise me to see some ebbs and flows, some sideways movement, some reversions, just to find a little bit more dynamic support at lower prices. Okay, now, like I said, if it's an orderly break, if it's an orderly breakdown, okay, fine. The problem with that is it usually never gets orderly. Usually it's like there's a bit of a dent. We go sideways for a little bit, we kind of roll over, and then a floor breaks, and all of a sudden we have a big fat sell-off candle, right? And then we have one more big fat sell-off candle, and it's like a freaking backstop V-bottom. So, I mean, we could go 5 to 10% in a hurry. It's just a matter of, does this actually roll over on itself, or is this just a sideways range that's going to end up breaking a bit of a floor? We'll find out. So, and here we are again, revisiting the lows for the day, possibly even carving out some fresh lows on the week. I'm still looking to see if my 593, 592 gap will get filled by either later today or tomorrow. I do have that 590 butterfly spread for that exact reason. So hopefully I can turn that into a bit of profit. And that's it. Okay. So what do I want to trade? Well, that's why I'm hedged on things like MES. Okay. So right now, my trade on MES, let me get this up here. If I go to MES, I have a long put at 59.82. Based on the debit that I paid, I'm essentially just relying on how fast can this backfill. And this is what I'm trading. So if I look at my MES right here, I'm up about $87 right now. Ugh, that's nothing. So I obviously need to see a little bit more excitement to the downside if I'm going to have this pay, maybe $500, maybe $1,000. So it's not like a full-on portfolio hedge. It's just there to help offset if we have a bit of a drawdown. Then we recover. I take any type of those hedge profits and just add it back to the bottom line. So it helps. It's just I want to keep an eye on this. Okay, so I'm looking to see if we fall back into some of these inefficiencies on the futures market, and also same type of thing. We stretched away around 10%. So last time we got up to those same type of highs, this was a 11.5% move, and we ended up falling back into this 100 moving average. We got stretched away here to around 11 to 12%. We had a big drop in July and August. Okay, that nearly touched it. So I'm just saying, just be mindful of that. These moving averages, they work. Okay, number one, they're dynamic support when the market's in an uptrend, they're dynamic resistance in a downtrend. And when they get really, really overextended, they tend to find this kind of magnetic pull. Like this area right here gets a lot more strength to pull price back towards it, because it's kind of unjustified to have price go too much higher without breaking. Okay. And I would say the same thing is pretty easy to see on something like NVIDIA. Okay, NVIDIA sitting here at these highs. We busted through these highs, but look at how close NVIDIA got. This was a stretch away move of around 45%. And what did we do? We reverted, pulled back towards that 100 moving average. So there's a bit of a correction there. This one, we got stretched away about 45%. What did we do? We pulled back towards the 200 moving average. How about right now? Right now, we're stretched away around 27%. So not quite as extreme as what we saw here on that big capitulation move. But I still wonder if we're going to go sideways, go lower, pull back a little bit. Look, I still like NVIDIA. We come back to decent support levels, I'll still buy NVIDIA. I'll still position for NVIDIA. I just want to see, can the market cooperate on the technical side? Okay. If you believe inflation is here, will the dollar keep going up? That is a great question. And I don't know. I don't know. I mean, I would think that the dollar, it's made a pretty good run. I mean, the dollar from this point, it nearly hit, it nearly hit my 100% measurement move. So this is the election candle right here. I'll box this in. This level, that's our election candle. And it broke out and just went straight up within just a couple of points of that 100% move. So, I mean, that's a good measured move. I'm kind of done. I didn't take any trades on the election with Forex trading. But I would say on the dollar, it's this. If the dollar breaks, okay, we have resistance here. Clearly, you can see resistance. If the dollar breaks that, there is a potential bear trap right here. Okay, I could see price coming back into this level. This would be actually, it'd be a bull trap, because the market would come up here, test this level, and then fail, and then we start working our way back down. So that to me is a bear trap scenario. Now, if we break and retest and break, and we're above this kind of 109 to 110 handle, then this dollar could be the greatest asset, the greatest comeback ever for a 2-year range. We just come all the way back up to the same freaking high. So what does that do? Well, that gives us obviously stronger dollar. That's going to wreak all sorts of havoc in the currency market. What does that do to gold and Bitcoin? I don't know, but I would imagine it probably brings gold lower, probably being silver lower. It may also have an impact on Bitcoin as well. I mean, that is, in a way, that could be the whole dollar milkshake theory playing out, where, maybe we start to look at credit spreads and they're starting to widen a little bit. You know, if that's the scenario, I mean, the dollar can get all sorts of strength when times are looking a little bit sketchy. You know, so look, I think the dollar right now, it's like, I'm not calling the top. I'm looking at a potential bull trap where the market comes up here and rejects or finds this big pocket and rejects. If I get a topping pattern on the dollar, I'm looking to short the dollar. Okay. But if there's no topping pattern and we keep making higher highs and higher lows, there's the move on the dollar. And nobody is expecting this to be the case, right? Look, when this thing broke out in 2020 and 2021, when this dollar ripped, look, equities were running like crazy until fall of 2021 into 2022, and the dollar murdered it when we actually had a bear market in equities. So do we have the same type of thing? I don't know. You know, like I said, if I had a crystal ball, I'd tell you. But where are we? Dollar index has a lot of history here, right? I go back into, let's go to the weekly chart. So dollar index, you know, could we go back up into multi-year levels? Yeah, sure. If we don't respect this resistance, we come up to here, you know, this level to this level, I would say don't fight the dollar unless you see something worth trading. So if I get a toppy swing trade I can take, I'll take it. But if I don't, it's silly to force a trade and call a top on the dollar. You know, at the end of the day, if all this is just a giant channel, then there could be runs, right? We could still run up to these highs. We get into this like 115, 120 area. Okay. Then I'll short the dollar. I'll short the dollar like crazy up in that zone. But I got to see a pattern first, and I don't see it. Okay. All right. So anyway, we got to keep an eye on it. I think at this point I can delete my measured move because it pretty much got there. So my measured move was 107.19, and the candle high was 107.06. So about 12 ticks or 12 pips off on a forecasted move on a daily time frame. Like, that's pretty close. So anyway, move is done. 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 Now I wait and see what's next. Am I interested in this area? Well, not really. Not anymore. So now I wait. Now what I'm going to do is I'm going to box in this pocket right in here. That's my next big gap to see if the dollar is going to continue to work its way up to that level. Okay. And time will tell. All right, man, there's clearly something going on at 594 today. That's the second time we tapped it on the SPY. This thing will just tap the lows. It's like a regular Chubbs Peterson here. Just tap it in, just tapping the lows and rejecting off those lows. So who knows? I mean, the floor is right there. Potentially that $6, $8 potential, weekly trading range. It's up for the grabs. I mean, we've got a $15+ move expected on the week. We've only gone about $6.35. So if there's any more direction by tomorrow, I would guess that the direction is likely to the downside. Okay, as opposed to, is it possible that tomorrow's news, there isn't really any? Are we going to get all the way back up to these highs? Probably not. So does this just keep, hammering the floor, hammering the floor, hammering the floor, hammering the floor? Do we actually break this and go lower throughout today's trading? Maybe. I mean, I kind of hope we can break the floor, make things interesting. All right, are we going to listen to Powell live stream? I don't know. I don't know if you can listen to him. Okay. Has Powell ever helped you trade in the past? When you listen to FOMC, does it actually help you trade? Probably not. You ever listen to Mario Draghi? Does it help you trade? Price action helps you trade, So, okay, so we're going live at 3 p.m. That's cool. All right. When do I need to be off here? Are we going live 3 p.m. for Powell? We got another guest coming on here in a little bit. I know it's been a bit of a marathon today on the stream, which is awesome. Hope there's been tons of great information for all you to soak in. Okay, let's go through some other charts. I'm going to do a quick watch list on the day. Okay, so we've got Tesla down. Let's go to the heat map here. Actually, let's go to advanced decline. So 62% of stocks declining today. We still have, this is interesting right here. We still have 52% of stocks okay, which isn't a ton. This is basically half the market. Half the market still above the 50 period, okay, and about 60% of the market is above the 200 period. So we're still in a bit of a healthy bull market above that 200 EMA or 200 SMA, but if we're starting to see that more stocks are getting below the 50 period, that just means that we're still in this pullback window. So the 50 period and the 200 period prices below that, either we bounce off the 50 or we get back above the 50. We need to bounce off the 200 to get back above the 50 for this kind of healthy buy market to be working and continuing to be maintained. Take a look at the heat map for today. So aerospace and defense, Lockheed Martin. These are all stocks I was looking to see if they would pull back. Raytheon, GE Aerospace, LMT. Take a quick peek at those. I didn't take any trades on these because they did have like blowout earnings, but I wasn't surprised that price went lower. So earnings right there, and it was a big old miss. It's down 70, almost $60 to $70 from the top. So, I wish I would have traded it, to be honest. I just want to do like a bear put spread or something like that. But I didn't. But LMT is down. We have the other big ones here, GE Aerospace and RTX as Raytheon. Let's have a look at those real quick. Raytheon. What? RTX. Yeah, the heck. There it is. So not RTX Corp, but RTX, that's Raytheon Tech. There it is. Why is that not a US ticker? Am I missing something here? RTX Corp, yeah, whatever. It's RTX. Boom. Down. Earnings. They beat. That was back in the end of October, and it was the top in the market. Okay, again, I look back at the same thing. Look at how this run was basically unchecked. We had some good structure in here. We had a bit of a bear trap. This market starts to get back above into a buy zone. We take out these all-time highs. Big gaps to the upside. We start to stretch further and further and further away, and we get a distance that is now unsustainable. So 15 to 16% overextended. We're starting to pull back. If you're waiting for opportunities to be in positions like this, these aren't bad trades, but risk defined to see, are we going to stay in a, defensives and aerospace and, military type environment? Those stocks do pretty well. Maybe, maybe. What was the other one? GE. Same thing. This one is stupid. Look at that. From December 2022 to now, ridiculous performance. Up 300%. GE. Who'd have thunk it? One thing you got to watch for would be this. What happens if we have a low here? We form a top. We work our way back down to the same low again. Could this be a topping pattern? Of course. Okay. Yen play is not ready. Nope. Probably never will be. The only yen play I'm interested in would be, and I'm honestly probably not going to touch the yen. But if the dollar yen gets up here again and we start to see more intervention, then look out below. If we see another big fat range, then I'll probably trade, dollar yen. But honestly, my favorite way to trade it right now would be, never mind the yen crosses in Forex, because I don't want to be flashed out in some stupid move. I would probably just take something risk defined in the Japanese yen futures. So if we come back down even remotely into this level around 0.006 or 0.0062, this is 6.3 versus 6.2. Let me set a chart alarm here. And we would be within, let me see what that is as a percentage. If we're back within about 1% of the lows, then I'm probably looking at something where we have some moves on the Japanese yen. Now, what I'm curious on is if I go out with a 6J chart, okay, let's say that I went out, I can go out to June of 2025. Is that enough time in this thing? I have no idea. But if I were to, prices going higher, let's say that I bought a bull call spread. If I buy here and sell here, I'm risking $260 to make $360. Do I like that trade? Yeah, I don't mind that trade. Okay, do I trust this trade? Well, this is the way I would take it because it's risk defined. There's no way I get assigned. To me, I can take this where, rather than being a Japanese yen where I'd like to trade it in Forex and I'm dollar cost averaging in small and I'm trying to build my position, potentially getting flashed around with interventions and all this other nonsense, I would just take a risk defined trade on Japanese yen futures and see if I'm right. Am I right? Well, if I'm right, I'll make a little bit of money, right? I mean, 362 out of a 262, I'd make 138% return on risk. That's decent. Do I love that trade right now? No, not right now. But if we came down a little bit lower, certainly more interested in seeing that this area over maybe a 3 to 6 month window could be profitable, right? If that's all we did here was this low, this high, we come back down to the same level again. I do something to find risk and we go back up into the halfway point or back up into here. So some big range trade happens. I would watch that. I would trade that. I do it risk defined. I take this with an Nikkei 225, which has been absolutely a snooze fest since all that crazy deleveraging happened in July and August. I mean, I'd like to trade something on the Nikkei, but it's got to be lower to me, somewhere in here. But I don't really have the privilege to trade the Nikkei the way I want to. So I might have to express that through Japanese yen futures, but I would not do that without crazy tight risk. Okay. So anyway, this is my 6J. There's where we are. Could we go lower? We could do all sorts of stuff, right? I mean, look, it could be this simple. Japanese yen could do this. We could spend months and months and months doing this. Guess what happens eventually? This market probably goes all the way back up here in some giant flight to safety. Go ahead. You can mark me down 11:14 at 2:13 p.m. that at some point in the next maybe 2 to 5 years, we've got a big, ridiculous unwinding of the Japanese yen. Could it happen sooner than that? Yep, it could. But the way that I could trade that would be if I start with a bull call spread and price goes up, well, I can make money there. If it comes back down, I could do a bull call spread. It goes up. I can make some money there. I could also lose on every one of these trades until eventually this thing just breaks out like I'm saying here. And we have this ridiculous run where I would just do bull call spread, bull call spread, bull call spread, and chase the trend and get rewarded on risk-defined trades that way. I could make that a way easier trade, in my opinion, than trying to chase this nonsense in the Forex market. Okay. And I'm not, look, I love the Forex market, but I hate the Japanese yen in the Forex market. Other than a carry trade in 2022, I hate the Japanese yen. Other than a carry trade back in 2011, 2012, I hate the Japanese yen. Okay. So it is one of those baskets where you either get paid a ton of money or you lose everything. It's the worst. And I think there's too many other good currency pairs to trade that don't have anything to do with the irrationality of the Japanese yen. So again, you get this public service announcement out of me every time I talk about the Japanese yen because it's what it does to traders. I've seen way too many traders lose everything or make a fortune, but it's just such a tricky basket to trade. So pretty simple, but I mean, risk defined is the only way to go, in my opinion. Okay, anything else happening elsewhere? Let's go DAX. DAX is the German market. We're getting a lot of chop in here. Here's the daily. Just a little bit of a pullback. I still like buying supports and dips off that 200 moving average. The FTSE out of the UK, this one's right at a spot where if I could trade something long, that's not a bad spot to look for a stop loss below and then get long in the FTSE and see if we can come back to these highs again. That's a pretty good reward to risk scenario. I don't mind that one. Okay. Like I said, China is down. Brazil is still flat. Mag 7 mixed today. So we got Amazon down slightly. Apple's up. Oh, you know what? I think I have a trade on Apple with a 230 call. Yep. So this would be a break even at 223. I'd make $6.65 a profit by the 13th if Apple gets above 230. So I'm looking for that to be a nice little income play. That would be around $5,000 if I have Apple, I get above 230. So I'll keep an eye on that one. Amazon, I actually rolled this today. I rolled this out to January. I've got it out to 210, rolled it out to January. I collected another 214. So that gives me another $430 or so on my net profit, and I'm still going to end up adding some puts just in case we have a big like kind of meltdown post-election, or at least by the end of the year. Google, I think I closed out this Google trade. Let me double check. I may still keep it. Let's go Google. A little time has passed. Google. I don't have any Google in this account. I do have some Google in this account. So my 160 by 165, that's a bull put spread. Right now I'm sitting on about $800 of profit. My 160 by 165 here is trading for 408. This is out to when? January? Let's see. I think I'm just going to take the profit. I paid 275. 270. I'd get $1.38, $1.40 out of that trade. It's a 50% profit or better. That's what I'm showing right here. I think I'm just going to take it. Just going to take it. I'll keep the credit spread just in case, but I'm going to take the bull call spread profit. So I'm going to close this down, see if I can get out of this. Let me see if I can get a sneaky 415 here. Nope. Let me try for 410. Nope. 405 should fill. I'll try 40. I'll just penny this down. 409, 408. Got filled for 408. Okay, here's my bull call spread. Close 408. Filled. 160, 165, 408. Profit. Okay, I'll update this in my Pulver alerts here. Google 160, 165. Close at 408. You turds. Got filled at 408. Good. Okay, this one here. 160, 165. Close 408. Let's go. Filled. Same thing there. 408. Come on, Tasty. Filled at 407. Filled at 407. All right. So that one is closed up for profit. This account, no Google that. Okay, so this is all good. Let me update that in my Discord for Pulver alerts. So I got to find that in the stocks options. That was a GOOGL. Let's see here. Profits on Google bull call spread. We did that one already. 1220 paid, closed. All right, let me jump to this one. Closing, closing, closing. Okay, just double checking I didn't double dip on that one. That was a what expiration? January 17th. There it is. Okay, so I took these trades at the same time. The 1229, that one we close out for profit. The 117 I'm closing for profit. Let me do a quick reply on that one. So reply. Google update. So I had the 1229 expiration 160 by 165 bull call spread. Close for profit. The 117 expiration 160 by 165 bull call spread. Closed for profit. 4.08 credit. Or a net $1.38 profit. This one we closed out for like 4.30 credit. So a net 1.60 profit per contract. Okay, that one's updated. Okay, there's some Google. I still have a bull put spread which I'm okay with the bull put spread. Oh, DJT just fallen off a cliff. No big deal there. Talk about a hype trade. What do I have left? All I have is a naked put at 130, which I collected 254 on that one for an income trade. And then my 165 by 160, that's a bull put spread that I'm willing to own some shares of Google and just repair the crap out of it, make a few bucks. All right. Let's see what else. Powell knows about the economic weakness in Canada, UK, and the Eurozone. Well, I talked about that in the webinar on Tuesday. So when Nick and I went live for our big like 2024, 2025 prediction webinar, I'd mentioned that one of the outliers is that what we have happen in the global economy is not just the U.S. You know, we sit here in perfect U.S. fashion. We're so consumed with our own stuff that nothing else matters. You know, and so we're sitting here trying to predict this recession, and it's a new presidency, and it's going to be inflationary, and the Fed's going to mess up. Look, at the end of the day, if there are other countries around the world that are struggling, it's going to weigh on the U.S. as well. So if Europe is in the toilet, it's going to weigh on the U.S. If Canada's in the toilet, it's going to weigh on the U.S. If Japan is doing all sorts of wild and radical stuff, if China is struggling, it's going to weigh. Like, global economy matters. And I know the U.S. has done most of the heavy lifting here the last couple of years, especially post-COVID. The U.S. has been surprisingly the best. I thought once we got through COVID that it would be kind of a migration into like, okay, the U.S. had a great couple of years. We had our 2022 reset a little bit, and then we started to see another rip in 2023, 2024, which essentially stabilized the markets. You know, inflation started to come down, which is helping, you know, other areas. But look, if there are cracks and dents and damages being done globally, it will weigh on the U.S. At some point. It will crack. So again, it's like we're not impervious, we're not immune, we're not bulletproof. At the end of the day, this is a global economy, and the U.S. has been great, and the U.S. has performed super, super well. But there's no way that the U.S. will be the outlier bull market when everything else could potentially be in the trash. You know, so it will be a, you know, I don't know. I just think this whole idea of you know, just spiraling towards a global reset sadly becomes a really nasty reality. And maybe the offset is, yeah, maybe it's Bitcoin. Okay. Maybe it's not. Maybe it's something that hasn't even been created yet. You know, I have no idea. But it's just the reason that I trade mostly risk defined, because I don't want to be in the hook for something stupid that happens. I don't want to be a hook for something that's an outlier event that all of a sudden we lose all this money, we get stuck in all this trouble, and all that could be avoided if you just trade risk defined. Okay. All right. So quick spot check on the indexes here. And then I will go in just a few minutes. I know Nick's come back on at 2:30. I'll wrap it up and transition. I've got a live session on my own back again at 3 o'clock. So I will bounce out at 2:30. Interesting. Trump says JP Morgan CEO Jamie Dimon will not be part of my administration. Okay. So the SPY is down about 0.4% today. The Q's down 0.47. Again, just a nice little healthy, orderly backfill, you know, maybe coming into some gaps in here. It's not that difficult, right? So we have a gap in here. We have a previous high. All these offers could be supportive. Okay. We come back any deeper than that. We have a gap here. Could that be supportive? Of course. So as long as this doesn't become, you know, slow, and then reality check. Like if we have a really ugly, you know, like this, if we have this big crappy gap lower and it's like all this flushing to the downside, well, that's going to make things look a little bit scarier. But if it just seems like this market, every time it touches a low, like look at today, look at this week. Okay. This market, after testing the high on Monday, we hit an all-time high on Monday. And what did it do? Monday was choppy. Okay. Tuesday was directional. Wednesday was choppy. Okay. Thursday was hitting the low. I mean, does this just keep like hammering the floor? Is that enough to offer support? If not, then we go lower. But it's not like crazy volume here. You know, this market is in kind of a melt up mode and it's in orbit. And I just wonder if, you know, are there buyers? That's really the question. Are there buyers waiting here to take the market higher, or are there willing, just like let the momentum do its thing? If the price goes up, great. But we're probably still wondering is how many put buyers are out there that are just trying to buy insurance and buy protection? That's what I want to know. And if there's no real like call option volume, if there's no real like bid that's going to just take these to all-time highs again and again and again and again, then yeah, we could fall back a little bit. Okay. So I'm not doing anything, man. That's it. Like I'm waiting. I'm literally in the same situation I was. Look, this was great. We had a post-election move. I made a fortune. Okay. Did I take some profit off the table? Sure. Did it put me in positions where a lot of my options now are out of the money and they're going to be good for full profit by expiration? Sure. So I've got some padding. Okay. But how much higher do you need this market to go right now? I mean, think about it. It's like this could have been pricing in so many things. It prices in Trump. It prices in the U.S. Senate going Republican. It prices in the House. I should have put an H there. It prices in the House going Republican. So you get basically your red sweep. This prices in the Fed cutting rates, which they did in September. They did just now in November. And the probability remains high that they will in December. That's what this trade represents. So a buy the rumor, sell the news. Remains to be seen if this is going to go higher again or start to fade and pull back. As I showed earlier this morning, there is a potential Trump trade that is the same from 2016 to the end of the year as we have seen from 2024, just this last week to now. Everything is pretty much the same with the exception of the 2 and the 10-year. That's it. Like that's the only one I'd say not the same. Everything else, S&P is up, U.S. equities against the world is up, small cap versus large cap up, 10-year bond up, or I should say 10-year yield up. Okay, the real yield 10 years up, break even up, real dollar is stronger, Chinese yuan inverted, so dollar stronger versus the yuan, gold is down, Chinese equities down, Bitcoin up. It is the exact same card as 2016. So what did a Trump trade look like? It's right here from 2016. It is almost a repeat of that. Like it's scary. So how many institutions went back to 2016 and said, Trump wins, this is what we do? And that's pretty much what the market has done. Okay. So we'll see. All right. Last up, somebody's asking about gold. Look, I want gold to pull back. It's pulling back. I'm starting to position into it. I did two things. Right here at my 50 period, I did a credit spread. Right here at my 100 period, I bought some shares. So I am in here with an option trade. I'm in here with ownership. I have ownership from way back here that's still in profit. And I'm just waiting to see after this is, by the way, this is a 5th wave completion. That to me is what gold has done. So if we go 1, 2, 3, 4, 5, I'm looking for a 1, 2, 3. If we come back to this trend line zone, find this 200 EMA, I'm going to start reestablishing and adding more exposure on gold. Could be gold futures, certainly will be GLD. That's like no brainer for me. And then if we go up to the same highs again, perfect. Let's grab some gold profit. But I'm hoping that gold still has a chance to pull back. It's not done yet. And we'll see if it is a 1, 2, 3 pullback. If it just flushes lower, lower, that's fine. I'll still buy the same type of levels. I'll look to see if it actually makes its way back up to the same highs again and we range. But I'm still liking gold. I'm going out basically saying, look, one of my bigger trades for the year 2025 will be to stay long gold. I'm just trying to get it at a discount. Okay. All right. On that note, it's 2:30. I think Nick's coming back on right here. So we can take a small break. I'll pass it back over to Nick. And thanks for letting me come back on for a second session today. Peace out. Thanks.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, guys. Sorry, let me share my screen. Shout out to Chris for the great commentary, as well as coming on multiple times today. You know, this is a team effort. We are going on. What are we at, guys? We've been streaming for 6 hours today. That's a long stream, and we still got time to go. We got Powell coming up. We got some charts to look at here. I always enjoy, you guys like listening to Chris. I always like listening to Chris, getting his thoughts. I think one area we diverge that I think is interesting is I'm not feeling quite ready to sort of commit to another bullish year on gold. Now, I know that's a big statement for me because I'm a gold permabull. I always am keeping an eye on the price of gold because if it dips, I start to get interested. However, in terms of like an active or shorter term trade, which this might be where Chris and I are diverging, on a longer term basis, you give gold to me at 2450, 2300 again. Oh goodness, I'm gonna start rubbing my hands together from a longer term perspective, which I think is where Chris is talking about. In the short term, from a trading perspective, for me, I don't quite see it yet. We've got U.S. economic data, which is, showing some strength. You've got some solid answers to a lot of questions that we had in recent months. Like, for example, who the president's going to be. And we don't have answers to the geopolitical conflicts going on, but there's at least hope that, there is some progress on the wars that are happening in Eastern Europe and in the Middle East. I say this every time that I bring that up because it is a very touchy subject, whether you like the fact that the elections went one way or the other. Put that to the side and let's just, again, hope for the best, that there is more peace in the Middle East and in Eastern Europe. I think 99.9% of us can agree that that would be a good thing. How we go about that, of course, is where the controversy happens. However, let's just hope for peace. Let's hope that something good happens in the world in the next few years, whether you like or dislike the administration. That being said, if that happens, good things in the world are not good things for gold's price. Good things in the world actually are more of a bearish thing for gold's price. Scary things in the world make gold prices shoot higher. It's also part of the reason why I think a very prudent way to approach the markets that, Chris and I have gone back and forth on all the time is keep an eye on the metals and always seek discounts on metals if you're interested in a bit of diversification in your portfolio. If you're looking at gold and silver and they're falling off a cliff, I sort of daydream about a time where, silver and gold were out of rotation. And I say this every year when gold and silver are like trending down, I actually enjoy that from a long-term perspective, because you can find some great deals to add them to your portfolio. Now, everybody has a different portfolio, different approach. Some of you guys are trading CFD brokerages. Other of you have stock brokerages. You have crypto accounts. Everybody has their own. So none of this is individual financial advice. I'm sharing my opinion. But when I see gold prices like falling off a cliff, I like to sort of get up to like 5%, 10% of the account just sitting in metals, because again, they're a bit of a hedge to global uncertainty. Do you see this move right here? This is crazy. This move right here was right before the October 7th attacks in Israel that proceeded to trigger all of this chaotic upward movement on gold prices, right? So even though gold was shooting down, it was down, 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 and down. It turned on a dime on geopolitical fears coming out of nowhere. And I couldn't have told you that was going to happen. And I think most people with humility will say, yeah, I didn't know that was going to happen either, right? Some people on social media say, yeah, I knew gold prices were going to bottom right there and they're going to fly up. But my point is this. Here's the thing. Gold shot up on that uncertainty, and you never know when that's going to happen. So that's the idea behind, sometimes people like the idea of keeping some positioning in gold. Chris outlined for us also, he just commented that he's definitely longer term on gold. And I think I'll say this, gold from a longer term perspective, I am genuinely a perma bull. They print more dollars every single day. The national debt goes up every single day. it doesn't take me long to get bullish on a longer term basis on gold. In fact, I'm always bullish on the longer term. But from a trader's perspective, for me right now, I'm just not quite seeing the setup. I'm not seeing the momentum in gold's chart that I like. But from a value or a longer term perspective, again, as I mentioned, if you start seeing, a continued dip here, as Chris was talking about, you give us a bigger discount on the price of gold, I'll start putting a little bit in my portfolio and holding longer term. So just something to think about. I am never truly like long-term bearish on gold. Almost never. Actually, I don't think I've ever been long-term bearish because think about this. You're buying gold and selling dollars. They make more dollars every single day, right? They print more and more dollars. So inevitably the value, the purchasing power of the dollar goes down over time, whereas the price of gold should always go up over the long term as the true value of the dollar is constantly slowly falling. It's only common sense to be long-term bullish on the dollar, in my personal opinion. Things could change, but that's my thought. Also, guys, I want to take a second. We've got 600 people watching the live stream. This Saturday, I do this every year. I got invited back to come to 8Caps Trader Fest with my friend Boris and Kathy from BK Traders. They're hosting an event with 8Cap. We did a really awesome webinar this week. Chris and I put one together with the help of our team, Julie and everybody. We put together a great webinar event, and I'm actually going to be, if you missed the first webinar, I'm going to be running it back and talking about some of my top setups for 2025 on this Saturday on 8Caps Trader Fest. I'm really, really excited for it because it's not just me. We've got a bit of everybody coming to this event. Not everybody, because we're missing the man himself, but Chris Pulver. But we are having a really awesome roster of people come on. Let me see if I can. Where is this? Chandler James, if you could just drop that link here for people to register if they have not already. But we've got 8Caps Trader Fest this weekend, and I'm so excited for it. It's always a fun time. I get to hang out with everybody from the squad over there. A couple people that are top of mind. Austin Silver will be there. You've got Karen Fu going to be there, who is awesome as well. Great fundamentalist as well. If you have not listened to some of her commentary, she'll be doing her best ideas for 2025. We have Tom Basso going to be on there. Boris and Kathy, of course, like I mentioned, BK Traders, a little bit of everybody. There's more people as well. You can check out the full link here. Hold on. We've got a specific tracking link, Chandler and James. I sent it to Chandler. Let me see if we can grab that. Here we go. Here it is. If you guys want to register, here it is. I also listen to Karen and love her. Yeah, she's great. Yeah, we got a lot of great people coming to this event. It is totally free to attend. And I think there's a ton of freebies being handed out just for coming. So if you're available Saturday, or if you're not available and you just want the recording sent to you, make sure to register using this link. Also, if you're in the US, use the US link. If you're not in the US, use the non-US link. That will be one heck of an event. It's going to be a lot of fun. I've done it actually this will be my third year doing it. And every year is just a lot of fun. It's like a multiple hour stream, a multiple hour event. I'll be here bright and early on Saturday morning at the office. And couldn't be happier. It's going to be a lot of fun with my friend Boris, Kathy, and everybody. It's going to be great. So make sure to join us, Trader Fest, Saturday morning. Make sure to register using the link I just dropped in the chat for you, and we will see some of you guys there. In the meantime, we just talked gold. Let's talk some more stuff, and we can broaden the conversation, as you will, with Frank. He's going to be joining the call here for a second as we count down the minutes to potential volatility with Jerome Powell. So we'll say hello to Frank, bring him into the call. Let's see, there he is. What's up, Frank?
Hey, Nick, what's up? How you doing?
Hey, I just finished talking about gold. Chris was talking about gold before this. what are you thinking on gold? Bullish, bearish, sideways? What do you think?
So I have been bearish and staying away from gold because I guess because of the stance of monetary policy. So we saw great risk on from the election results. Bitcoin stocks all skyrocketed. Gold came down as a result. Fears of geopolitical events kind of dwindled. Gold lost its edge there. So I wanted to stay away. But now gold has closed a sort of several month or a couple month gap where we had our first interest rate cut. And that was like the first sign that gold was going to see more strength because the dollar was weakening. And then it defined the trend of a weaker dollar going forward. However, what we saw in the past couple of weeks kind of decoupled all that for gold.
Yes, so you're pointing out that this was the moment, that was the not the election, the September meeting where they cut the rates by 50 basis points and gold ran with it and now has completely come back to that point.
Right. So long story short, I think probably sideways. I think it could have bottomed out here. However, if it doesn't, I see one more level at around 2480s. It can go down there. Maybe a last line of defense, because after that, you've given back most of what you made this year. It's almost like a dead trade at that point. So I think if it bottoms here, we get maybe some upside. I don't know if we see all-time highs again, but I think we might have bottomed just because we're back at that point where we saw that first interest rate cut, the first sign of market or dollar weakness, and I guess just more demand in the metals.
This is one of the first times, Frank, that we've had a pretty substantial pullback. Actually, this might be the biggest pullback that we've had all year, down 9% from the highs. I don't actually think there's been a time. Nope, that's the biggest pullback that we've gotten all of 2024 is a 9% correction, which is actually crazy because, even though the stock market has had a crazy good year, the stock market has also given you several pretty big pullbacks. I mean, there was a 10% correction over here. I guess that was the biggest one for the S&P 500. And then the NASDAQ gave you a ginormous one on a percentage basis, was down almost 17% at one point. And then there's gold where we're freaking out in terms of price action wise on a 9% pullback, which, based on what you just said, like this might be the bottom. I wouldn't be surprised. I mean, gold has been so aggressively bullish this year. There's certainly a lot of people on the sidelines who at least have been wanting a pullback. And we'll see if this is the bottom, but pin bar here forming. We'll see how this candle closes. I'm kind of with you. I lean more neutral. I don't feel like the U.S. economy is slipping into a potential recession fears that could trigger faster rate cuts, which I think is the environment where I really get bullish on gold. Like I feel like we are sort of in a stability point with the economy right now. And you mentioned something earlier that is really a red flag for me with getting too bullish in gold in the short term, which is yields and the dollar strength are pretty unrelenting right now. I want to ask you about this chart too, because here's the thing. Fed's expected to cut another time this year. And I know you and I guess we would kind of lean more, generally speaking, on the hawkish side of what we think the Fed is going to do most of the time. Most of the time, we're like, the stock market freaks out and wants a million rate cuts. And you and I have been pretty consistent the last few years saying they shouldn't cut rates. They're doing it anyways. I mean, they should be cutting rates a little bit. It's very restrictive. But the bigger question is next year, are we going to get a whole bunch of rate cuts? Because that's what the stock market wants to see. And at what point do you look at the 10-year as a concerning thing? We're up to 4.42 on the 10-year. We bottomed out. We came back up. A lot of people thought that was going to just keep tanking with rate cuts, but we've actually done the opposite. The Fed cut rates, and here goes yields to the upside.
I think you got to look out for what Powell is going to say, and what I guess what we need to watch for is, are there going to be, what is the tone that he's going to go with? So we've already seen 2 rate cuts already this year. We're seeing a rise in inflation from last month. PPI stayed the same, except last month's was revised down. So I guess that counts as a rise for this month. But overall, as expected, so with this growth, we're going to see more inflation, in my opinion. And it's not necessarily going to be a bad thing, at least in the short term. Maybe the first half of 2025 could be great, as we see a bunch of growth opportunities, demand in the market. Could be like another 2021. We've already seen Bitcoin hit all-time highs. So I think maybe we're just going to go into some sort of bullish environment, regardless of where yields are turning to. And that's kind of something that's going to be kicked down the road a bit. So I think if Powell mentions that, we're going to be cautious for inflation, we're going to be cautious with jobs, I think the market is going to be fine. But if he mentions things like we might have to bring hikes back on the table, if he mentions that at all, I think that's going to be probably good for gold. Well, not good for gold, but good for the dollar.
Yep.
And bad for gold, bad for S&P and U.S. indices. So that's kind of where I'm leaning right now. Although I don't think he's going to say anything today. He never really does say anything. So I'm not sure. I think it's going to end up being more of a dovish stance. People are going to have to interpret it that way because he's not going to tell you anything.
Yeah, and I think that you made the point about if the economy is if there's some growth that comes out of the next few months, then the 10-year yield may stay where it's at. I actually think it's okay where it's at. Like, it's not super threatening right now. I would start to get a little bit concerned. I think so would the stock market specifically, and gold for that matter. If you start seeing the 10-year really break above these highs that we saw March of this year, if you start breaking through those levels, that would signal, in my opinion, more so not just that the economy is doing well, but now you're talking about inflation risks. Maybe oil prices are jumping. Something that changes the dynamic of, as you're mentioning, what are the probabilities that the Fed starts talking about pausing rate cuts or even hiking rates? Those two scenarios, I think, would very much spook the markets. Because think about that scenario, Frank, is pretty much 2022. You had the economy doing pretty solid. It wasn't doing horrendous. 2021, we had a lot of inflation come in. The Fed started introducing, hey, we need to hike rates. And they hiked and hiked and hiked. And the market started freaking out because it's like, well, this is going to go for a long time. We're not beating inflation. And this could turn into a really ugly recession. So we've got growth right now. We got decently strong growth in the United States. The question is, how much growth is too much and triggers another inflation fear cycle like we saw in 2022? I think for me, it's just keep an eye on that 4.7.
Yeah, we got this inflation data out of the way. Now we have NFP at some point. I don't know the exact date, but we need NFP to be better. We need unemployment to come down. We need to show some sign of the jobs market recovering. Because with that, inflation remaining elevated or even rising is tolerable. So as long as jobs are okay, rising inflation is okay because the economy is okay and the stocks are doing well. So I think that's the main concern. Once we get above 3%, though, I think that's when you start bringing that question back onto the table as to whether or not we should pause for a while or, like, dare I say, hike again.
Right. Yeah, I mean, if you start to get a sustainable, you're talking about a 3% would put us, let's draw in that line. So 3%'s here. So if you start seeing a sustainable sort of uptrend above 3, then yeah, now you're wondering, the whole market would probably look at it and say, look, we came down, but did we beat it? If we're not, are we just going to do one of these guys?
Well, here's another issue is that we stood at these levels for so long because of oil. I'm talking about just this year, by the way. That's from 2022.
That's a great point. Oil's helping us right now.
And
it could hurt us.
It is helping us because energy prices kept CPI very elevated. Meanwhile, core, which excluded food and energy, kind of remained the same. It was still stubborn, but standard CPI was very high. And then it fell really hard in one of these months earlier this year. It fell from like 2.9 to 2.5 in 1 month, which was the steepest drop I've seen in a while. And that was because of oil. Now that we have a Republican president, we're probably not. We're going to domesticate oil production, I'd imagine. And that's going to drive supply up in the U.S. So U.S. oil is probably going to stay low price-wise. And if that can remain low, if it doesn't break over 80 or the high 70s, it can remain like somewhere in the 60s, low 70s, we'll keep inflation probably at bay. And I think this is what we need to watch going forward. So if oil keeps rising, we might have to see CPI come up as well.
It's one of I completely agree with you, Frank. I think one of the biggest risks to this picture is what you just outlined with oil. Oil's currently on our team with the inflation story. But if you get anything, expectations are high right now. Again, I say it every time, but let's hope that whether you like or dislike Trump, that if there is some progress in the global war situation, if that cools off in any way, that keeps oil prices down. But God forbid that something does not work out and things get worse. What happens to oil prices? They go up, because that is what happens during conflicts escalating. Oil prices typically go up because there's supply issues and concerns. Look at 2022, where you saw when Russia invaded Ukraine and they are a massive exporter of oil into the global system. Look what happened to oil. You wonder why the inflation got so bad for not just the US, but for the whole world. It was oil prices really causing a disaster. And we're here at low prices. I'm not necessarily saying that they're going up from here, but again, there's expectations. There's high expectations that Trump and the Republican administration can put an end to war, number one. But number two, high expectations that they'll produce a ton of oil, which helps with the supply and keeps prices low. One thing I also want to point out to you, Frank, this is an interesting fact. I heard this on CNBC the other day. Energy as a sector, this is one to think about here. Energy under Joe Biden was, I believe, I could be wrong, the best performing sector under Biden. The best performing under Biden. And under Trump, energy was the worst performing sector. So during their two administrations, respectively, during Biden, it was the best. During Trump, it was the worst. What do you make of that?
No, it makes sense. Biden was very against drilling in America, so he kind of outsourced. So the price of oil went up here. Meanwhile, Trump is likely going to start drilling here, so the price of oil is going to go down. Energy stocks will probably not do as well as other stocks in the market. But yeah, it's just supply and demand. Where do you drill and produce? And Biden didn't want to do it here. Trump wants to do it here. So that's just kind of why I'd imagine.
Yeah. What's interesting too is that, I mean, this is a bit of a nuanced circumstance, and it always is because this is such small this is a 4-year period. In market history time, that's actually small. But one thing too is that the difficulty here is that, as we just discussed, that 2022 situation rocked the stock market's socks off and dropped, 38% on the NASDAQ. And energy stocks climbed every day during that time.
It was also because of the war going on in Russia and Ukraine.
Right.
And it was also the I guess events, the tensions happening in Israel and Palestine.
And the thing is with it all, I think
it
it makes a good case too, Frank, just for having some level of diversification in what you're doing, because you would have felt like I remember every day in 2022, I listened to people who were riding the energy train when it was happening, and I was so jealous. I was listening to they were having massive up years, and I was having my worst trading year ever. I was down way too much money, and meanwhile, all these people were in energy stocks, and they had been buying them during the post 2020 sell-off. So maybe just a good case for, we never know with certainty what's going to happen in the markets. Having a bit of diversification is always a healthy thing to at least consider. Now, that being said, I don't love oil prices or energy stocks up at these levels, but if we get a big drop in some sectors, sometimes buying the lagging sectors can be an interesting strategy if they're priced right.
Yeah, I agree. It's very cyclical, in my opinion. It's just like when and where. And Biden was very heavy on solar and clean energy.
Oh man, yeah.
At the beginning, solar did great, but I mean, look where it is now.
Yeah, I mean, this has been such a, look at the volatility in this. You're talking about March 2020 up here, 470% on the TAN. This is the solar ETF. From there, it has dropped a whopping 72%. Is there value here, or is this just trash? I mean, we're going into a Trump presidency. The market is selling it because, again, that doesn't look particularly strong for solar stocks. The Democrat government is probably going to be a little bit more lenient and supportive of solar energy, clean energy. That's sort of a trait of the party. And so maybe the reverse is happening here with solar stocks, with Trump and the Republicans taking over.
Yeah, I think so too. I think it's pretty limited, although you never know. I don't know what Trump's stances are on clean energy, but I know tax cuts are a major thing that he's trying to do. Maybe he'll provide those for clean energy companies. Obviously, I have no idea.
Maybe so. We'll have to see.
I would look into solar just because it's the lowest I've seen in a while.
Maybe a good contrarian play for 2025, Frank. I don't hate it either. I like solar stocks as well.
I mean, I think they have room to grow.
Yeah.
They might lack funding, but I would look at individual stocks, I think, over an ETF.
I feel like you got to get the ones that at least have some positive cash flow, so they're not going to go bankrupt on you.
I know Michael Burry was in First Solar, I believe, FSLR, and that went up hundreds of % under him when he bought it. So I kind of want to look for plays like that because there's a lot of comeback plays, I believe, like catch-up type of trades. So Tom Lee's talking about small caps being the catch-up trades still. They have more potential than the market itself. And I might agree because all year tech has been holding us up. Now we're broadening out financials and cyclicals, and industrials are doing well. So the health of the market is broadening out, but small caps have yet to sort of prove their worth. So Tom Lee said 6,000 on S&P this year. I thought it was ridiculous. And then here we are at 6,000. If he says small caps are going to go up, maybe he's the guy to listen to in an ultra bullish environment.
Yeah, we'll have to see. Well, Frank, I appreciate you coming on. I'm not going to keep you on. We're going to listen to the call here. Feel free to listen in while you're back at your desk. But we'll we'll cut you free here while we listen to Powell. And thank you for sharing your insights. That was awesome.
Yep. Thank you.
See you, Frank. All right. And we are now going to transition here to Powell coming in pretty soon. We've got the recording. We will be pulling up him live speaking, and I'll be commenting a little bit. Not going to comment too much, but he's not yet on the stand. I'm watching it really close just to keep an eye on when that's happening. Here's the 1 minute chart on the S&P 500, just keeping an eye on it for fun. But we got 800 people watching. If you guys could do me a big favor, hit the thumbs up button while we wait for Powell. Don't go anywhere. We will be bringing him up on the screen when he is ready to go. I heard he's going to be performing a song and dance for us today. Just kidding. But, you know, you never know. Remember when we got Jerome Powell cussing on the mic before GTA 6? Somebody said that meme about me yesterday or the other day when I did my little impersonation of Donald Trump's goofy dance. I did that dance and somebody said, we got Nick dancing before GTA 6. And I was like, I can't wait to watch people play that game. I like to, I'm weird. I like to watch people play games more than play them myself. Anyways, we're still waiting. There is a lady speaking at a podium. I imagine she's preluding Jerome Powell in all of his magnificence. And then he himself will be taking the stand and again, singing us a song. Nick, do you still play Age of Empires? Literally too much. And I play it. I don't play like hours and hours, but I probably play a game a day or 2 games a day, which is, each game's 20, 25 minutes long. So I might play about an hour a day. Depends. If I lose quickly, I usually cut my losses like a quick stop loss, and I just don't want to play anymore. And if I win, I usually push my luck and then lose the next one. I know he also plays Age of Empires 4. I'm always down to play. Although I'm Diamond 1 in Age of Empires 4. So, I'm pretty good. Okay. I'm just kidding. That's decent. It's not that great. Look at gold down on the 1 minute, 5 minute chart as well. Russell's down 1.3%. NASDAQ's down 0.6%. Euros dropping, dollars up. I don't even know. Was there something said? There must have been something said. Let's tune into this lady, see what she's saying. Is there something we can just pop her on the screen? I'm not sure what.
Such as today's event. What great timing to have Jerome Powell speak to us at this moment in time. As head of the Federal Reserve,
Is this? Let me know, guys, if that's quiet for you. I do have a possible way to fix it on my end.
Impacting industries and touching communities in ways both big and small. Today is one of those special days we will long remember, and I hope you are excited as we are about.
Powell's comments are hitting financial juice already, says Chris.
To introduce today's program, I am happy to introduce
Chris, do you want to just pop in here for half a second? Tell me. Yeah, let's throw Chris in here. Chris has got the info for us. Chris, what am I missing?
I don't know what's going on here with this live stream, but I was looking at Financial Juice, and he's already got comments coming in. So I can just read a couple top headlines. I expect inflation to continue to come down towards 2% goal on a sometimes bumpy path. Moving policy over time toward neutral policy path is not present. Fed is closely tracking gradual decline in housing services inflation, which has yet to fully normalize. Labor market is cooled to a point where it's no longer a source of significant inflationary pressures. Recent U.S. economic performance is remarkably good. Don't pat yourself on the back too hard there, Mr. Powell. Let's see here. Economic strength gives Fed this ability to approach its decisions carefully. The Fed expects these rates to continue to fluctuate in recent ranges. We're watching carefully to be sure they do. The Fed doesn't need to be in a hurry to reduce interest rates. U.S. short-term interest rate futures down on Powell's comments. Traders of rate futures trim bets on Fed rate cuts after Powell's comments. Fed December rate cuts still seen as more likely than not. Let's see if that's accurate, Nick. Let's take a look at the we keep the stream up here. I'm just gonna look on my end and we'll just talk through it.
I can see, you know, 10 years jumping a bunch here, 20-year, 30-year dollar. But okay, I'm confused.
Yeah, it's cutting. Dude, the 1% was down over 1%, and now it's down a quarter 1%. So yeah, yields are ripping higher again.
Yep. What are we missing with this stream? Where were these remarks given? Did we miss something?
All I saw from Financial Juice was economic outlook speech at conversation with Federal Chair Reserve Dallas Tech. I mean, it's just right on Financial Juice. So I don't know what this stream is versus if they're summarizing. Are they like not going to bring them on live to speak at the podium? I mean, we got fresh lows on the day. The SPY just broke below 593.79. We're going to see if there's more pressure to the downside. I'm targeting 590 for tomorrow. So if we hit that today, I mean, I've got a butterfly trade that should be looking pretty good.
Of the Board of Governors of the Federal Reserve System on February 5th, 2018 for a 4-year term.
Interesting. Bitcoin's giving back 2% here.
And sworn in for a second 4-year term
on the day. A little bit of downside for Bitcoin.
Mr. Powell also serves as chairman of the Federal.
Yeah, we're going. I mean, we're getting deeper in the red. So SPY's down 0.7 now. Qs are down 0.76. Russell down 1.5% now.
Let's do this. So Chandler James, we'll put the stream away for now. Looks like they might be recapping. Chris just shared a bunch of the comments. I'm not sure if those were, as he mentioned, maybe summarized points from a private conversation or something. We don't even. Maybe he's not taking.
He had a hot mic. He had a hot mic in Dallas.
Yeah, apparently this is the thing. I don't know why, but a lot of Powell's actual commentary comes out during these sorts of events rather than the Fed meetings. So seems like again, as you sort of recapped for us, Chris, it sounds like it might have been a little bit of a, hey, economy's running hot, we don't see the need to cut rates too much. And yet again, it's almost like we've seen this story again and again and again. The bond market tells Powell what to say before he says it. Almost it's crazy.
I mean, I am wondering if we're going to get any type of acknowledgement out of Powell or Fed members that the 10-year yield is blank. Like, are they comfortable with this thing going up to 5%? Are they trying to keep this thing contained? It's like, look, if we cut rates, this will keep going higher. I'm sorry. I mean, I know that. I mean, the only thing I saw to reassure me that it's like, I'm not going to close on a house at 8% interest rates next year is that when we did hit 5%, October of 2023, it only took about 2 months to drop all the way back down to 3.8%. So I'm not saying that's a good environment. I'm just like, that clearly was like something kind of breaks there on the yields. But I just think there's going to be a lot of bond volatility, a lot of yield volatility. And what we are seeing right now is that I'm just not impressed with, this kind of vocal victory lap that the Fed is taking around inflation, and then saying that the inflationary pressures are off on jobs and things have stabilized. But it's like, dude, the data is not getting better. Like, we bottomed out. And to say, I mean, I wish they would just come out and say, we're okay with inflation being 2 to 3%, instead of trying to make this point of sub 2% or back to 2%. At the end of the day, I think this is the biggest eye-opening 3-4 years that the U.S. has had in a long time. That 2% inflation sustained sucks. Yep. And 2.5 to 3.5% inflation sucks even worse. And if we were to ever see a 3, 4, 5% inflation sustained, it's going to break something, dude. I mean, that's all there is to it. So,
hey, James or Chandler, if you guys send me the link, I can do an audio boost on my own. I have a Chrome extension that lets me do that. If you can send it to me, I could pull up the stream and make it a little louder.
The economy has made significant progress toward our dual mandate goals of maximum employment and stable prices. The labor market.
He's going to finesse this message so hard with we're doing the right thing, everything's fine. He's on that bandwagon since September.
Yep. Okay, guys, I've got this on my side. I'm going to share audio. Sorry, everybody, for the low volume. We're going to volume boost this thing.
Maximum.
Try this.
The recent performance of our economy has been remarkably good, by far the best of any major economy in the world. Economic output grew by more than 3% last year.
How's that,
and is
everybody?
expanding at a stout
Let me know
2.5%
audio-wise how we're
rate
doing.
so far this year. Growth in consumer spending has remained strong, supported by increases in disposable income and solid household balance sheets. Business investment in equipment and intangibles has accelerated over the past year. In contrast, activity in the housing sector has been weak. Improving supply conditions have supported this strong performance of the economy. The labor force has expanded rapidly, and productivity has grown faster over the past 5 years than its pace in the two decades before the pandemic, increasing the productive capacity of the economy and allowing rapid economic growth without overheating. The labor market remains in solid condition, having cooled off from the significantly overheated conditions of a couple of years ago, and is now, by many metrics, back to more normal levels that are consistent with our employment mandate. The number of job openings is now just slightly above the number of unemployed Americans seeking work. The rate at which workers quit their jobs is below the pre-pandemic pace after touching historic highs 2 years ago. Wages are still increasing, but at a more sustainable pace, and hiring has slowed from earlier in the year. The most recent jobs report for October reflected significant effects from hurricanes and labor strikes, making it difficult to get a clear signal. Finally, at 4.1%, the unemployment rate is notably higher than a year ago, but has flattened out in recent months and remains historically low. Turning to inflation, the labor market has cooled to the point where it is no longer a source of significant inflationary pressures. This cooling and the substantial improvement in broader supply conditions have brought inflation down significantly over the past 2 years from its mid-2022 peak above 7%. Progress on inflation has been broad-based. Estimates based on the Consumer Price Index and other data released this week indicate that total PCE prices rose 2.3% over the 12 months ending in October, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Core measures of goods and services inflation, excluding housing, fell rapidly over the past 2 years and have returned to rates closer to those consistent with our goals. We expect that these rates will continue to fluctuate in their recent ranges, and we're watching carefully to be sure that they do, however, just as we are closely tracking the gradual decline in housing services inflation, which has yet to fully normalize. Inflation is running much closer to our 2% goal, but it's not there yet, and we are committed to finishing the job. With labor market conditions in rough balance and inflation expectations well anchored, I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. Given progress toward our inflation goal and the cooling of labor market conditions, last week my Federal Open Market Committee colleagues and I took another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. We're moving policy over time to a more normal setting, but the path for getting there is not preset. In considering additional adjustments to the target range for the federal funds rate, we will carefully assess incoming data, the evolving outlook, and the balance of risks. The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. We remain resolute in our commitment to the dual mandate given to us by Congress, maximum employment and price stability. Our aim has been to return inflation to our objective without the kind of painful rise in unemployment that has often accompanied past efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While the task is not complete, we've made a good deal of progress toward that outcome. Thank you very much, and I look forward to our discussion.
All right. I'm going to put that away for now. Well, there you go. Chris, thoughts, opinions?
Dollar's really the big winner here, man. I just pulled up. I'm doing an update here on the dollar CAD. You know, we broke those highs. I'm through the 40-25 fill. I'm looking for 40-75 next. So I've just got all my levels starting to stack up, and you know, in kind of classical like middle finger fashion, we might not see much of a pullback on anything. So it's just one of those things where the dollar might just run until it's happy. And that could be like literally DXY could be running towards, I'm looking at, dude, if we blow through 107.50, we're not stopping until probably 108 to 109 on the dollar.
I'll tell you what, Chris, maybe a contrarian view, but I like that he acknowledged that the economy is not signaling the need for rate cuts. I mean, the biggest risk that I see to 2025 personally is a re-acceleration of inflation. And, you know, if Powell's basically saying, look, the economy's not signaling that we need a cut right now, if that's basically what he just said.
Yeah.
I kind of like that. I like that, that stance rather than trying to make up reasons for why we need to keep cutting rates when the stock market's at an all-time high. So, you know, it's,
does it stop the party though? Like, I mean,
I don't think so. You know,
you don't think so? You don't think so? I mean, do you think at the pace we've been going, where we're up 20+% this year, you think there's more in the tank when they're like, well, we're just going to pause. We don't need to cut anymore.
Well, I think it's probably a good, healthy correction catalyst or a pullback catalyst.
Yeah.
But no, I don't think it kills the story. We saw that in, you know, remember the end of last year, beginning of this year, it was like, we're getting 6 rate cuts next year. And then as that faded, the market kept going up anyways, because it was like, well, the economy's doing so well, we don't need rate cuts. So they found a new reason. You know,
they found a new reason. They're like, AI, baby. That's all it is.
Right.
Yep.
So for me, it's like, well, this might
a dip would be good.
It might spook some of the rate cut junkies, what I like to refer to them as, the part of the markets that's just, we need 57 rate cuts in order to break even next year. And
exactly,
you know, I think it's actually maybe a healthy thing to get some acknowledgement and maybe to introduce a bit of a bear case. Like maybe the concept of we're not getting a bunch of rate cuts next year causes a healthy correction, healthy pullback.
I mean, if you look at, I know you don't have the moving averages up like I typically show in the sessions, but I mean, that's why in my afternoon session, I just talked about the distance away from the 200 moving average. I mean, I think the market is still quite well supported dynamically, but we do have a like legitimate 7 to 10% window where we could have a healthy correction that this market's like, yeah, we just look, we made all-time highs, we dropped 10%. We made all-time highs, we drop another 10%.
Yeah.
That's not going to be fun, but that could be what this market gives us. And I just don't think there's been any real rollover into, like, you know, look, the Japanese yen and that Nikkei weekend kind of broke the market up, and then it was just a buying spree, fortunately. But now it's like the U.S. is gotten into, you know, I'd say a desirable level. It blew away every analyst's expected move. I mean, literally the forecast started on the S&P at like 5,200 this year, 5,300 this year. Some of them weren't even above 5,000, and they just kept getting revised higher, higher, higher. And I mean, eventually it's like, yeah, like Frank said, you know, Tom Lee was 6,000 and everyone thought he was nuts because he's a perma bull, but it's like, dude, we hit it. We hit 6,000 on the S&P.
Yeah.
So, I mean, I think we either drift in or limp in by the end of the year with no major disruptions, or something like this can at least pull. Like I said, I want to see if there's like an orderly backfill on some of the election gaps, just to see that, yeah, the Fed doesn't have to cut at all-time highs. And what I'll be watching is going to be the freaking 10-year yield. Because I still think that's a big reason that I had these images this morning. I pulled them from Opening Bell Daily with I think it's Phil Rosen, who writes that newsletter every morning. Let me see. Did I pull those out this morning? Here we go. So total consumer debt hit 17.94 trillion in Q4 or Q3 of 2024. That's $109 billion more than the first quarter. Most of it's mortgages, and we're on an uptrend, so that's not great. We go to total balance by delinquency status inching higher in Q3, also not great. So we got 30 days late. I mean, most of these are showing this is scary, severely derogatory. That's a new way to call you're never going to pay that loan back.
Yep. Yep.
Yeah, I mean, we got 30 days late. That's inching higher. All this has been happening through 2024. It's just been inching higher and higher. So again, all these things. This is the K-shaped recovery, right? I mean, I wish there was an indicator of the top 1% to show what their buying patterns are, because the top 1% still spends. They have so much money over the last 20 years. They've just amassed so much wealth that if they're spending, they'll be fine, and they'll probably support most of the economy. But if they stop spending, okay, well, everyone else that's trying to just scrape by and live on credit card debt is just digging themselves into deeper holes. So,
Chris,
I mean,
it sounds like you're setting up a pairs trade where we go long AXP and we short MasterCard, because AXP is for the rich people, right?
Yeah. There you go.
And MasterCard is more for the discover, more not to say that there's not wealthy people that use MasterCard, but on average, I think the income of, the American Express has like the higher threshold for, but just threw that out there as an idea.
No, that
right?
would be I mean, I could play that through options. Absolutely. That'd be a good pairs trade.
Interesting pairs trade. I mean, American Express, of course, caters to maybe a higher income group. But maybe what you're pointing out is maybe going back to this is something that I've thought about for a while. You actually mentioned it quite a bit in your presentation for 2025, a flight to quality. And I just think you'd be careful with this stuff, because you're getting I was listening to CNBC's panel thing, their halftime report yesterday, and they were talking about, hey, this is the return of, unprofitable software businesses and all the 2021 hype. And
not a chance.
I think you got to be real careful with when that becomes commonplace.
Yeah.
The trade might have passed you. A lot of it might have been behind you. I mean, you got Bitcoin going through highs. I do think we probably still go see 100K. I could be dead wrong about that. And that's why I trail a stop, because I don't know with certainty what's going to happen. And if a big risk off move sort of engulfs the market right now, I need to get out of Bitcoin, because that's a risk on asset.
Yeah. Yeah, the flight, I mean, I saw today, I don't know if it was Citi or what, maybe it was Goldman, I don't know. Let me see if I can find it. It was something, JP Morgan CEO Diamond says, I'm not so optimistic that inflation will go away. Let's see here. Trump, he's not joining the party. Jamie Dimon will not be in the inner circle of Donald Trump. There was something,
I heard you say that earlier.
Yeah, something along the lines. Fudge, I can't find it. It was something where, oh, here it is. Barclays favors growth over value and large cap over small cap. So that's me in a nutshell when it comes to flight to quality. Yeah. I think it would be better to be in large cap that is maybe not growing as quickly, but is going to be a steady bellwether stock that is probably going to be resilient. Or if we have pullbacks and corrections, I'd much rather be looking to buy back into a pullback on Apple or Google or Microsoft versus, okay, man, Carvana's up 200%, or, Peloton's off the lows, or, PayPal's made a big rip from the lows. Sure. It's like these, I mean, they were beat up 80 to 90% for a reason. And this is where like the squeeze and the catch up starts to happen.
Yeah.
Just saying, it's not my favorite thing to be chasing stuff like that when we've had all-time highs 50 to 51 times this year in the S&P. And so if there have been stocks that are not playing the same game, I'm not that interested. I think that this whole idea of like value so cheap and value is going to outperform, that's what it did 20, 30 years ago. But we might not ever see that type of rotation again. I mean,
yeah,
I just think that we're in a different regime where everything is big, large cap tech. That's what the US market has become. And I know that it can rotate and there can be differences, but I just don't know how you can take, big tech that is going to also play in the energy space, that's building the AI infrastructure future, that has the power to buy up any competitor. How do they not just continue to dominate in some fashion, like consistently dominate,
Well, here's a question for you. I got three options for you, Chris. Which one are you picking of the three?
Okay.
You got 3 months, 3 options. You got to buy and hold whatever of the three options you choose. You can either choose SPY and hold it for 3 months.
Okay.
RSP, buy and hold it for 3 months. Or are you just staying cash, holding $1 for 3 months?
No, I'll take my chances on SPY.
Okay.
Yeah.
So that's why I was asking is when you talk about, staying quality, are you also talking about staying at the upper end of the companies within the S&P 500, talking about the super, the super growers, or are you more broaden out? And, because the broaden out story is the more sensitive one, than what has worked for the last few years, which is buy Microsoft, Apple, Google, Nvidia, and just buy that group and just hold on to it. That's been the winning trade for the last couple of years. And I kind of lean towards that myself as well. But I don't know what, beyond just those ones, what is when you say large cap value?
I mean, that's it. I mean, buy the haystack, dude. I mean, the SPY, the SPY has the ability to have 10 stocks drive it higher, 3 stocks drive it higher. It has the ability to have 500 stocks drive it higher. So why not play that? NASDAQ has the ability to have 100 stocks drive it higher, or freaking 1. So, I mean, it sucks to think like it's not sustainable, which it's totally not. But the reality is the market can still go up, even with the performance and the anticipation and the hype of one good stock, which is insane. But it's what we saw this year. And yes, we did broaden out. Yes, we rotated out of tech and we rotated out of consumer discretionary and communication services. And we got into utilities. We got into financials. We had a healthy rotation of a lot of stuff, and we did broaden out. But when it comes back to what's left, I mean, it's like, are we in this environment of potentially higher inflation, trade war, Fed's not going to be as dovish as the market's thinking? Why would I go and think that broadening out of companies that have been outperforming are now going to lift the markets and carry the torch?
Yeah.
I don't think they will.
Yeah. I mean, that's where I'm at too, is I look at this. If you had asked me before the big rise in the 10-year and the dollar, I might have taken the broaden out idea because it looked real good.
Yeah.
But now my issue is, okay, we just heard from Powell. Powell just said, economy's running hot. We may not feel the need to cut so much. In a nutshell, I'm recapping. But if that's the new theme, again, I was saying it to Frank right before you hopped on here, that sounds like 2022. Growth was hot. Inflation was sticky, stubborn. And what performed? The big guys, the big profitable companies that don't need rate cuts to make a ton of money.
Yeah.
And not that to say that the other S&P 500 numbers or companies can't make great money, but the ones that are going to grow and make the most money, at least in a higher inflation regime that we've had like for the last few years, have been the ginormous top heavy companies. Your Nvidias, your Microsofts, those companies have been putting up excellent numbers despite inflationary pressures and interest rate pressures. So it's kind of a frustrating thing, Chris, but sometimes it's like the overthinking is dangerous. Like the frustrating thing is like, okay, in a tough environment of those things, you want to buy the mega caps. In a great environment, you still want to own the mega caps. Like they're so hard to, it's so hard to find a time when I don't want to have those as my core positioning on pullbacks. Whereas, the rest of the market.
But think of it this way. If I said I'm going to buy the mega caps, I mean, I could go into each stock right here and I could spend money on Apple at $227 a share and Amazon at $211 a share and Google at $175 a share. Look, the SPY is $600. So if I want this exposure, I mean, Tesla has been ripping. So sure, Tesla, makes its way up the ladder a little bit. It breached. I mean, we cost $1 trillion market cap, right? We're 1.01 now, even after a pretty nasty pullback. But still, it's like I can buy the haystack, and I am an RSP, and I am also in QQQE because those are cheaper. Those are fractions of the price, which I'm happy to dollar cost average into. But as far as owning, it's like, yeah, I mean, I can afford at any given time to own the SPY for at least 100 shares and work through it. And what I mean by that is, and this is like just kind of great option stuff if you're interested, but it's like, if you have the buying power to own a share, this is like my fancy version of the wheel strategy. So if I just did the SPY and I said, okay, right now I'm going to buy the SPY and I'm going to put in a sell trade. It's a sell put at 595 and it's a buy put at 594. Well, if the S&P drops, let's say 5 to 10%, the broker may assign me on that, but if I take ownership, I have my long put that as my hedge. I can take ownership very close to where price is at with the difference of maybe my credit spread risk. And so let's say we drop to 572 or 575 and I own this thing at 594. I lower my cost basis down to 575. Nick, within probably 30 to 60 days, I could drill this cost down by another $10, maybe more. And what happens if all of a sudden over a 1 or 2 month period, my break even on the S&P is 555 off of these real-time highs or all-time highs? Let's say that I do that. I would own this at a 7% discount. Now, I know that's not going to be like, well, is that it? That's the bottom. I know that may not be the bottom. Maybe we have a 10, 15, 20% pullback and I'm deep underwater, but I am confident that I can still lower and lower and lower, and I can ultimately find something to gain.
Yeah.
But it takes buying power, and I'm, I don't do thousands of shares of the SPY. I do like 100 at a time, because if I can flip the SPY for $5 to $10, I can make $500 to $1,000, and I don't have to own it for more than maybe a couple weeks or a couple months, period.
Yep.
So
keeping it simple. And again, keeping some dry powder is never a bad idea. I have.
What's your percentage, by the way? What's your percentage of account dry powder?
Right now,
I'm just under 50% right now.
Let me check
Okay.
what I've got. I'm
at like 43, 44% dry powder right now.
Okay, you're much more dry powder than me. I'm at about 10%, which gives me something to work with. But also, we have different ways of approaching this. Like for me, I'm in trades. Although this is not dry powder, I'm in a Bitcoin trade. I suddenly will have dry powder in the account if we take out these lows, because I've got trailing stops. So even though it's not dry powder per se, like a cash in the account, with trailing stops, I've got moments in time where if we start to see a big sell-off, I will raise cash in those times. And if played correctly, hopefully dry powder, and then the market continues to go down, I can get some better pricing. I've also got a stop on the NASDAQ. If this thing swings back here, if we see a bit of a corrective move on the NASDAQ, I'm comfortable staying in longs and seeing some of this post-Trump rally pull back. But I get a little uncomfortable if we start breaking these this previous all-time high. If that breaks, I'm just going to take profit on the move, reevaluate. Might come back down, might see a full reversal of that. In which case, again, I would have some dry powder from that stop trailed. So got some cash in the account. I've also got some stops that are put in place to, realize some gains and reset.
Yep. I wish I would have bought something on the MNQ. Let me see. I'm going to see how cheap it is right now. I'm going to look at maybe doing a hedge on MNQ. That's a micro futures on the NASDAQ. So if I go out to
buying some out of the money puts.
Yeah, I mean, I might go at the money if it's cheap enough, like it did on MES. I just think there's a lot more volatility potential here, where off the highs, I mean, I feel like I'm missing it a little bit because we're already down like 1%. But again, if we backfill some of this election, maybe through, I can go out to the end of the year. If I were to buy it at the money, that's going to cost me about $900. Ugh, I don't like that at all. All right, so 21,250. Let me check the price here. So we're at 2,100. I've got an at the money at 21,250. If I wanted to set, I'm just trying to cut this in half. I mean, this is essentially a hedge. I don't mind doing hedges from like $250 to $500 a piece. In order to do that, I'm going to have to sell something against this. So 21,250. Let me see what this price would be. So let me go percentage wise. About 600 points lower. Okay, that does it. So 250 down to 20,600. I could do that. So I could buy and sell. Cost me $400 to make $800. I don't love that. 460. This is better. That's a lot better. I could risk 468 to make 1,000. I could risk 500 to make 1,100. It's not a bad play. Dang it. I think it's just like an end of year hedge. It might be a necessary evil, but if we have if we have a 3, 4, 5% correction, this pays me, and it just helps me weather the storm a little bit, and I can reduce the size of these drawdowns. I get it back where it's like I'm flat on everything. Those hedges end up paying a couple $1,000, and that ends up going to my bottom line anyway. But $500 is not bad. I think I'm going to take this trade. Let me see if I go one strike out. So 465 risk for 1100 gain. I'm not going to hold this to expiration. So basically I'm looking at trying to make as close to like 800, 900, $1,000 if I can. I'm giving it some wiggle room there. I don't know. I'm debating. It's only $500 of buying power.
Yep.
So let me see.
I'm checking on.
I'm going to take it, dude. I think I don't know. I got to take it. I got to throw a little something out there, see if it's going to protect me. So,
yep.
All right, I'm in.
And by the way, I'll just mention this for everybody who's listening. If what Chris is discussing is he's in the moment doing his thing. If you would like some explanations for what Chris is doing, he went in depth on it on our webinar event for 2025, talking about keeping a consistent hedge to his account. Essentially, what you can look up he's doing is he's buying puts out of the money and also selling puts as well to offset a little bit of the premium that you pay. Basically, he's putting on bearish bets as partial hedges to bullish positions that he's got. I know it sounds complicated. It really is not as complicated as it sounds, but it's a practical way to, protect your downside risk if you're long stocks. I mean, if you think about it, if your portfolio, if you had $10,000, $100,000, $1 million of stocks in your account, if the market starts to crash, the idea is if you buy some insurance in your account, essentially in the form of buying puts, you can cap some of your, or at least offset some of your downside risk. I'm looking at gold here right now, guys, and we've got 25.67 trading on gold. I'm watching to see how this candle closes today. Bit of a pin bar rejection off of this area. Chris was talking about this too earlier. I'm in the same camp. I'd like to see gold continue to go down a little bit. Maybe I could scoop some up if I feel like we're starting to get a real pullback on gold. We're getting pretty close to a 10% pullback. I mean, at 10, 15% pullback in the price of gold, I start getting pretty interested. I like this area here from not necessarily a short-term momentum trade play, but from a longer term, I might even play the gold miners. I could maybe sell some puts on GDX, GDXJ, things like that. Might start coming into my field of vision, if you will, on the gold side of things. But gold price has come down quite a bit following the election. Unfortunately, in this world, I don't know that we're going to just have perfect rainbows and peace for the next couple of years. And gold is a bit of a hedge to that. Gold typically goes up on big uncertainty about political events and geopolitics and everything. Also, if you're a regular stream viewer, I do want to just mention, I haven't mentioned it in a bit here, the Black Friday sale is currently alive and well. If you guys want to get the trades being sent by myself as well as Chris, we have all of that inside of the Discord, currently 40% off. You can get access to the Edge Finder, the brand new stock box, our software tools here that allow traders to scan market data very quickly and find trading ideas from that data. And of course, also, if you want to get the coaching webinars that Chris and I are doing inside of the group, the trade alerts that we're sharing, you can see every trade that we're taking in full detail, breakdowns, analysis, all that. All of it is currently 40% off right now. It's our biggest discount that we do all year long. And if you'd like the promo code discount, the details, etc., click this link here. You can speak directly to a member of our support team who can get you some information about the Black Friday discount and how long that lasts. You can also pay with crypto, do payment plans if you want some information, etc. Just speak to a member of our team. They'll help you out. Also, we just broke our record, everybody, for the longest ever A1 trading stream. That is awesome. We're currently sitting at 7 hours and 21 minutes. That is a
impressive.
long stream.
That's awesome.
Chris, we could go another 7 hours, right?
For sure, dude. What I got to do today? I had no internet yesterday. It's like, I'm back, baby. I'm back. I got internet all day.
Well, we just got to double up to make up for yesterday. That's all.
That's it. Okay, I just posted the MNQ trade in my Pulver alerts. It is a hedge. All right, it is a portfolio hedge. I'm maxed out around $1,100. If price drops aggressively, then realistically I can probably make $800 or $900 of the max $1,100, which is fine. So that would give me that would basically allow me to hedge, Nick, about like $8,000 or $9,000 of the portfolio for a risk of around $3,000 or $4,000.
Yeah.
So it's fair. If it doesn't work, it's a fraction of 1% where the whole portfolio goes up. I mean, again, some traders might look at this and it's like, well, that's crazy, just a waste of money. It is a waste of money until you need it. And it's funny is I did a back test on basically a black swan out of the money put. So I just went out like 40, like I did like 35 and 45 and 60-day hedges. All I did is I put in like a 1 delta long SPY put, and I did it every day. Or I'm sorry, every like 30 to 45 to 60 days, I tested it. Over an 11-year period, you had 12 winners. But the
Interesting.
12 winners were like 1,000% gains.
Yeah,
They were
yeah.
huge. And so did you make money on the net position? No, you actually lost money over the course of 11 years. But when you did make money, you made so much of it that it would have helped offset. So think about this. This is just a way to kind of think about the hedging as a necessary evil. So let's say that the overall portfolio, just with the market. Okay, let's walk through this together, Nick. So 2009, we bottomed. 2010, 11, 12, 13, we finally got to all-time highs. 2014, 15, we ran up. 15, 16, we went sideways. 16 to 17, we broke out, had that melt up in 2017. 2018, vol event, ripped up to the highs. Vol event ripped up here, went to lower lows and higher highs. 2019, melt up into 2020. COVID crash, 2020 into 2021, melt up to all-time highs. 2021, pull back into the bear market here, and then 2023 and 2024, outside of a little hiccup in April and August, here's where we're at. This is what the market looks like. It's not a straight line. So my point is, if every 30 or 45 or 60 days I just had a hedge on, I can promise you that these hedges are going to be worth, they're going to be worth a ton in, let's say, that 20% correction, that 20% correction, that 30 to 40% correction, that 25 to 35% correction. So yeah, I mean, 4 or 5 times in 11 years, it's worth having, but the other times it's a waste. But that's the thing, is you never know. You never know.
Well, and also, even though those were some very volatile periods within that, that's still an incredible stretch in the stock market. Let's say you don't get such a great stretch for the next 10, maybe employing that actually could put you positive, or at the very least, significantly outperform the stock market simply because you have some protection in play that covers your downside a little bit.
Yeah. Well, let's just use a simple number. If I have a $100,000 portfolio, just to make it simple, $100,000 portfolio that when I'm in a drawdown, I have a hedge that pays me, 10% of the time. But that percentage is, let's say for that $100,000, I'm hedged with gains of like $4,000 to $5,000. So even though I'm down, it's like longer term, yeah, the $100,000 should conceivably go higher because the market does go higher. And every time that we recover, we get all of our profits back and then some. And so those hedges that pay $2,000, $3,000, $4,000, that actually just help beef up your bottom line. So realistically, a hedge can truly help add, let's say, 2 to 3% a year. If you need it, it can help add an extra 2 to 3% a year. But to do that, you just have to be consistent. I mean, that is the hardest part, I will say. It is frustrating to feel like I'm wasting money on hedges, but when they pay out and I can get like a 2 to 3% entire portfolio hedge, it's worth it, because I know that those 2 to 3% I can recover later, and that it actually just beefs up my bottom line as a net result. So it sucks. And the difference is it's just trying to keep my drawdowns really tight and risk-adjusted returns really tight. That's all it is.
Another example, a similar concept, is basically, keeping cash on the side. It feels very silly when the market's ripping up, and then someday you actually have funds to go shopping when the market sells off. It's like, oh, I'm vindicated for all these this time and agony that I've waited for an opportunity. So,
and this is another thing on the cash thing. Do you do this in your portfolio at all? Do you ever trade BIL?
Is that one of those,
it's a T-bill.
Yeah,
it's 1 to 3 month T-bills. It rotates. It is super liquid. You can get in for pretty much like 1 cent up or down with the bid mid ask. I see a lot of managers that will have cash in BIL. The reason I don't do it more heavily is because typically I'm looking to deploy this cash. I'm looking to trade this cash with options, and also my option buying power to my stock buying power, I try to keep them the same. Even though I have portfolio margin accounts here and I can obviously own more stock, I don't like to borrow and actually own stock on margin. There's literally one time in my career that I did that, and that was 2020, 2021. Because once we started to have a 10-year buying spree, we had a discount across the entire market over that COVID stretch. I bought everything, and I just doubled my margin, where I'm like, okay, I've got a $100,000 account. I'm going to buy like I've got a $200,000 account. and I bought everything I possibly could, and
Yeah.
it stayed ahead of the margin. But I mean, it is pretty expensive, man. I mean, I know traders that are trading on margin and they're paying, 8, 9, 10% a month on that margin. Like, that's a lot to overcome.
Very
If you're not
expensive, yeah.
crushing it right now, that is a lot to overcome, which is why people are silly by trading like these 2x and 3x leverage ETFs, and they're trying to do
Yep.
this in Bitcoin. It's like
You're playing musical chairs.
you're just trying to stay ahead of something that's unfair. If you're paying something back at 10%, that's unfair. Okay.
Yeah.
One more
No,
question for you,
absolutely.
Nick.
Yep.
Have you heard of yield farming?
Yield farming?
Yield farming
Is this a crypto thing?
is a crypto thing. I
I've
don't
heard of it.
understand it. I don't understand it.
Okay, yeah, no,
Just wanna
I
ask.
know. I thought what you meant was like yield trading in general, which is something we both do all the time, like
Right.
dividends.
No.
option
Yield
selling.
farming. This is
Yield
like, it's
farming,
basically
I've
like you kind of
heard of
act
it.
like a bank, and you're
Yeah.
providing liquidity to these certain, brokers. And dude, it just sounds like, here, I'll throw a
It
number at you.
sounds
Okay.
Ponzi-ish. Is it
Okay.
Ponzi-ish?
That's what it sounds like to me. That's why I'm just going to
Okay.
share this objectively and just tell me, because if it smells like shit, it usually is. And okay, so I had this conversation late last night, and it was, hey man, this guy does 8% a week.
Okay.
Cool.
Cut
Show
it
me.
there. It's
Show
over.
me.
That's a scam.
Right. And it's so 8% a week, and it's just like, look, man, I work my butt off to grind for 20, 25, 30% in real gains for the year.
Well, why aren't you yield farming, Chris?
That's my point. It's
That's
just
what
like,
the rest of us are
that's
doing. We're
literally what I
just
said
yield
last night. I'm just like,
farming.
then what am I doing? What am I doing if I could just do this? It's like, it doesn't make any sense to me how this is real and
That is
sustainable.
literally Ponzi scheme
Okay.
setup right there. I don't know anything about yield farming, but that's just so you guys know, without Chris explaining the rest of it to me, that's how you know something is a Ponzi scheme, is when it's just easy handout money, and that
Doesn't
doesn't make any
sound too
sense.
good to be true.
Where's the money coming from?
Yeah. It's coming
What-
from people pulling money together. That's where it's coming from. That's why the first thing I asked was, where's the stake at? Where are these blocks? What are you building? Who holds this? It's like, dude, it's so beyond me. It's like, I kind of want to explore it just to see, like, where is legitimacy? But it is like so dark and gray, and it's certainly not regulated. It's just like, I can't imagine this is sustainable in any way, shape, or form.
Isn't it like staking something and staking it again and staking it again, or some complex concept of you're doing something with your crypto and lending it out, and
It's basically, yeah, it's like a stake in a lending situation. And again, I don't mean to talk about it like uneducated, and I'm not going to sit here and
yeah, no,
I'm not going to talk
it
about it
just
like I know what the
sounds
hell it is. I'm just
sketchy.
saying that the numbers alone make me really question it. The numbers alone. It's like, if
Yeah.
somebody told me
No, the
I do
numbers by
8% a
itself.
week, I'm just like, okay, so you're loaded then, right? Like you're independently wealthy and you're retired. It's like, no, I have like $5,000 that I'm trading. Like, I that's what I don't understand. It's like,
Yeah.
and I hear like, well, you got to go from this to this to this, and it's like, there's this whole thing of like jumping from one to the next. And again, dude, I'm interested in learning about it. I think I have the ability to find something, but it's like, certainly not something I'm doing, and there's no way I put like client money on the line. It's just a conversation I had late last night, and I was
Ponzi
curious.
schemes are as old as the human race itself. There's always this idea that this time it's different, right? It's this concept of so-and-so has this grand new idea that can generate X amount of money in this period of time. And typically those things work well when everybody's sort of believing it. For example, a lot of crypto scams happened when Bitcoin was going straight up and the whole crypto market was up every day. There was a lot of those sort of Ponzi things that were working just fine. But when a card gets pulled from the house of cards at some point, it all tumbles and something breaks. And again, I don't know anything about yield farming, and Chris and I are both on the same page here. The point is, we've done this for a long time. Chris and I have watched a million Ponzi schemes and scams bypass us doing this for as many years as we have. When you hear something like that and you start to defend it, just be careful. It's most likely a scam.
Yeah, I mean, I'm looking at the comments, and some people have an opinion on it. You're actually providing a service. Uniswap's been doing this for a decade. It's like, cool. I just don't understand it. I'm just openly talking about it. Like, I'd like to learn more. I'm not interested in doing it at all because I don't have any real example of like, look, man, I've got millions of dollars that I look after. This would make me so uncomfortable period. Because
Yeah,
number one, I hear a number like that of 8% a week, and actually it's more than that. The guy just keeps 8%. Oh, okay. I don't get it, you know. So anyway, I'm not pretending like it's a bad thing. I just think it sounds too good to be true, and I'm just trying to flush it out and figure out like where's this coming from and how does it fail? Like this can't be sustainable at some point. And I don't know, but again, maybe I'll eat crow and I'm like, oh man, Nick,
Well,
I looked at yield farming and it's legit, dude. I mean, I don't know, maybe.
yeah. Well, the thing is that we just need to say is, okay, if it's 8% a week, okay, that's fine. However, if you can't show me the very high risk that has to come with,
yeah,
then the problem is there. If they're telling you 8% per week and no risk, that is absolutely nonsense. If you tell me we're doing 8% per week, this thing could tumble at any moment, then I'm like, okay, you're at least there's a risk that's in. What most people in Ponzi schemes don't realize is the tremendous risk that they're taking. They don't realize there's a giant risk, right? So that's the thing is when you hear about these things, they are not necessarily scams if they are also transparently very high risk. But if they are not transparently high risk or claiming to be low risk or claiming no risk, 100% not right. That's not
And
how the world
maybe
works.
it's popped up more in conversation and popularity because what's Bitcoin done? Gone up.
Exactly.
So it's like while it's getting good and while this is easy and while it does work and maybe the services do work, my concern is that this goes until it bursts or goes until it doesn't, or you get stuck in the this service or this project that all of a sudden blows up and you didn't get your money out in time. It's like that's my biggest concern is like, okay, so if I threw $1,000 at something like this and it was generating $80 a week, dude, it's like, sure. So build $1,000 account up to $5,000, $10,000. It sounds great, but I would be taking that $10,000, putting it back to 1,000 and just let the thing go with house money. Maybe that's the one way I'd even consider doing it. But it just, again, I want to educate myself. I will, do my due diligence and I'll dig a little bit deeper, but it's hard for me to deviate in something that just sounds so ridiculous, like where it's like the most brilliant people in the world, Jim Simons with Renaissance Fund, and he did 66% a year, and he is like the greatest hedge fund manager ever in the world. He only let employees and founders of the company be in his fund, and it was like a 40% performance fee. And they still did like 66% a year. Like it was insane what they did. So those are the type of numbers I'm like, yeah, man, that's a grind. But you're talking about MIT mathematicians, professors.
A literal math genius.
Yes. Yep.
And he did 66%. Anybody who in this audience is choosing not to listen to this is insane. 66% by a genius per year on average. If you think it's easy to get more than that, delusion might be your middle name. I'm not trying to be harsh or rude, but I am genuinely trying to make you think a second time before you, especially with crypto back on the rise. It's one of the biggest concerns is for new people. Crypto's rise the last time around was devastating because a lot of people got caught up in a lot of scams and got ripped off. And the NFT stuff is not necessarily a scam per se, but there was a lot of crypto scams that went crazy last time around. So everybody who's listening here, we got 766 people. We need to wrap up the show here and get going. But if we leave you with one thing, whether you're doing trading, Forex, options, stocks, if you're looking at crypto, just watch yourself. And anything that seems too good to be true in financial markets almost always is. Stuff is hard. Stuff is no easy way to make money. So, Chris, thank you for all your time on the show today. It was an awesome one. We did 7.5 hours between all the different guests that came on throughout the day. There's their confetti on the screen.
Love that confetti.
Yeah, that's awesome. 770 people here. Thank you guys for hanging out with us. Chris, thank you for coming on, and we'll see you back tomorrow.
All right. Thanks, Nick. Thanks, everybody. Great marathon today. See ya.